Good morning, everybody. Welcome to Tuesday of the last day of June, first day of July tomorrow. How is everybody doing? What's up, Will? How are you, dude?
What's up, bruh? Nothing much,
Bruh.
mate. All good. All gravy, baby. I didn't do a gym session today because I'm kickboxing later, so I had a nice little lay-in till. I mean, still early, but a nice little lay-in until like an hour after I usually get up. So that was quite nice. Got myself an espresso because I've decided espresso in the morning is how I'm going to start my day because I'm fasting, and Ewan has had a go at me for breaking my fast with milk. So yeah, it's good. It's good.
You broke your fast by adding milk.
So I'll fast until lunchtime and then break my fast with my lunch. Although I usually have honey and milk. I'll have a cappuccino in the morning, but because I add honey and milk, it breaks my fast. So he said you're breaking your fast and actually, then going hungry until lunch, and you're not actually properly fasting. So I was like, So now it's an espresso.
So wait a minute. So breaking your fast is doing what? Is consuming something with nutritional value?
Yeah, pretty much. Just
Does
calories.
coffee not have any nutritional value?
No, well, like calories and stuff like that. Like what gets your digestive system going, and apparently black coffee. You can drink black coffee on a fast.
Huh. Okay. Interesting.
Yeah.
Interesting.
Yeah.
Is it just me, or is your camera very pixelated?
It's probably just you. I can't see it. I'm literally opening up my second tab now. I've literally only got one tab open. Although I did set my computer up this morning to find out that my Wi-Fi crashed halfway through the night, meaning I'm going through a spell of bad Wi-Fi. So
No, it's you. It's definitely you. I'm having a look at the live stream now, and I can
I've
see
just opened it up now. Yeah,
like your outline, like like you have like little blocks, like here by your shirt and your nose, and now your hand.
That's really weird, isn't it?
It looks funny though. Looks good. Anyway,
dude, that's really annoying. Yeah, I don't know what's
dude.
going on. I don't know what's going on with my Wi-Fi at the moment, mate. It's doing my head in.
Yeah, it's one of those things we've been struggling with, like internet issues since last week. I have had almost zero download speed. Like it's really annoying. It's one of those things that unfortunately we're gonna have to live with for a little while. But here we are. At least, we have another day, another dollar to potentially be made. So I'm going to say hello to everybody in chat while you potentially get ready to share a screen, my friend.
I'm running a
First
test.
Okay. First one in today is Henry, all the way from Ausland, Australia. Good evening. Good morning from my side to you. It's 10 o'clock here by me right now. Should be 9 o'clock for Will.
Tis indeed.
Welcome. Welcome. We've got MGN Thalantir. Greetings. Good morning to you, MGN. We've got the real GCC in saying hola. Good morning to you. We've got Lofu. Is it Lofu? Lofu. Hey, good morning to you.
Hey, yo, with a cat hunting.
We've got Leo. Good morning. Hello, everyone. We've got Martin I in. Good morning. Martin, have you received your account? I believe that everybody should have received their account by today. If not, send me a message so that I can follow up for you guys. So this is for everybody that got their... Oh, Azure Trade saying, good morning, guys. I received my account thanks to the 5ers. Awesome. Happy to hear that. So that means, Martin, you should have received yours as well. Good day, peeps, from Shane. Kavish also says, awesome. Great. That's really good news. I'm happy that everybody's received their accounts. Shane Joyce saying, good day, peeps.
Yo. Hey, mate.
Good day, mate. Obino is saying, good morning, guys. Good to be back. Yes, it is great to be back. It is a Tuesday. Yesterday was a bit of a frustrating day during the London session. for my trading at least, but it wasn't a trade for quite a while, and the trade just teased my take profit 2 point, and then eventually started pushing down, went into drawdown and started picking up again, and I ended up closing slightly lower than a 1-to-1 trade for that one. A little bit annoying.
Nice, man. That's pretty cool. I ended up closing 50% to stop loss. It just didn't go my way, and I saw the break and close under, and I thought I'm gonna close it here.
Yeah, it was one of those weird days. Ravin in, good morning to you. Martin saying, yeah, account received. Thank you. Awesome. Very good. Real GC, Will on dial up. Will is pixelated. Usam, good morning. If you break your fast with your lunch, that's breakfast.
It is still breakfast. Yep, that is true. I just have my breakfast for lunch. That is very true.
MGN saying 1995 called. They want their graphics back. Yep.
Yeah, true that.
Yeah, you do look like the original Tomb Raider. Anyway,
dude, I'm even seeing on my side that I'm slightly lagging.
Yeah, I had the same issue the whole of last week where I can see the live stream on YouTube is looking good, but I myself am like,
exactly.
Really we've got Daniel Bartle in. Good morning to you. We've got Johan or John. Sorry, not Johan. John. Good morning to you. We've got Giovanni saying buongiorno. Good morning to you,
Giovanni.
And then Usam saying, I blew my account in the London session yesterday. It wasn't bad, but my reaction was horrid. And I couldn't save the account. I had a better opportunity in New York had I waited. Dang it.
That's a really interesting. I mean, it's not yes and no. It's why did you blow your account yesterday due to the London session? Because yes, had you have waited until New York, you would have had a better entry. But if you still think that the trade that you took was valid, then and you still blew the account, maybe you're in like, I don't know, maybe you've got 1% equity before you actually blow the account. Maybe you're like 91k flat. And then you go take a trade, you blow the account. It's still a good trade. Dude, that's not that bad. If, however, you took a trade, it was a crap setup, you went into drawdown, you scaled in, you maxed out, and you lost the daily drawdown, or you hit that daily drawdown limit because you're an impatient muppet, then yeah, fair. That I'd be pretty good too. So let us know, like, give us a bit of context on why you actually blew it in London session, because I've been in a similar situation where I thought, there's a really nice trade setup here. I've taken the trade, it's hit a loss. And then New York has come and I've gone, there's a really nice trade setup here, but I've already hit the loss and thought I'm done for the day. And I'm like, if only I was patient. It's like, well, actually, to be fair, hang on, we'll give yourself some credit because that was still a good trade. It just hit a stop loss. It's just a bit like yesterday's trading. Yesterday's trade on NAS was actually pretty good. It was just one of those things where it just hit a stop loss. So Usam give us a big unlucky on that one, man. You know, that sucks. I fully understand. But give us a bit of context. Why did you lose the account? Morning, London and Protea boy. Cowish. Wagwan G. Yes, Will is pixelated. It's watchable. Oh, that's okay then. I'm still watchable at least.
Give me a second, mate. I'm just quickly replying to email here.
I don't get it. Can you believe my laptop is full of ants? Suddenly out of blue. What do you mean? I don't get it. Took a horrible setup, man, and revenge traded it without proper rationale. There it is. Okay. Yeah, there it is. Okay. I'll tell you what. I'll bring this up anyway because I've already clicked it now. But I'll go back to the original comment, Usam. I used to love that game. In recent years, I have played a lot of the new Elite Dangerous. Anyway, let's go back to this. So I took a horrible setup. So first things first. Yes, like Rich said, patience. When it comes, and I've got a technique when it comes to following rules. So make sure you're actually following your rules, and if you're not following your rules on that setup, don't enter. But even if you are following rules before that you actually open the trade, ask yourself why. Because if you've ticked all your rules and you ask yourself why and you can't answer it, sometimes it's even a case of you've thought that you're following your rules, but you're not. You're actually just emotionally trading. It's like that last barrier of opportunity to question the trade on whether you truly believe in it. Will and Rich, I entered way at the top when price was wicking. Didn't wait for a clean candle close, and it was impatient. It was an impatient entry. Hang on, let me scroll back up. There we go. Size was 20 lots on NQ, which was huge. Depends on your stop loss size, but I'm assuming your stop loss size was a decent size and you should have been more around the 4 or 5 lot instead of the 20. So, yeah, no, that is.
Wait a minute. 20 lots. What account size are you trading? 100K? Or what account size was that?
I'm assuming 100K, 100K, because even 100K is quite big on NAS. You'd have to have a pretty tight stop.
Or was it a futures account and you were in 20 contracts?
If that's the case, then god damn me, that's even bigger again on the futures. Yeah. Like, geez. But yeah, Usam, look, man, that honestly, that sucks. It happens to all of us. It's happened to me before. I can guarantee it's happened to Rich before. It's happened to every single trader out there. The biggest thing is that you take a lesson away from this, Usam. You've noted it down. You've journaled it. You've blown an account. There's your learning curve. Now it's time to analyze why you blew the account and what actually happened to leading up to that stage. What happened to leading up to the stage? What happened during the actual trade? And why did you take it? If you can answer yourself honestly on those, and Usam, I'll tell you what, mate, I know you said what you have done, but if you tell me now in chat why you've done it, it'll show that you've actually gone back, you've looked through, you've given yourself a bit of an analysis. 100K high stakes. Yeah, okay, that's fair. That sounds about right. That makes sense.
Yeah.
Yeah, so that's
20 lots makes sense.
Yeah, exactly. Even then, it's still big. You'd have to have a tight stop loss, but even then, it's that's some big size. You know, you gotta someone trading.
That's some skin, mate.
Yeah, someone trading with 20, 30 lots on anything, whether it's indices, commodities, FX. That's all. You got to know what you're doing. And what I mean by knowing what you're doing is you got to understand fully what is going on with your stop loss sizings and your position sizing, because 20 lots is a lot. And if you get the stop loss placement wrong, 20 lots can put you in a lot of dangerous waters. There's shark infested waters while you're bleeding out. So be very, very careful. But yeah, Usam, tell me why you actually did it. Tell me what you've learned from this experience, and tell me what you're going to do moving forward to be a better trader. If you can put that in chat, you don't have to put it in chat. You can go message me on WhatsApp. My WhatsApp is here. So you can, I said WhatsApp, I meant my Instagram. You can message me on Instagram or go into the Discord. I am in the Discord as well. So either one.
I'm into the Discord.
Yeah,
I'm into it.
I'm into that Discord, big time.
I'm into that Discord.
Yeah, big up the Discord. Yeah. So if you don't want to put it into the chat room, feel free to direct message me. But that is my challenge for you today. Before you even consider buying another account or placing another trade, I want you to go, jot down exactly what's happened there and do that challenge. Unbiased Trader, hello there. How is you? How's you doing? Good day, everyone. Every day I am waiting for this live to start. I learn a lot from you every day. Game Fun 166, that is the best comment I have seen, because you're able to learn from us, not just copy our trading, which is absolutely fantastic. Big up you, my friend. Hopefully you're going to come on leaps and bounds. Usam, after taking that loss, my daily loss was 60% gone, and all I needed to do was wait for New York to open or a better opportunity. However, trying my best to make back the losses were costly. Yeah, dude. Honestly, it's one of the biggest reasons why traders fail. Honestly, it's what simply is one of the biggest reasons is trying to earn back instead of following a process. And when you start understanding why you're doing it and why you shouldn't be doing it, and when you start understanding truly what you need to do to be better, you start actually grasping why not following a process is just stupid. You start fully understanding why revenge trading is so easy to avoid and how stupid you were being before. But before you actually understand all that, it's super difficult not to. It's so
Yeah.
difficult not to, or so difficult to leave that or get off that treadmill of revenge trading, over trading, psychological spirals. You know, it's very hard to leave that sort of bad habit. But once you do leave it, you look back and you're like, ugh, oh my God, why was I doing that? So,
It's 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 the thing that's the driving force behind you wanting to change a habit is when you look at it after the fact and you're like, ugh, why did I do this? I don't like that. I don't like that.
yeah,
You have to go through the process once or twice where something makes you feel like, ooh, no, I don't like
yeah,
this.
no,
Why? Ooh, no. This is not cool. To really get you into the mindset of saying, all right, a change is needed. And then you start the process of getting some change. So,
yeah, exactly. How bad do you want it as well? Yeah, that's another one is how bad do you want it? Because look, if you're trying to trade for a career and you're trying to take it genuinely seriously and you're not just trying to be out there to impress your friends down at the pub, you know, or you're not doing it for a hobby, you'll change. And I this sounds a bit controversial and sometimes people hate listening to this, but if you want it bad enough, you will change. And yes, habits are difficult to change, and yes, habits are difficult to actually identify for a start, and especially when it comes to emotions. Emotions are super difficult to put your finger on because, again, it's something, it's not physical. It's something some of us truly don't even understand still. So, if you are trying to change and trying to do better and put in better processes, when you've got access to people like myself, Rich, and all the other hosts here at the 5ers, you know, it almost makes it impossible not to change. And the reason I say that is not only that you've got Rich Wells as the performance coach who does calls in the Discord. He also comes on and does like live sessions here on the YouTube. He's also got a course over on the website, so you can go check that out. There's almost no excuse because, as well as all that value, myself included, especially myself, and the reason I say especially myself is because psychology and process is something that I'm so passionate about. I travel around the world speaking at events about it, but including with Rich here and especially with all the other hosts, we give actionable steps, we give value on stream. And, you know, people will pay a lot of money to hear someone say half the value that we give on this stream. So if you're able to just take a pinch of the value that we drop on stream every single day and genuinely put actionable steps in and genuinely follow what we try and say, this is what we do, this would be our advice if we were going through this struggle. If you genuinely do that, you're going to find it very difficult not to improve.
nice. Let's get straight into the charts, I think. It has been long enough for us now already. I think people are like Really edging to see some market stuff. There was a question here from Game Fan, a request saying, may you please once practice using a higher time frame for analyzing gold for now. I'm facing difficulties with it. Please do a sample starting from 1 day to 5 minutes if possible for you. Game Fan, we will do exactly that. So what we're going to do is myself and Will are going to give both our viewpoints on gold. And I will start on the daily. This is the daily chart. I've removed all of the drawings from yesterday so we can do a clean play out of gold. How about that? All right.
Sounds gravy.
So, if you're looking at the daily time frame, you will notice over a certain period of time we've had quite the downtrend. You can clearly see it's a downtrend because if you had a high swing point and a low swing point, you are making lower highs in relation and you're making lower lows in relation to the previous lows and highs. Right. So you are clearly making your way lower with every swing point. Very much a bearish trend on the daily time frame. Great. So when you look at the daily time frame, you are looking specifically for areas where you had swings, reversals. So in this case, we had a bullish movement here during this segment, which eventually had a retracement, which is this segment here. We retraced in that little box. And then eventually we swung again to continue pushing bullish. So this was the last time price tried to push bearishly after this very bullish price action that we had. Now this was from the 25th of August until about the 21st of October last year, 2025. So notice that we had this consolidative range, which then eventually got broken and then volumetrically started picking up over weeks. All right. Then eventually we slowed, or we had a high point, which was the all-time high at that time. And then we started pushing lower from there, taking some sells. Fair. All right. So price then eventually reached a point where it started to reverse, meaning that no longer were the sellers in control. We slowed down significantly and then we started picking up. So what you're looking for on the daily time frame is you're looking for something like this. You're looking for these areas where we had swing points that were opposite to the direction of the chart, opposite to the direction of the normal move. You had a bullish movement here. You're looking for a swing point that was in a bearish direction. You're looking for a bullish movement here, or you're looking at a bullish movement. You're looking for a bearish retracement. Okay, so you're looking for these swing points. And once you have them, you look towards the right. So you have one established right here, which was this last time where it struggled. You're looking for another one over here as an example. And then what you look for is you look for whenever we get to that zone, whether or not we have a similar reaction to what we had the previous time. That is what you do on the daily. You find the direction and you look for swing points in the opposite direction of what you were going in general. So the same idea happens here. You have a high swing, and then instead of making a new high, you are making a lower high and you start pushing lower. So you look for every single time that you had one of these little swings, and you look for areas that potentially can come back to this area. You're looking for reactions off of those zones. All right, so that's on the daily. Then when you go down to the 4 hourly, you will notice, all right, so I have these swing points that I've marked up on the daily. Now you're going down to the 4 hourly, and on the 4 hourly, you're trying to see if you can have intraday price action or from one session into another session. Generally, sessions are roughly 6 hours long, each session. So an Asia session is about 6 hours, London session is about 6 hours, New York is about 6 hours. Not exactly, but you get the idea. There's roughly 6 hours. So a 4 hour chart is going to cut across multiple sessions. So on the 4 hour, you're trying to see the general trend of the day on that day. all right, is the 4 hour. So on the 4 hour, we're seeing, all right, so previously when we had that swing on the daily, this is what it looked like on the 4 hour chart on the day that we came back to that zone and started reacting off of it. So you want to then zoom in on that area and say, all right, so on gold, specifically on that day, we broke through that zone, but on the 4 hour, we didn't close that strong. We closed below, but we had this massive wick. What was followed up by that? An attempt to push higher, and then an attempt to push lower that failed, that eventually led to us breaking that recent high swing. So if this was the high and this was a low, we created a higher low, and then eventually a higher high as well. So this is what you're looking for. You're looking for that intraday changes on the 4 hour. You're looking for areas where you've rejected. You're looking for movements away from the areas that you marked up on the higher time frame. You can find lower time frame swing points as well on the 4 hour as well. Even though you had a bearish movement here, you had a bullish retracement, which becomes a swing point. So this was the last time price tried to push bullishly before continuing with the original trend, which is now bearish. So you look for these zones, you mark them up. That was the last time. You just mark it up and see how price is going to react when it gets back to it. Same thing, and then you go down to the lower, you go down to the hourly. Same idea. You keep doing the same process and you start looking for these areas on the lower time frame that align with the higher time frame confluences. So on gold, if I just go to the daily, I'm going to remove all of the drawings once again, and then we just start on the daily. So we know already that we're in a bearish cycle right now. Very much bearish. So this area that I marked up here was the last time that we had a bullish reaction after a swing. So price tried to push lower from here, failed there, and then had a secondary attempt, and then eventually started pushing up from there. This is the last time. So we had a very close test. Actually, we can take the whole segment here. We can just take this whole segment because you have the breakout and the retest. So there's the break, there's the retest. All right. We're at that area. We had a singular reaction here. This was on Thursday the 11th. Then we had last week, Wednesday, we had this very bearish candle, which basically made a double bottom. We had a bit of a retracement, so this becomes a swing point. So we already have a swing point here in the area to test. Then yesterday we had another bearish day. And today we opened up, already swept that low of last week. So we've swept the weekly lows. And now we've had a bit of a reaction off of it. Cool. So that's on the daily. Let's go down to the 4 hourly. 4 hourly, we can see that we had an area of consolidation. It's where price struggled over multiple sessions to really break out of that zone. So we had consolidation. You take the low and basically the high of that area. You can even have that whole segment there, and realize that we eventually had a break of that consolidation. Counter trend, because we were still bearish. A break, and then an attempt to, a retest attempt that failed. The retest basically pushed us back into the zone. We wicked the opposite side, and now we're back into it. So technically, we're stuck in this range as of right now. It's a consolidative range here that was broken and then immediately came back into. Okay. The one thing that I will say, however, is that on the 4 hourly, this reaction is very nice. This is a rejection. This is a very nice rejection. We swept the lows of the previous week, swept it, and then started picking up quite a bit of volume on the 4 hour. So as of right now, on the lower time frame, gold is bullish because we had the sweep of the higher time frame low, the weekly low, 2 days prior lows as well. And now we're reacting off of that. If we go down to the hourly, you'll see there's that bullish price action over the Tokyo session after the sweep. A strong push lower from yesterday. So yesterday was very bearish as well. We continued bearishly, bearishly, bearishly. We slowed down during the New York session and then eventually broke lower, sweeping that low. Notice that this whole segment down here had a lot of wicks. There's a wick, 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 wick. no real conviction trying to push lower. So even though we swept it, there was a lot of buyers sitting here in wait on gold, ready to try and push price up again. Now, my question is whether or not we're going to have another attempt to completely satisfy all of the buyers that are sitting here, completely buy them out, or in this case, try and sell them out. We'll have to wait and see. This is a very bullish leg that we've had. What is nice is that we've already swept the previous session New York, the previous New York session high. We've already swept that. We're having a bit of reaction because remember when we were here, when we opened up, we did continue bearishly as well. And then a strong bearish reaction. But the last time we reacted bearishly was over here. So if I were to go down to the lower time frame to the 5 or whatnot, this area over here is going to be an area of interest for me. So going down to the 15 minute, we have consolidation. That is with the, that's with rollover. So we have consolidation, a breakout, reaching a higher time frame low, which is a weekly low, swept that, struggled to continue pushing lower, and then eventually started getting some buying power with quite a bit of volume here, quite a bit of a push, which then eventually led to us sweeping that consolidation above, breaking it above it, and then retesting. Now we'll see whether or not we're going to continue, considering that we still have this New York session, which is actually over there, which hasn't been swept yet. So we were very bearish. We had a strong reaction off of a higher time frame low, and then we're starting to attempt to push up. My question is whether or not this is going to be a continued movement or whether or not this is a short-term reprieve from a larger downward push, a bit of a retracement, and then a continuation lower. Right now, it is a very nice push up. Consolidating as of right now, we need to see now if it's going to have a break and continue higher to try and sweep these session highs and potentially previous day highs, or whether or not we're going to have a break and continue lower to try and retest this zone down here where we had that original bearish reaction from. So on gold right now, if you look at the lower time frame, we are consolidative. If you look at the higher time frame, we are bearish. If you look at the 4 hour to the 1 hour, we're looking bullish. We're looking like we're starting to push a little bit bullishly. So even on the lower time frame here, we're stuck in consolidation, but we had a bullish reaction already. So low, new high, higher low, higher high. So lower time frame bullish, lowest time frame in this case consolidative, and then on the higher time frames, daily and weekly, we are still bearish. What do you think, Will? What is your view on this?
I haven't got a screen share, so let me get one up. I have just realized. I was like, okay, cool. I'll do my analysis now, but then turns out I can't. Okay, now I have. Let's go. Okay, I'll tell you. Let's go up from the daily. I won't be as long as Rich, because otherwise I'm just going to be repeating everything Rich has said, because that was an absolutely bloody awesome analysis, to be fair. So what I will do, I'll just, in fact, you know what? Screw it. Let me just delete everything. Clean some of these charts up. Bugger off. Wow. Look at that. That took a while to delete as well. Damn. Okay, cool. Now that we've cleared up, in fact, can I actually just remove 259 drawings? Bosh. Wow. Oh my God. Look how naked my sidebar looks now. Okay, so like Rich said, yeah, on the daily down to the 4 hourly, we look bearish. On the hourly down to the 15, we look bullish, and then on the 15 down to the 5, we're starting to consolidate with a little bit of bullish order flow. I like to keep things mega simple, mega simple. I look at order flow and order flow only and areas of interest. So what I'm going to be doing here is strictly looking at order flow. And when it comes to order flow, a lot of people overcomplicate this. They go, "Ooh, there's a high, and then there's a low, there's a high and a low, and a high and a low and a high and a low," and they start marking out 1,001 different highs and lows, and before they know it, they're like, "Oh, wait, is this a consolidation zone?" What I mark out when I'm looking at my order flow points is, think about like the mean points, and what I mean by the mean is the average, and it's the average point of interest. And what I mean by that is trying to find areas of swing points, so swing highs, swing lows. Not really too interested in sort of, how can we put it? Not too interested in the super nitty gritty finer points, because that'll be done on the lower time frames. So when I'm I don't often go on the daily, so I'm going to see what I can find on the daily. I usually go to the 4-hour. So what I'm going to be looking for here is, you can see that we've got this trending channel up. We failed to move higher than this previous high here. Now we started pushing down. We've broken under the moving average on the 50. We've broken below this trending range here. Now that we've put in this low, we've pulled back and actually failed to break higher than this area of interest. So this here is my previous high. This here is my new low. This point here is my new high. Now, yes, again, we have got mini highs within this, but this to me is what I call garbage price action. And what I mean by that, it's not actually garbage. It's just price that I personally am not that interested in on the daily time frame. So once we've put in our swing highs, being point A, point B, point C, then we're saying, right, okay, if we draw it up, point A, point B, point C, we can now identify, let's just clear all this up a little bit, that we've got a shift in structure, just like that, a retracement or a reattempt to pull back up, a failure to break higher, and a continuation lower. So we've got a high point here, got a new low point here. Now, what's happening here is that we've actually got what I call trading range. Now, yes, I know trading ranges can be a whole different ball game when it comes to how people see them. Now, what I see as a trading range is anything in between structural high and structural low. And this is why I don't trade the daily time frame. A structural high for me is up here, and a structural low for me is down here. Everything inside is a trading range. Once we break it, which we have here, just about mind. So fantastic, we've now broken this low, creating a new lower low. So this now goes from an uptrend to a shift in momentum, shift in order flow, into a potential opportunity of a downtrend. Now what happens is we pull back into our range. There you go, my scrawly handwriting for a range. So now that we've pulled back into our range, what do we need to see? For a downtrend, or for a confirmation of shift in order flow, for a downtrend opportunity, we now need to see a break below this point here. So everything in between this, to me, is garbage price action. Everything is just, it's invalid price on the daily time frame. Yes, guys, I've just had a notification on my stream now saying your camera probably has low FPS. I do sincerely apologize because I'm actually watching myself sticking.
It's better. It's better now.
Okay.
You're a little janky, but
yeah, no, I know. Yeah.
But smooth.
Okay.
It's like you've put on your face cream. It's smooth.
Yeah, I'm no longer pixelated, but I'm janky. I tell you what, I'll take that. I'd rather that. Cool. Okay, so you'll have to put up with my super slow-mo, slightly janky, almost like I'm being dubbed face. So now that we've got consolidation here, this is beautiful price action that we can be trading on the lower time frame. But we're not on the lower time frame right now. We're on the daily time frame. So what are we looking for? We are currently in a trading range. We need to wait for price to break below this point here. Or if you want to be a little bit more risky, you can go with the bar close, not the wick. So we're going to go for it here. So here are your two different areas of interest for confirmation and shift in order flow to the downside. Now, once we've done that, then we can start saying, right, okay, we've got confirmation here. What can we look for? Those riskier traders out there that go, boom, yeah, nice, break of structure to the downside here. I'm going to look at entering in when it comes on a pullback. If so, happy days, you've got potential entry here. But because we were bullish, now we're bearish, I need to wait for pullback, confirmation, then entry criteria. So that's what I'd be looking for. So that is why I don't trade the daily time frame. Now that we've seen that and we understand that price is shifting bearish, look left. Why is price shifting bearish and where could it be heading to? Honestly, here, I'm not too interested. I don't think price has any reason to stop until it gets to at least this area here. Now, you guys know, and for those of you who are new joining here today, I don't point out points of interest. So you'll never see me go with a POI, a point of interest. I know a lot of traders love a good POI, love a good point of interest. A point of interest to me is too specific. I will mark out areas, but when it comes to my points, I will mark out highs and lows. Almost like liquidity points, I suppose. But those areas are points that I want to mark out for more specificity when it comes to maybe a stop loss or a take profit. Now, those points of interest for me are usually within an area of interest or a high or low of that area of interest. And what I mean by this is you can see this area of interest here, this consolidation zone, just like that. Now I've actually got 3 points in this. So point 1 would be the high, point 2 would be the equilibrium or the center line, and point 3 would be the low. So they are my 3 points of interest, but those points are made up of one overall area. I will never find a point of interest without an area, because an area allows me to be a little bit more specific, and price can come into an area and it gives me a lot more breathing room and time to think. So price could come down to that zone down here, or we could be looking around this area here. Now it's currently in this area here, which I've already done a little bit of analysis on the lower time frame. I like this area. Now the fact that I like this area here, I can now move onto the lower time frame where I know that price is going to start forming some beautiful price action for me on the lower time frame, because again, I've already looked at it. Now, when it comes to the 4 hour, this is what we're talking about when it comes to structural order flow. Now, structural order flow, just from going down from the daily to the 4 hour, already looks a lot smoother. Why? If we look at the order flow, we've got consolidation. Not interested in this whatsoever. What I am interested in is a break of this low. Once we get that, boom, happy days. Pull back up into this range here. Now, I don't care about anything below here, and I don't care about anything above here. Once we get that break, boom, happy days. Now we've got confirmation. Don't care about anything above here. Don't care about anything below here. Okay, so now what we can do is we can either wait for pullback, entry into an area here, continuation, or we can wait for consolidation here and then entry on the breakout. Now, you guys know that I love my breakouts on gold, so that's why I don't really care about too much what goes on internal price. I like to see consolidation, break consolidation, identify of confirmation on trend, and then enter in, and then just ride the trend down. So now that we've got that confirmation of trend to the downside, and we've got clear correlation when it comes to structural order flow, now we can start moving down the time frame and getting into the more exciting, interesting stuff, being from the 1 hour to the 5. Now, on the 1 hour, we can start seeing price is consolidating. Now that as price consolidates, it's starting to show that shift to potential bullish movements. Now, we do know that we had price looking a little bit like this prior on the daily. Then price consolidated and dropped lower. Now, on the daily and the 4-hour, we have been bearish into what I marked as 2 areas of interest. Now that we're in this area A of interest, we can start asking ourselves as we hit the 4-hour, 1-hour, 15-minute, as it starts consolidating. This is confluence to the daily area of interest, asking us, can we start shifting to the upside? So price looks like this on the daily, and price looks like this on the 1-hour and 15-minute. So, and as you can see here, we are on the 1-hour time frame. Now that we've put in this price action, we've got some consolidated price, break and close above, pull back into it. Now we're not seeing much. Again, this is still range bound for me. I'm not enjoying any of this until we get a break of this zone here, or we get a break of this high here. Now, if we get a break of this high, that will be a confirmation of shift in order flow. Why? Because at the moment, all we've done is put in a pullback. All we've done now is put in lower lows, lower low, lower high, lower low, lower high, lower low, consolidation. Yes, we've got an internal structure shift here, pullback, continuation higher, back up into a pullback. What I need now, we've pulled back into the range with a lot of conviction. Like you can see that we've really dipped deep. Now I need a structural shift above this high. Pullback, continuation. That's nice price action to me. Now, the fact that I'd have to wait ages for that to happen, can I drop down to the lower time frame and see some internal structural shifting? Now that we've got that, is there something shifting above? We have got this nice little leg up here, although we're not seeing too much. Again, we're still just pulling back. You know, we've got areas of interest that we're just pulling back into. We've got several areas now which we could pull back before continuing lower. The only saving grace we have got is we have had a very bullish impulse. Now, when it comes to a pullback, how far deep do I want to see a pullback before I actually start questioning whether this is a continuation bearish? I'd probably like to see at least 50% of this imbalance here filled, or some of you would call it a fair value gap. We get my middle line, at least 50% of that to be filled, or if I get my fib retracement on this move, I'd at least like to see my golden zone get struck. And my golden zone is just underneath the 50% retracement of that fair value gap, that imbalance. It also taps in nicely with the idea of that previous consolidation just down here. If we can get something a little bit like this, that would be absolutely golden. And then I think we could start looking at drop it down to the 5-minute time frame here. If we can get some consolidation around here, I think that would be absolutely perfect. Breakout of consolidation, there's our entry criteria for longs. If we don't get that, if we drop any lower than this zone here, then I think we're going to start heading down into this area. If we start heading down into this area, my overall bias is going to be continuing bearish momentum. That's what
nice.
I think.
Nice. Very much nice. Thank you, CC. Appreciate it.
Again, always coming out flirting with you, mate.
I don't know why.
I don't know.
It's because you haven't put a ring on it yet.
I think it, mate. I think it is. You're gonna have to enjoy him flirting with you for a little bit longer.
I mean, I am enjoying it. It's a nice feeling. Whew, it feels nice.
It's a good feeling. I know she's not calling me handsome because, you know, look at me. I already know I'm handsome, so I don't need reminding.
Yeah, I mean, tell me something I don't know.
Yeah. Yes, good morning to my darling CC. Hello there.
Hello, CC.
This is a masterclass on over-analysis, too much waffle. Dude, yeah, I fully agree with you. That's why I said it takes me 5 minutes to dive into my analysis. I know what I'm looking at within the first probably 10, 15 minutes. I never jump on the daily. I only jump on the 4-hourly once a week, and I probably spend about 2 minutes on the 1-hourly every day. The rest is done on the 15 and the 5. So yeah, 100% agree with you, but one of you guys asked for waffle. So,
Yeah.
it's not going to suit everyone. Personally, this isn't how I would analyze the markets. This was just what I would see if you put a gun to my head and say, give me a full in-depth top-down. No, I totally agree with you. I've spent years at the markets to actually allow myself to spend minutes at the markets now, or a couple of hours at the markets, instead of, over, like you said, over analysis. So that to me was over analysis. 100% agree with you. But it was hopefully helping one of you guys who did ask for that. So hopefully that helped.
Look, if you're looking for something specific, you will take any extra information. You'll be like, this is waffle. I think what you're saying makes sense. It's that you've spent a lot of time in the market already. You know what it is that you're looking for.
Yeah, exactly.
But Mr. Elvis, you need to understand as well that there's a lot of people in chat right now that don't know what they're looking for, and there's a lot of people that don't know how to do a higher time frame or even a specific analysis like that. As an example,
Yeah,
to
absolutely.
you're at that point probably where you also don't care about this. It's one of those things. But this is not a stream just for you. It's a stream
You
for
got to
pretty much
remember,
anybody.
yeah, bang on as well. And like you said, you got to remember, like, Elvis, you're probably going to enjoy us getting down and dirty with the markets, watching us place trades, watching us do maybe some scalps, some intraday trades, watching us actually, do live time analysis, which will probably take us 5, 10, 15 minutes to actually analyze, then actually potentially look at placing a trade. That to you may be exciting. Whereas to some of the other people, they may be completely fried and frazzled by what we've just done, because it's like, oh my God, why have you just rushed that analysis and placed a trade? I don't understand this. Whereas what we've just done now is, as you can see, it's already helped a few people, which is absolutely fantastic. And this is why we do it. Nope, that was really good from the both of you. Learn a lot from that. It even confirmed my trade that I'm in at the moment. CO2 Gaming, absolute legend. Thank you very much. And this gentleman here wasn't, or this particular person here, I don't know, maybe an email. This person here was actually not the person who asked for this information. So don't ever, ever be afraid to ask a question that maybe someone doesn't want, because again, be that person in class who puts their hands up and asks what is 2 plus 2. While the whole class laughs, there's going to be a couple of people in there that also doesn't know what 2 plus 2 is. So just for those of you who are asking that, it's
3,
5.
right?
No, it's 5.
Ah,
Yeah, close,
see.
close. Yeah. See, this is what I mean. People, need to know. Less waffle has given me more losses, to be honest. Exactly. Sometimes a lot of people like the waffle. Look, I love waffles. A little bit of whipped cream, some organic honey, maybe some chocolate spread if I'm being a little bit naughty. Nothing wrong with a good waffle now and then. Loafers
Yeah.
in mastery. Thank you very much. Exactly. 2 legends,
Look,
their bread and butter.
let's be honest here. The analysis can be as ugly and as unappetizing and as weird and wonderful as you want it to be. But ultimately, when it comes to taking that trade, that needs to be as simplistic as possible. So
Yeah.
rather that you overanalyze and then over execute, then underanalyze and under execute. So there's also other factors like overanalyze, under execute, all of those
Analysis
stuff, like
paralysis, and yes,
analysis
okay,
paralysis and the stuff
yeah,
like that. But
there's a bit of both. You
yeah,
got to keep a happy medium, but that's called experience. It's called
yeah,
experience. You'll get there.
it's the idea of you find the thing that you're looking for. Doesn't matter where you look for it. If you find it, be ready to execute on it at the end of the day. So your analysis can be as crazy and thought through as you want it to be. I just want to make sure that if anybody is going to take a trade, that they make sure that that trade is done with conviction.
Yeah.
And whatever you need to do to have conviction, do it.
Yeah, no, dude, 100%. Yeah, no, 100%.
Martin asking, Rich, are you in NQ or are you waiting? I am not in NQ. I am waiting. As of right now, if my chart
Yeah,
is going to...
I'm actually considering a sell on NQ, to be fair. Which was quite ironic, actually. I was looking at a buy.
There we go.
I was looking at a buy on NQ, but now I'm potentially looking at a sell.
I was looking at sells initially, until we had this like bit of a drop, a sudden drop.
Mm-hmm.
So that's too much of a drop. Now I need to see whether or not it's
Oh, okay.
going to pull back a little bit and then continue pushing lower.
Yeah, now you want something like this instead of, because what could happen is something like this. They're the two potential points now or the two potential things that could play out on NQ. So yeah, no, dude, you know what? I kind of rate that. I respect that.
Yeah, so I'm waiting right now to see whether or not there's going to be a continuation. We are at a current area that we had a little bit of consolidation during the Tokyo session. We did have quite a bullish Tokyo session. Something, I think, of air bubble. Let me just go to my chart and I can show you it properly.
Yeah, of course.
We had this area here where we were struggling to a little bit of consolidation. So this is with rollover. So we had a very bullish day for the New York session. We had the open. We swept the high. We started coming down. We created the low of the day. And then we started to push up, creating this base area over here, continuing all the way up till we eventually reached the highs of the day. And then we started to flatten out. And only roughly around here did we start getting a nice push above. Effectively a retest and then a continuation, creating a new high of day. And since then, we've been slowly but surely making our way lower. We've had a strong 1-2 bearish candle on the 5-minute pushing into this consolidative area. And then we immediately kind of flattened out. So as of right now, we're kind of sitting here. I'm wondering if this is going to be a continuation push-up. I don't know. We need to break above that recent swing point and then the previous one as well. I think there is a potential for us to come down to this area over here, which was the low of the Tokyo session and also the opposite end of that consolidation as well. So there is a potential that we can make our way down here as we're heading closer towards the New York session. And then potentially from here, we may even wick even lower during the New York session, potentially coming to either that base area or this base area over here, or even the high of the London session yesterday. So one of these three areas could potentially be hit. I'm going to go and have a bit of a deeper look at NASDAQ to see whether or not this is a deeper pull, get to an area and then start pushing up higher. But overall, I am net bullish on NASDAQ. If you go onto the daily,
even if you go into the 15-minute, you can see it's still bullish.
Yeah, if this is the 50 EMA and we've respected it, even though we did not create new highs after we did wick here. So this movement that was here did not create new highs, new all-time highs. We did make a double top, basically. And at the same time, we've now made a higher low. So we've got this ascending flag pattern where you're going to potentially do something like this and then eventually break up. So as of right now, we're in that like midpoint between the two, between the top portion of the flag. So this section here, that's the top portion of the flag. And here we have the ascending channel, effectively. So at some point, price is going to either hit this top point here again, and then potentially start pushing lower, reacting off of this zone here, and then maybe. So what we're doing currently is it's a sending flag right now. So we'll see whether or not today is the push to try and get back up to the tops, or whether or not it is that attempt to push back down again and then push up again. I think it's potentially going to push back a little bit and then pick up for the rest of the week. So yeah, it's we're sitting in wait here right now. Strong reaction from yesterday, bullish day yesterday. Today, a bit of consolidation as we headed over with rollover. A breakout and then a retest. However, the previous hourly candle, if you just look at this one here, this does not fill me with a lot of confidence. You have a big wick above and below in relation to the candle body. So when we opened up 1 hour ago, we pushed up, we came all the way back down, and when we came back up again, we closed slightly bearish, which to me is a signifier that this is a potential reversal point, because this was a bearish leg. So consolidation, breakout, retest, potential push higher. So let's wait and see. This could be a potential reactionary point somewhere like this.
Yeah.
Or it can just absolutely just push through again and potentially come back to this area over here, which is just above the base point. Or if you have a look here, you'll see that there's a lot of area in this space where we had struggles. Okay, that was not a straight line. Let's do this. Where you had a lot of struggles in this area. Wick, push lower, wicked, pushed back in, pushed lower, broke through, retest, pushed higher, broke through volumetrically, touched it as a level of resistance, continued lower, broke through again, retest, becoming an area of support. So maybe we'll see price get back to this zone here before we start picking up. Another thing to take in consideration is we have not swept that high swing, which was the most recent high swing after a strong sell-off. Yo, Jeremy, what's up?
Yo, what's going on?
Hey guys, how you doing? Hey Will, hey Richard. Richard, I'm so sorry to hear about South Africa, by the way.
Oh, dude, that's okay. That is, it was expected. And if I know anything, it's just that expectancy is everything. So it was as expected. So happy that we left when we left. You know what was unexpected though? You know what was very unexpected? Netherlands and Germany losing.
Yeah, Germany was a bit of a shock. Yeah, I watched a bit of the Germany game last night, and it wasn't great. I thought Germany would have done a lot better. I thought it was going to be a whitewash.
Yeah. Yesterday. So Jeremy, you were not here for this yesterday, but yesterday we were talking with Dirk and LJ about what we expected the rest of the knockout stage to be like, and we went through every match, and every single match that I mentioned so far, I got it wrong. So,
okay. So I'm just going to bet against what you predicted, right?
Yeah.
Okay.
If Richard is going this way, it might be prudent to go that way.
I'll just hedge your trades.
Just hedge my bets when it comes to the football, man.
Yeah, I would. I think that's your safe bet.
I mean, Australia still has a chance. I mean, LJ is probably going to be like, "Yeah, I told you so," when that happens. But I mean, kudos if they nothing has been going my predictive direction with the football. So
yeah. Anyway, guys, on that bombshell, I am going to love you and leave you. I'll see you in about 2 hours' time. I'm going to reset my whole PC. Hopefully, I can sort my jankiness out, because, I mean, at least I'm clearer now, but I'm still, like, staccato. So I don't know what's going on. I'm going to shoot off and try and just do a hard factory reset on everything technological in my house. But in the meantime, guys, make sure you ask this fine gentleman down below and this ugly-ass gentleman just up above me on all sorts of questions related to the markets, because they've got all sorts of insights for you. But guys, if you want any waffles, unfortunately, I can't make you any waffles, but I'm sure we can waffle on about the markets for you. But anyway, thank you very much. Peace.
Cheers, Sir William. We're supposed to have LJ, but he has some Australian water issues. You see, in South Africa, we don't have water in the pipelines, but in Australia, the water is outside of the pipes. So little bit strange how Australia's water situation is. It's a bit of a joke.
Yes. Yes.
Bit of a oh, okay. Now LJ has a water leak in his house. Will, shut up and go and do a thing. Will is in the background acting as if he's all high and mighty. Go touch some grass. Jeremy, tell me, are you looking at anything specific? Are you in a trade, or are you looking at setting up a trade? What are you looking at?
What am I looking? Good question. I was watching Euro New Zealand dollar quite closely over the last couple of days, or last week and this week, looking for trade. Let me see if I can share my screen. Give me one sec.
I think we're just quickly setting your screen up because I don't know where your screen is. Oh, it's way here at the bottom. You can share?
Oh, there we go. Yep, I'm sharing, yeah. I was looking at Euro New Zealand dollar for potential buys. Yep, I'll share screen.
Yeah, it's good.
Yeah, for the last couple of end of last week and early this week, like yesterday, I was going to take a buy like right here, but then I missed it. And then now it's heading, retracing back down. So I'm thinking it might be potentially the end of the uptrend and start reversing soon, because when you look at the higher time frames like the daily, it's quite extended. So we hit like these highs up here, and then our RSI is also quite extended as well. So I'm thinking that it might start retracing and reversing down. So rather than going for buys, I'm actually thinking of getting into sell soon. So I'm just waiting for it. Yeah, I'm just waiting for it to maybe. So it pushed down to this level here. It might need to go a little bit further and then retrace. See if I can draw something. Yep. So retrace a little bit and then head further down. So I'm thinking of maybe taking a sell either around this part here or maybe down here. Okay. So I'm just watching it.
So I'm not all that familiar with your trading style. Would you mind just giving a brief overview of how you would approach a trade, and then once you find a trade, what would you do to enter? What are you looking for in general, and then how would you manage that trade in terms of your risk?
Yeah, for sure. So for those that don't know, I trade trends. I usually trade trends. So I kind of ignore most other markets. Like if it's ranging, I kind of ignore it. Only if it's a really good setup. But mostly I trade trends, which means that I identify when markets are trending. Usually my entry is on the 1 hour time frame. Sometimes I'll go to lower time frames like the 15-minute or even 5 minutes, depending if I want like more price action. But usually, it's just looking at when the market is trending and then trying to capture part of that trend scalping part of that trend. And then I also use higher time frames like your daily just for like my overall bias, just to check like the maturity of the trend and how much room it has to actually continue. Because like what I found is that like not all trends are created equal. So you can have trends that are like more of an early stage, you can have trends that are more of like a middle stage, and then you can have more like mature trends. So like, for example, in New Zealand dollar, this would be a good example of more of like a mature trend where it's been trending for a while, since honestly like 26th of June. So almost like a quite a few days now.
Mm.
And yeah, you probably wouldn't want to take buys at this point right now when it's starting to reverse. So that's just in a very nutshell how I like enter. And then in terms of like my stop loss, my entry, my TP, and my position sizing and things. So usually I will set my stop loss just below what I call like an invalidation zone. So it's like where my trade will be invalidated or wrong. So for example, if I was taking a long, like at this point here, I might want to set my stop loss just below this area here. And then usually my TP, I try to go for at least like a 1 to 3 or like higher risk reward trades rather than like 1 to 1. I used to go for like 1 to 1 trades a couple years ago and then have like aim for more higher win rates, like 70, 80%. But then I found that I was just way more profitable going for higher risk to reward trades, but like low win rate. So now my win rates are usually around like 40-ish%, sometimes 40 to 50%. But my risk reward is a lot higher. So I would have like a 1 to 2 or 1 to 3, and sometimes like 1 to 4 risk rewards, just depends. And then in terms of risk, so I normally, because I trade a lot with like prop accounts, so funded accounts and things. So like I always try to keep my risk quite small on those accounts. So I'll try to go for like maybe one max of like 1% per trade.
Okay.
Just because sometimes they can get a little bit funny with how much risk you take.
Yeah, I mean, prop accounts in general have way more strict rules than, for argument's sake, the equivalent individual personal brokerage trading. So what I've done is I've taken the same approach that I do with prop trading, and I've replicated that on my personal brokerage trading as well, which in the beginning felt like, oh, you know, it's slow going. However, it has kept me out of those really risky trades that in hindsight, or in the moment, let's rather say, looked amazing, but in hindsight was like, oh yeah, I was playing the market a little bit hot and fast. So I like prop account rules, especially the idea of risk management, and especially the idea of not trading during certain news events and so on, and having a real solid grip on your decision making when you're going forward. Because if your decision making is basically against what the prop firm wants, you're not going to get a payout. The prop firm is just going to turn around and say your trading is too risky, or what your approach is a little loose and stuff like that. So it really wants you to dial in your consistency. It wants you to dial in your decision making and your risk management. So you being a prop trader, if you had your own personal brokerage and personal trading accounts, would you approach them the same way?
Yeah, I think I would. I agree. I would use the same approach as you as well, which is I felt, I think the good thing is because of these rules and strict risk parameters that you have to use when you're trading with prop firms, it does make you hone in your risk management quite well. And then if you can translate that into your personal accounts, I think that's always a good thing. Like it's not a bad thing to have good risk management when it comes to trading your own personal accounts. Yeah, because if not, like some of these personal accounts, they do have like huge leverages. Like I know some people go with like 1 to like 1,000 plus leverage and things like that.
Yeah, it's a little ridiculous.
Yeah, so I think it can be a bit like without those strict rules, it can feel a bit like gambling sometimes. So it's good to have those rules in place regardless. Yeah. So yeah, to answer the question, I reckon I agree. Like I think if anything, trading with props has made me a lot more strict with my risk management. Just because, like, yeah, if I don't manage my risk well, then they might say like, yeah, deny your payout or just make up some excuses and things like that. So
yeah, I mean, when it comes to prop trading, you it's not even just prop trading. I have this general viewpoint with a lot of stuff, and it's that if I have the choice, if the choice is on my shoulders, is in my lap to make, I own that decision. So if I'm going to make a choice with anything, I'm going to own it. I'm going to say, you know what, I made this decision. This is the reasons why I made this decision. And if it goes wrong, I'm the owner of that decision. I say, you know what, I decided to do that. I'm going to have to live with the consequences. And I do that with pretty much everything that I deal with. Trading being the same. So if I'm in a trading with a prop account, I own that decision to be in that trade. And if it didn't work, if I lost a lot of money or something like that, and something happens where a prop account says, look, you disobeyed our rules and we're going to deny payout, I can then turn around and say, I did make some mistakes. And yes, that was my fault. And yes, you're right to have denied my payout because I did not follow your rules. I own that. But the opposite's true as well. Like if I've actually followed it word for word, then it's just like, look, I followed this word for word. I have all of my data, I've followed it exactly. So if you're going to deny me a payout, that's on you. That's, you're being a little bit of an asshole towards me now. So in my mind, it's stick to the rules and don't play hot and fast with the rules and the risk and stuff like that, because you're just giving ammunition to another party to potentially influence the outcome that you were looking for. And in this case, if I was looking for a payout and I'm playing hot and fast, and then I feel, the company screwed me now, then there's going to be companies that are going to screw you regardless of whether or not you followed the rules. But in my mind, I'm going to be following the rules regardless. Doesn't matter where I'm going to be trading, with whom I'm going to be trading. I'm going to just try and follow all of these rules so that it's less likely that I'm going to get hammered for a rule break, as an example. So I haven't lost an account based on a rule. I've lost accounts based on my own failure to pass, my own failure to manage my risk, my own failure to not overtrade, stuff like that. So every time I've lost an account was not because of the prop firm, but because of my own actions. So I think the long story short that I'm trying to get to is that I've incorporated those rules into my regular trading, and it has been a benefit rather than there's been less downside to me doing that than what I thought there was going to be.
That's good. I mean, like, if I feel like, with trading, if you have to have some rigidness or some, like, you have to have a plan of how you trade, and you have to follow because otherwise, if let's say you take 20 trades this month, like, how would you know what's working and what's not as well if you're constantly changing how you trade? Like, if you're using different risk every time, if your entries aren't like, following their plan and everything. I think the whole point of having a plan is so that you can review your trades and the data and see like what's working and what's not. But if you keep changing it up, like, how will you know what to fix? And then, I think if you want to, take more risk and gamble things, then you should go and bet on the World Cup and just follow Richard's bets on the World Cup.
No. You should do the opposite of what I'm doing with the football stuff. You should. If I say this country's going to win, you take the opposite one.
The opposite.
Hello, Pedro.
Hello.
Hey, Pedro. How you doing?
Good morning.
Speaking of football following people, Pedro loving his football. What did you think of my predictions yesterday, Pedro?
What were your predictions?
All right, I'm going to be jumping off very soon, but I will run you through my predictions.
Okay.
And then you can tell me whether or not you think I'm an absolute idiot. All right. So everybody knew this was going to happen. South Africa had no business of being in the knockout rounds. We got through by sheer dumb luck alone. this was a foregone conclusion. However, being a South African, I was like, South Africa was going to win. So I said South Africa was going to win even before this result yesterday. But when we came on stream, this result was already done. We had already lost. It is what it is. I said Netherlands was going to beat Morocco. Eating my words right now. I said that Germany was going to destroy Paraguay. Eating my words right now. I said that France was going to beat Sweden.
Yeah.
Senegal was going to beat Belgium. USA was going to beat Bosnia and Herzegovina. Spain was going to beat Austria. Portugal was going to beat Croatia. I thought Brazil was going to beat Japan. However, I wanted Japan to win. Norway was going to beat Cote d'Ivoire. Mexico was going to probably beat Ecuador, even though I wanted Ecuador to win. So I said Ecuador was going to win. England was going to beat DRC. Switzerland was going to beat Algeria. Ghana was going to beat Colombia. Egypt was going to beat Australia. And Argentina was going to beat Cabo Verde. However, I felt like this was the match to watch because I felt like Cabo Verde was going to be the ones to give Argentina the biggest battle, which ultimately Argentina will win. But it was going to be a battle for the ages, this one. Because I love their defense. Their goalkeeper. I want to see whether or not Messi can make his way through that wall of defense that he's set up. Those are my predictions, of which none of them have been correct.
You were correct about Brazil and Japan, though.
Yeah, bro, you got right, bro. You got Brazil right.
Okay, but I said that I believe that Brazil will probably win, although I want Japan to win, so I'm betting on Japan. So I said Japan was going to win this one, even though I believe Brazil probably had it. But it was the same with Canada and South Africa. I was like, I knew deep down Canada was going to win, but I wanted South Africa to win, so I said South Africa is going to win. It's like that copium. It's coping.
I was so sad Japan lost.
Yeah.
I was hoping they would actually, because they beat Brazil in the friendlies. I think it was like 3-2 or something like that.
Well, Brazil learned then. They learned something to beat them. Yeah. So for the next round, obviously all of my predictions would have been off. But for the next round, Morocco is going to beat Canada. And then if France is going through, France is beating Paraguay to go up against Morocco here in the quarterfinals, which France is then going to win. France is probably going to win all of it. Let's be fair.
Yeah, it's going to be. I guess Morocco is going to be an interesting one. Let's just see. I guess Sweden, even though Sweden, their defense is really bad, so I'm expecting a game of goals from Sweden because they do have two good strikers, Sweden, but all the rest is kind of weak. And France hasn't really been that solid defensive neither. Like France is just the attacking is just so powerful. The attacking power they have. But the interesting part so far at these knockout stages is how tight the games have been. Like it's the last minute goals or penalties. So it was Canada last minute, Brazil last minute, and all the rest has been penalties a lot of misses in the penalties. So it has been entertaining. Yeah,
I laughed at that. The Netherlands and Morocco penalty shootout. 3.
Yeah, I was not awake on that one. I was awake on the German one, like against Paraguay. It was crazy. Like Paraguay had 2 chances to finish it, and they missed both penalties. Wow. And the momentum shift to German, and then all of a sudden German misses his penalty, and then Paraguay just scores. It was it was crazy.
Yeah, the Netherlands Morocco one was funny as well because every miss was exactly to the same direction. Yeah. And they had 2 that hit the post.
Exactly. Yeah.
And I was like, how is that?
No, it's the nerves. It's the nerves. It's when you want to. When you're about to shoot a penalty, like you want to put it so much on the edge, so much on the side, because you want to hit the side net. Okay, usually if you hit the side net, the goalkeeper cannot save it, and then start aiming so much, and then the ball just goes to the post.
But the fact that it was every miss was to that direction, and every time that it looked like it was going to go in, it hit the same post, and I was just like, this is crazy.
Yeah.
Anyway,
Yeah.
It's just nerves.
yeah. All right, gentlemen, I am going to love and leave you. LJ is in, but he's got some water issues at home. I don't know how long he's going to be, but we should have Rich in as well in about half an hour or so. So we'll see how the rest of the day goes. Everybody, if you haven't already, drop us a like and a subscribe. I will see you all a little bit later. Cheers.
Thank you.
See you, Richard. Have a good one.
All right. Jeremy, what are you looking at? Anything specifically that you are looking at on the charts today for this week?
Yeah, I was just telling Richard I was having a look at Euro New Zealand dollar for potential sells now, like reversals.
It's just
It'd be good to get your would be good to get your opinion on this actually, because I know you trade reversals.
So which one is it again? Is it Euro
New Zealand?
Okay, Euro New Zealand. I haven't been looking at this pair for a while. Yeah. Okay. Yeah. We can take a look at that. Which one is that one now? Is that Euro?
Oh, sorry, that's New Zealand JPY, the one they have right now.
Okay.
Yeah, New Zealand JPY. So the ones I'm looking at are Euro New Zealand dollar for sells, New Zealand USD for buys, and then New Zealand JPY for buys.
Okay, so you like to trade New Zealand, yeah? The pair that
because at the moment, well, it depends whatever is showing up for setups. So far, it's mainly those three that were showing up for me. Yeah.
Okay. What am I going to look at? Okay, I'm going to give my feedback on that one. But just take a look at this one. And by trader, by the way, I like your picture. Pedro, so you're nervous for Portugal, Croatia. Croatia can be very tricky. I was quite disappointed when Portugal played against Colombia. Okay, so if I had high expectations, basically they disappeared. Because our manager is really bad. That's the reality. So I'm not expecting anything from Portugal right now. I think on the knockout stages they're going to step up a little bit, but the way the manager kind of structures Portugal to play, the system that he puts into it's just too bad. But I do think Portugal has enough to beat Croatia, even though Croatia has done really well in the last two World Cups, got to the finals and then got to the semifinals. But I think Modric is already a bit old as well, and I think it's more of a transition generation than the generation that got to the final. So I'm expecting Portugal to win, and then we'll see against Spain what's going to happen. But yeah, I think it's going to be a good competitive. I think one advantage of Portugal is that Portugal plays better against European teams than teams from other continents, so that's maybe an advantage that we may have. We don't do well against African teams or South American teams or whatever. It's just their speed, the velocity that they play is much faster than what we do. Yeah. So now looking at the charts, Euro New Zealand. I can see more or less why you are looking. Yeah, I'm going to share it in here. Yeah, looking at the higher time frame, it's at a good level. Okay, it's at a good level that we could look for some shorts. Basically, price got into this top. This is basically the beginning of the move to the downside that we had all the way since April this year. So prices went down. It did manage at least to break some structure in here. And then it moved to the upside. One of my first questions, it will be, for now, where is this low reacting from? Is this actually a break of structure for price to now continue? Or is this just kind of a little bit of a manipulation to collect liquidity, and actually price can go higher from here, because where maybe price is reacting on the left side is actually an interesting and good level. In my opinion, yep, price got really close, so it got into this fair value gap at around this level. Okay, may have not yet touched exactly the extreme in there, which makes it okay. It's a little bit spicy yet for price to go further down, so that may be a good thing. But if you go into the lower time frame, maybe actually it makes sense where price end up reacting. Now, looks like more of a mid-range structure as well. So this doesn't look like a level also to be a bottom per se, which means that price can actually eventually continue to move further down from where it is. Basically, what I want to say is that this low or whatever reaction price is having from here is kind of a mid structure as well. Maybe the other extreme, it will be this one. Price maybe was reacting from this structure, maybe it would be better, or maybe kind of close to prosper low for price to actually continue. So yes, from this level, I think it could make sense to look for a short. I don't like the supply level, and I think price could eventually navigate a bit closer to this next range in here. But now on the lower time frame, I need to try to see where is the next key level of structure that price can still break or respect. So far we have this low, and I need this low to be broken. Exactly this low in here is basically the last low that the price created as it was moving to the upside. Now, what I don't like about this specific asset is the overnight moves. Okay, basically I think all these wicks that you can see in here, as you can see, they're all at 10 p.m. my time, which is basically when the market closes and then reopens. So that's why actually I was a bit surprised that you mentioned that you do trade a lot New Zealand pairs, because any New Zealand pair, aside maybe from the New Zealand dollar, they are exposed to these wicks, okay, to these candles, to these strange moves that happen at the closing. You can see 10 p.m., 10 p.m., 10 p.m., 10 p.m. Okay, so if by any chance you are long in here, you are getting stopped out in there. If you are long in here, you are getting stopped out in here. There is a lot of these liquidity captures, let's mention like that, and they also happen to the upside. Okay, the only reason you can only see to the downside is because I'm looking at the bid price. If you look at the ask price, price would have gone up as well. So yes, I would avoid completely to trade this asset, because it's a massive move that happened in here, and that can definitely destroy your positioning, especially if you are looking for a swing trade and keeping the trade overnight. But looking more, ignoring this level, these candles, I think this can be an interesting zone. And now price, if breaks this level, then maybe can rejoin a little bit, and then they're looking for potential continuation to the downside. The level where price is reacting here is good. Is there anything a little bit higher that price can go towards to? Maybe there's still a little bit higher, maybe closer to this level as well, where price may go through. So yes, price is reacting from the structure, if not mistaken, somewhere around here, and there's maybe still a little bit higher where price can eventually go. So if by any chance price does want to fake out still this most recent highs, it could still do it. But on the other side, I do like the manipulation that we already had with this specific candle. With this candle in here, price started to go higher. It didn't manage to got rejected completely. So somewhere around here could be an interesting level for me personally to potentially look for shorts. Price already reacted from this left shoulder. That this reaction here is already reacting from there, even though we haven't really managed to break as a Quasimodo, but this left shoulder has already been taken. And now we have also still this left shoulder in here that price maybe can visit later on. So yeah, that would be more or less where I'll be potentially looking for. And in terms of targets, again, these candles are quite tricky, but we potentially could go all the way to fill out this. As when you do break below this low, we can fill out this, and then you can actually look more up a little bit further down as well on this pair, and basically could almost fill out this structure, getting closer to one of these two zones, which will be either here or eventually there. That will be my target that I'll be looking for Euro New Zealand. But yes, I'm really scared of these candles. That's why I basically avoid any New Zealand pair except the New Zealand dollar. Yeah, because I don't like these candles, and I think this can be visible in many brokers, not just this is specifically SE markets, but I think if I check any other FXCM maybe doesn't have it. Wanda also has it, but I think it maybe some brokers have more than the others. But yes, I'll be scared of that.
How do you normally? When do you normally get into your trades? Do you normally wait for some sort of entry trigger or confirmation to actually enter?
Yeah, so I would wait. For example, if I was already interested in looking for shorts in here, and I could have been interested in looking for shorts in here. So this is basically a Quasimodo pattern that we can develop in here. Okay, this is the left shoulder. Price went down. This becomes the head. and then price can break below the structure, confirms the left shoulder, and this can become the right shoulder altogether. Okay, but one of my favorite setups, it would be to trade actually the head itself, which is basically within this structure. Okay, when price actually fakes out this left shoulder, this left shoulder is already showing some signs of bearishness because of this strong push to the downside. That would be nice. So it starts already breaking some structure in there. That's good. And just waiting for the manipulation. And one of the candles, or one of the types of price action that I like to look for is exactly what I mentioned in here. Okay, so on 15 minutes time frame or 30 minutes time frame, we can see that maybe 1 hour, 1 second. Yeah, it looks like that these candles, 1 second, like that these candles are showing strength after breaking this top, showing strength in there, but they do get rejected immediately and they move to downside. So I do like to see this type of price action at around the levels that I'm interested in trying to take a trade. So when I do have now this supply level and do have this structure in here that can be used as liquidity, which is basically above all these highs in there, I'm really curious to see how price is going to react within this empty space, okay, between above these highs and the level of supply that I have in alignment with the left shoulder. So I'll be paying attention to what's going on within these candles. So I'll be tracking basically candle by candle or zone by zone, basically drawing the previous lows. And as soon as eventually those lows get rejected, which is in this case this one, somewhere around here, I would have tried to take a trade. Okay, so I can see that price is compressing, no break of structure yet until this is basically the last low. This one is a high, and as soon as price breaks it to one of these weeks in here, I would have tried to take a trade immediately after that in there. As you can see, price just reacted a little bit and then dropped. Sometimes price just drops and I end up placing, for example, a 7-minute in here and price never comes back to collect my entry. So sometimes I end up missing the trade. As you can see, then price just went down. The maximum it retraced was this level and it went down again. So I know that usually in the future, somewhere around here can be interesting again to look for. Okay, it's in alignment with the manipulation that we had in here. Price never really got to the next level. And in the future, that's why I draw that rectangle before. I think eventually if price does want to come back towards this level, take the low first, and then if it wants to come back, and this becomes the right shoulder of the overall bigger Quasimodo that I just talked about, which is for price to come back eventually towards that level and work as a Quasimodo on the right side. That now becomes kind of the left shoulder, the head, the break-off structure, and right shoulder to be somewhere in there. And there is that gap in there that I like, that in my opinion was left behind potentially for that Quasimodo to work. But yeah, more or less, that's what I meant. I like to see this battle of candles around the structure that I like to see. And when price finally gets, in this case, the sellers get into play and actually break the last low, the last battle of buyers in there, then that's when I like to enter. Yeah, nice. So I do like to track that.
Nice one. I'm also having a look at New Zealand JPY right now. That's another pair that I'm trying to look for potential buys actually.
All right. New Zealand JPY, right? I don't even follow that one. 1 second. NZD JPY. Can be FXCM. Yeah, New Zealand JPY is quite similar to what we have on New Zealand dollar. Because on New Zealand dollar, we did have price approaching this structure. So this was a level that we talked about as well several times in the past in here in the live stream. So there was definitely this gap as well, quite similar. Price had broken below these lows. Below that low, but it haven't really reached the final destination, in my opinion, which was getting closer into this rectangle, and now we got it. Okay, so we finally got, if I was short by any chance on New Zealand, this would have been my final target, and this would have been now the level where I'll be starting to pay attention to look for longs on New Zealand dollar. I wouldn't have bought yet. I don't like the price action as a reversal just yet. I think this is just a range. I think there's still plenty of kind of manipulation or kind of the reversal part, the price action to happen around this level, even though we do have maybe a little bit of a fake out in here and price already reacting from this level. There's too much cluttered in here, too much compact. I'd like to see a little bit more of a bigger movement, a big of correction of liquidity before the reversal. So even if price breaks to the upside, then I still expect price to eventually come back. If it doesn't, it doesn't. But that's what I like to see. But what I want to mention here is that, as you can see, it's quite similar. The level of structure where New Zealand dollar is reacting is quite similar to the level of structure where New Zealand yen is also reacting from. Just bring this New Zealand yen again. Yeah, there you go. Which is this demand zone. In this case, it's showing a little bit more of momentum already to the upside, and I'll be looking to see if price would eventually get to this next phase. Okay, so the next structure in here, it will be this one. One of the reasons for this move on the New Zealand yen is definitely because of the yen index. Yen index is moving to the downside again, and the New Zealand yen is benefiting from it. So I'll be just a little bit curious to see how this New Zealand index would react from around this level, or if it wants to go a little bit lower as well, how it eventually can react. Because the moment that this yen index moves to the upside, most likely we are going to have a move to the downside on the yen, on the New Zealand yen. So that would be something to pay attention. 1 second. GPY. So that will be definitely something I'll be aware of. But for now, I think this could be a trade. Do have now this structure that maybe price can bounce again, and just to continue to follow through and maybe feel this price that is somewhere around here between 91s and 92.4 or something like that. So yeah, higher time frame, price is reacting from a level that it makes sense to me to look for longs. We also had a little bit of this liquidity to manipulate. Again, this is not my favorite type of a bottom, but sometimes it happens like this, and I think price can trade between this range, and maybe can try to find a trade within this level to try to squeeze it through all the way to the upside. Yeah, but I was just paying attention a little bit to the yen ones. Dollar yen just massively broke an important high from a few years ago. And we are trading at levels that we haven't been trading for, 40 years now, something like that. Which means that there's maybe some pressure from the Bank of Japan to eventually start interviewing. We'll see when that's going to happen. But if that happens, then it's going to squeeze a little bit the yen pairs to the downside, and New Zealand yen is going to be caught on that move as well. But yes, for as long as dollar yen continues to just move like this, then there's no issues in there. But I'll just be a little bit concerned with that, because we are at the levels that we have been trading for a long time, and even today I think there's already some news of Japan chief cabinet saying that they are always ready to take necessary action on Forex. So if they start mentioning a few kind of things on the press regarding to this topic, maybe they are close to act. I don't know. We'll see. That would be just my concern with that.
Nice.
Yeah. Where would be your target on that one? Where it would be your target
on New Zealand JPY?
Yeah.
New Zealand yen. Yeah, I was targeting similar place to where you had your drew your stuff before. So if I were to look for buys, it would just be waiting for it to retrace a little bit first, and then maybe targeting these highs up here. Yeah, so something like this. So that would just in line with where the previous support and resistance is up here. Let me jump back to the 4 hour. These levels up here. Let's take this off.
Yeah, that would make sense. I think maybe 7 or 8 out of 10 times that move tends to happen after this initial break-off structure that we are now just going all the way through to the next one. I think that's kind of a typical move that we wouldn't be surprised if that would happen. So that may be a good trade. A good trade to take.
I think it was ranging for a bit down here, and then it broke out of this range. So it was ranging through these areas, broke out, and then now it's starting to trend up. But yeah, we'll see how it goes. I'll have to wait for a retracement first because I wouldn't want to get into a buy now when it's so extended. I would usually wait for trace first before taking a buy.
Yeah.
I don't know if we also have some news coming up as well, which is 1st of July. Consumer confidence and manufacturers index. So yeah, we'll see how that impacts it.
Yeah. Tomorrow we have. Yeah. No, we'll see. That looks like an interesting trade. I've been tracking a little bit Aussie dollar as well. Aussie continues to move to the downside. I'm not sure if this war is going to hold price or not. It's a little bit different from New Zealand, but Aussie, it followed through more or less what we were looking for as well in this last few weeks, months since we created that top. Basically, price finally getting closer to this low, but I think it could even take this low altogether and move to the downside. Price is slowing down, so something that we can see is that price is slowing down right now. It doesn't have the same momentum that we had before in terms of selling pressure. So maybe something that we could do is potentially to see a little bit of a upper retracement of price moving to the upside before maybe price eventually follow through and take these lows altogether. I think that's going to be more or less the next destination on the Aussie dollar. I think price can actually go below that low there, and maybe then try to navigate towards to the next structure. But for now, we'll see. It's losing momentum, so maybe there's a little bit of a intraday, or maybe this week we might have an opportunity to look for some longs. Maybe the dollar can also help if the dollar kind of starts slowing down a little bit, moving to the downside. Then maybe this Aussie dollar can help. And another pair on the Aussie to pay attention is also what's going on the pound Aussie and the euro Aussie, which is now finally approaching these tops as well. At around here, there's been another pairs that we have been analyzing a little bit together in this live stream, since we kind of caught that bottom in there. Now price is also approaching the upper edge of this move, and maybe it's going to find a little bit of a selling pressure. Euro Aussie kind of a bit more of the same. We had kind of this previous structure in there. This actual price is reacting. So we'll see. I think there's maybe a little bit more upper trending move on the direction that Aussie has been trending recently, but maybe now we can have a little bit of retracement before price continues. Yes, this actually starts looking interesting, to be honest. There's already enough liquidity in there. Maybe this starts looking a little bit as a bottom. We'll see. We need to break some tops in here. Need to be more confident on that.
Yeah, that looks good. Have you been trading gold lately, or having a look at it?
I take a look at it. It was an interesting move. We were looking for that yesterday as well, which was for price to actually take out together these lows. And it did, and it kind of reacted straight away to the upside. I actually had a level marked on the left where gold now reacted. I think it was one of the last zones fresh in this structure in November last year. Here as well. So that's a nice where actually used to right now react. So one of the things I'm looking for price is still yesterday was looking for price to end up taking the lows. Because first of all, this top never managed to take this top. Okay, so price actually still managed to respect this previous structure, not breaking it. And then it was the fact that all these lows had already been taken, or price had already reacted from these lows as it was moving to the upside. So we can kind of create this demand zone, then this one reacted to that one, this one reacted to this one, this one reacted to this one reacted to this one, and then price compressed away. This was one of the last touches. Also, now I went to this left shoulder, but there you go. Price didn't really had momentum to break any structure. So eventually, yesterday, even during the live stream, the Portuguese live stream, someone asked me if they should be looking for longs in here. I said, just be careful a little bit, maybe wait for some kind of confirmation. Otherwise, there's a likelihood that price can actually just squeeze everything in here. Take these lows, and then yes, maybe there's going to be a good opportunity, or better opportunity to potentially look for longs on gold. So this happened a little bit overnight, if not mistaken, and then you start looking some momentum to the upside. Price already managed to break this previous high that created this move to the downside, and now it left behind a few structures in here. So I'm curious to see how price is going to bounce again between this level. This is still kind of the 4K mark. Okay, one thing that I was paying attention is the way price is constantly bouncing, or kind of, it may goes a little bit down, but still managed to then to go up above the 4K. I don't know if this 4K mark, it becomes kind of a really interesting psychological level on gold. That maybe the investors want to defend. So I'll be looking to see how price may react around this level, and from here maybe can go higher. Okay, that will be a level that I'll be paying attention, this 4K mark, and within this kind of demand zone to look for longs. Yeah, that's actually maybe an interesting opportunity to try to trade gold. To be honest, today I like it because we already collected liquidity from below these lows. That's maybe enough to trap people into that wanted to short, that wanted to go long. Now maybe they don't want to go long anymore because they saw a breakout structure to the downside. So maybe they are bearish again. So if they're bearish again, that's maybe now actually a good time to potentially look for longs. And yeah, that's basically what I usually try to look for. But what's your opinion on gold? What do you think of gold at this point?
I was previously looking for shorts on gold, and then now I think it's extended a fair bit. So I'm looking at maybe it retracing back to maybe this this trend line here. Yeah, so that's sort of what I'm thinking. Like it's respected this trend line quite a fair bit through this area here, had an impulse move, and came down, respected this area here, another impulse move, and then came back, retraced to this trend line again, and then it made another move down. So I'm thinking that it might actually retrace back to the trend line over the next week or so, and then so you could potentially take buys all the way back up to this line if you're trading on like the 15-minute or the lower time frames. And then I'll see how it respects and reacts to this area. And then if it reacts to it, then I'll start looking for maybe sells all the way back down as it makes another move towards the downside. But yeah, looks like gold is fairly bearish at the moment. In terms of like looking at the daily chart and the higher time frames. So we just have to
it's definitely that definitely looks bearish. As it just continues to break new lows without really managing to break new highs. So that by definition becomes a bearish trend. It's just about, again, are you going to have some pullbacks in this move, and until where we're going to have those pullbacks. Personally, I actually kind of like a little bit of what I can see now on the lower time frame for maybe today's session. Potentially look for longs, and I'm going I'm going to try to track that to see if that opportunity arises for me. And yeah, because that actually looks good.
I think we had a comment from someone asking about Euro USD, so I can have a look at that one.
Can
we look at the Euro USD 4-hour buy? Okay. Let's have a look. I actually haven't looked at Euro USD much. I was having a look at it just before. For buys. Okay. So Euro USD on the daily has been ranging between this level of, I'd say, support through here, something like this. And then also these highs up here. So it's been quite rangy for the last, since almost a year actually, on the daily time frame. So it's bouncing up and down between these levels. And then now it's finally come down to this key level here. So there's either two things that I think might happen. One is it might respect this level and then head upwards. So it might actually start going upwards again, bullish. Or the other one is it just breaks this level and we start a new downtrend and head down. So it breaks this level and starts to come down like this. But for me, I would probably just wait to see how it reacts to this level. I think we have some news releases coming up as well, some pretty big ones tonight actually. Inflation rate, and then we also have inflation rate 1st of July as well. We have non-farm payroll as well coming up, so we'll see how it impacts it. But I would probably just wait until it clears this level, and if it respects it, and it might continue to head back up to this level, and then I would look for probably longs throughout this. And then, but if it breaks it, then we might end up heading down on a new downtrend. And then maybe even towards this level here. But yeah, we'll see.
Yeah, so it was looking for 133 to buy it until 115.3. Yeah, it's basically to the low of the range from last week and slightly higher. But that's what it was aiming for.
Or something like this, yeah. You could try it, take a buy. You would get a really good risk reward on this trade though, because you're buying at the very end of this low here.
Yeah. So if I take a look at my chart on the euro dollar, it's a tricky one. I still continue to be slightly bearish on the euro and bullish on the dollar. Okay, and also bearish on the pound dollar, for example. However, I'm trying to make sense of where the price is right now, and to see actually if you do look for, or if there is a reason for us to continue to look for more buys into this war time frame before maybe resuming the move to the downside. And yes, basically I was looking at 133, so basically it's literally at these lows all the way, and most likely just to protect the previous structure somewhere around here. So 133, that's basically takes us into somewhere around here, and all the way 115 something. Okay, basically I'll presume that this is the range that you want to trade from. Now, on the dollar index, as I mentioned, I'm still quite bullish. I can see that price is reacting now from within this high here, and I'm going to be curious to see what price can do and eventually react back to 100s to then resume to move to the upside. So something that I was looking at yesterday is that maybe this week, what you can do potentially is just to feel this weekly candle from last week, basically come to the opening. So we may have still this, it's not even visible properly in this time frame, but you may have still a little bit of space from this week's low until last week's open. And maybe can try to fill that space still this week, which is basically takes us, this is the opening from last week, which basically still left this level behind in here. Open for price to potentially navigate towards to, which means that maybe you can still look for sales on the dollar index, and if you're looking for sales on dollar index, then maybe you can look for longs on the euro dollar, and that kind of reinforce a little bit your idea. I had two levels in here yesterday. when I did my analysis, actually, price was around here. I was actually expecting price to just continue and at least to break this low. The reality is that I actually managed to hold this low, and I had two levels that I was looking potentially for a good reaction on the dollar index to continue to push down. One was within this rectangle. As you can see, I have this marking there, and the other one to be within this other extreme, slightly higher. Now, personally, to continue to be bearish, I actually would have liked to see at least this low take slightly this low and then the move to the upside. Creating double bottoms, I don't like to see that. Okay, I don't like to see that. That can make it a little bit more of a bullish move than anything. Nevertheless, price is finding some kind of selling pressure around this level, and I'm going to continue to see eventually how price may react from either here or there to potentially try to push price a little bit lower on the dollar index. So if these are the two levels that I'm looking for on dollar index, then I can try to look for the same thing on euro dollar, but to go for longs. Okay. Now, one thing that I don't really like on this move is that I don't have a clear level that screams at me to say I want to go long from here. Okay, so I don't really have anything in here on the left side that actually stands out to me that way. So if price starts moving to downside, price actually can even go way further down than anything than maybe I'm expecting, and that can be a little bit of a tricky one, especially for me that I'm still expecting eventually dollar to continue to move higher. Now, when looking at euro dollar, the levels are quite similar to the same levels that we had on the dollar index. It will be somewhere around here. Okay, maybe this extreme, maybe they can be still reasonable, or actually this current lower price is reacting can also be reasonable for price to try to push higher. On the euro dollar, yesterday I also mentioned kind of that euro could eventually go a little bit higher, maybe closer to that zone that you mentioned, above 1.15 or close to 1.15. I basically feel this range that's in here. So that will take us closer to the target that you mentioned. Now, from where do I want to go long? That's a good question. Okay, because price is respected this level, which was also reaction towards this level. And I don't know if price wants to collect liquidity from below these lows to then try to push higher or not. Again, I would have preferred to see price taking slightly this high, go down. That would make me more confident to continue to go for longs. At this point, I'm more a bit in a no man's land. Okay, if price does come back into the level that you mentioned, close to 133s, maybe from here then you can try to find some buying pressure and try to go higher. If price by any chance just slightly fakes out this low, these lows, maybe reacts from here and starts moving upwards again, and maybe break this type of a trend line. I don't know if there's any here or not. Then this can be the level where you can actually start going higher. Okay, if this is a clear break of lows and regain to the upside, kind of more of a liquidity grab, this move could happen as a long without the need for price to go all the way closer to this level. And that would mean on the dollar index something like this as well, which maybe price will just quickly spike up, come back into here, and out from here start moving to the downside. So this type of a move, it will be similar to what we could have in here on euro dollar and kind of in here, and then price could start going higher and from there. So that will be more or less what I'll be looking at on the euro dollar. But at this point, to be honest, I'm not that enthusiastic in looking for anything. I will continue to follow dollar CAD. Dollar CAD has been the dollar pair that I've been tracking because it has been way more directional. Last week I didn't manage to get one of the sales from around here down, and I think that price can still not take this top, create some kind of liquidity, and eventually start moving to the downside again. I think this wasn't reached the final destination, so that's good, which means that eventually price can even drop a little bit more. So I'm expecting just now on the dollar CAD for price to take the highs, collect a bit more liquidity, and then start showing me the bearish price action to jump into the short again as we navigate a little bit towards this level until eventually have a bigger reversal. Oh, okay, it's full house here.
Richard, a while.
Both Richards, yeah. I was just looking at my chart. Sorry.
You were so dialed in that like I snuck in quietly. Rich snuck in quietly, and you were like carrying on. Didn't want to impose and distract you.
Apologies.
No. That's great stuff. Really enjoyed that.
All right. How are you guys?
Doing well, thanks. I was enjoying the analysis, so definitely do not apologise for doing the analysis. And you know, I noticed so much conviction. Don't look for the link because there is one. I noticed so much conviction in that analysis, Pedro, which we're going to touch on the topic in a little bit. I don't want to dive down that rabbit hole if Jeremy does need to hop off. I just want to make sure that we're all good for time. Jeremy, how are we looking?
Yeah. I will hop off now, but thanks everyone for having me. The session was a lot of fun, and wish us a lot of luck for our Friday match with Egypt. So,
You guys are
Bellingham
losing.
is very low.
You guys are losing.
Hey, but you got all of your bets wrong last time, Richard, though. So if you say we're losing, we might actually win.
I had most of them wrong, but I did say that Australia was going to win.
Oh, did you? Okay. Well, I'll go back to the YouTube
definitely,
stream and
definitely.
I'll check. Yeah. I'll fact check that.
No, I said Egypt was going to win. So good luck to them. They need it. They definitely need it.
Yeah, they do. I'm not going to lie. We're pretty bad. Anyway. Thanks for having me, guys. I'll catch ya.
Have a good one. We'll see you next time.
Awesome. All right. See you guys.
Catch you later.
Mr. Pedro, are you staying on?
Yeah, I'm good. Let's go.
Yes,
I like this. I like these conversations with Rich. I'm staying.
Wait. Let's do this. We have a Pedro Rich sandwich.
Yeah, I can see that.
Let's do this, brother. I'll be at the bottom. I'm a little bit thicker set than Rich at the top, so I can be a good base. And then we've got Pedro in the middle, and then we've got this actually works perfectly. I'm in South Africa, all the way at the south. Pedro, you're in London currently, but
yeah, Manchester, yeah.
Yes, but I'm going to say you're in Portugal, which is in the
Portugal,
middle.
Definitely.
And then we've got Richard Wells at the top in London, well, in Britain. So it's perfect. The analogy works. Carry on.
I'm glad you made that link. So I was watching Pedro do his analysis, and I was thinking, this guy's pretty confident in his analysis. Now, I want to extend this slightly to chat. It is one of the topics that we want to cover whilst we're on stream. So first of all, I'm just going to say if anyone in chat does have any questions, anything they agree with, disagree with, now's the time to get our socks pulled up and get real about trading, because there is an opportunity cost with not being consistent in your analysis, but there's also a massive opportunity cost when you have edge and you are not confident in it and execute on it. So when I was watching Pedro do his analysis, I was thinking to myself, this is pretty, you got a pretty good amount of conviction in this. You were very clear on what you were looking for. Now, obviously, let's be real. We didn't all come into trading with this level of conviction, right? So I'm assuming that much like myself, you guys have built up to this level of confidence within your analysis and confidence within your trading. Can I just push your buttons for a moment and ask, how long did it take you to reach that level where you said, you know what, the doubt's gone? Or are you still wading through just a little bit of doubt and you've managed to overcome it enough just to execute on your edge?
Myself, I think the main thing is exactly that when I have doubt, for example, when I was expanding the $0 or when price is at a level that I'm not convinced, I just stay aside. So I don't try to trade in zones that I don't want to, and I think that helps me then to actually, when I do try to trade or when I do see something that which stands out, I do then take the trade. It's like, imagine that you're playing football. It's like I'm not trying to shoot the ball anymore from outside the box. I'm comfortable just taking my tap-ins in a way where there is a higher probability of me actually scoring, and I'm patient enough to just wait for those to pop up. So when in doubt, I'll just let price do whatever it does. I would either check another asset class or just literally don't do absolutely anything until price gets into a level where, okay, now I'm interested. I think that was the main differentiator kind of throughout the years. Of course, initially when I started to learn I was, especially when I started to learn like supply demands, price action, like naked charts, because we could see supply demands or order blocks absolutely everywhere, and didn't know which ones to pick and choose. Like I felt that I was always selecting the wrong ones, or the ones that I was trying to trade, it was always the wrong one, and I was getting stop loss every single time. And then when I was seeing someone else, they were always picking the right ones. I was always wondering what's wrong with me in this case. But then kind of evolved, like with more experience. Then I think it was when I started to learn a little bit more about liquidity and actually what kind of price needs to do for a level actually to work, or to increase the probability of a level to work, from extremes comparing with middle ones, or then some kind of reversal patterns that I could identify, for example, Quasimodos. So that helped me a little bit. But again, as I mentioned, in this case, in terms of doubt, and actually just read now the title of today's live stream, doubt is expensive. It is super expensive. But in terms of actually deciding to take a trade or to actually look for an opportunity, when in doubt, I just stay outside. I don't do anything. I just sit on my hands, and that's what I do. I just want to trade.
This is interesting because you're talking about a technical thing that you then identified the difference between kind of the zones, because like you say, there's order blocks everywhere. Mm-hmm. So what I picked up from this was it's a technical thing that you looked at these order blocks and you were able to study over time or have it explained to you and learn what is the difference between maybe an average one that probably gets around break even, and what is the difference between something that's technically going to produce a higher chance of a reaction or a reversal, right? So were you saying that it's a technical thing that helped you have the confidence within your edge? So you had to be winning in order to be able to say, okay, now I trust that this is actually going to play out because I know the difference between, say, a 0.1 expectancy and a 0.4.
Yeah, I think it was. I think one builds the other one, like in terms of confidence, and also like the more I increase my understanding of price action, it's like technical ability. I think then I start seeing also the results improving slightly, because now I was able to pick and choose the correct ones, and that goes to journaling. That goes a lot into experience of what I was doing in here. Like could be backtesting, could be whatever it may be, but like you start when you start seeing so many times one thing or kind of one type of behavior happening, you start trusting yourself. That's the to put money at risk in that situation. That's kind of how I start to build my confidence in that scenario. Now, it's true that then like this is basically just step one. Okay, there are more step 2, step 3, step 4, which then takes us into proper execution of the setup itself and the kind of what type of confirmations now I want to see eventually to take the trade per se. And this is where maybe doubt, or this is actually where my second layer of doubt tricked in, and it was more of a disadvantage for me, maybe an advantage, looking for certainty for execution that actually in the end would put me out of some trades, or because I was not executing in some great setups, just because of that second guessing in the right moment of triggering, or because I was looking for an extra confirmation that maybe didn't need it to happen for me to actually take the trade. And that was kind of the second part of me building up into the next phase of execution itself. One is maybe analysis to pick and choose which one to try to look for an opportunity. Then is the execution itself, more into lower time frames based on what I look at, and confirmation to execute the trade.
No,
I like what you said there. I like what you said there when
I'm
you're
just going to
talking
add
about
trading in the zone.
A different confluence, like there's a level. There's a different level to each of it, like your second level of doubt or your second level of conviction. It's the thing that people need, or people come to realize, let's rather say, that there's different levels to doubt and conviction. So it's not to say that you're convicted in the trade necessarily. You could be convicted in your analysis, but the trade itself has got doubts. There's something about the trade that is a little bit off for you. So it's separating each one of the segments as well, I think, is very important. You can be super confident in your analysis, and then something about the candle is putting doubt in your mind. And then that doubt kind of expands into doubt to take the trade, doubt in once you're in the trade whether or not it's going to continue with your analysis, doubt whether or not you should move your stop loss, or it creates this branching effect. And it's the same with conviction as well. Conviction also allows for that same branching effect to kind of converge again. So the doubt causes branching, and then conviction causes it to converge back to kind of like a midpoint or a decision point. And it's not to say that I'm convinced in everything that I'm doing. There's conviction in everything. It's the idea of being assertive, that once something happens, I decide to make a trade or to make a decision, and I stick to it, regardless. And when people talk about conviction or doubt, they like blanketing a lot of things under that same umbrella, basically. So I like the fact that you were referring to it as there's like a secondary level to it, or yes, this I was convicted about, but this then caused doubt, and then it's the next thing. Sorry, Rich, I didn't want to break your what I'm sure to be a very well thought out continuation of what Pedro said. I just wanted to really jump in there and kind of say that before sitting here quietly so that you can carry on.
Dude, I was literally just going to say exactly what you said, but probably slur my words a little bit more as I said it and not articulate myself as well. Okay, Trading in the Zone talks about exactly what Pedro just discussed and what Richard affirmed as well, that we've got this, our minds look for certainty and they're constantly wanting to know what happens next. Now, we don't know in trading what happens next. We can't know what happens next. So a lot of traders, newer traders as well, they're looking for that certainty before they place a trade. And they're looking for so many confluences to be stacked up that they feel so confident that they believe this next trade is going to be a winner. That's not really trading. That's our minds just basically, that's trading our emotions, but that's not trading the charts. That's our minds trying to get to a state of, you know what, I'm going to convince myself that this happens next, and I'm only going to pull the trigger when I can convince myself enough. And we look for external factors, and then when the trade loses, all of a sudden we've got a mixed bag of emotions. So I love that you separated the two, because we have, first of all, we have a trading edge. This is a static edge that over time produces a positive expectancy in the market if we relentlessly execute on every single valid setup that presents. The next aspect is what Pedro said, where I was looking for that certainty, but certainty doesn't come from executing the trades without knowing what the result is. And that's where our minds, our chimp brain is always looking for, look, if you want me to step outside of my comfort zone, I need to know what happens next. Like, can you imagine like blindfolding someone and just saying, right, just fall forwards? We have a lot of resistance, and for good reason, as to why we wouldn't do this. And in trading, we come up against that same resistance. We've got to act according to a plan, but we don't know if this next trade is going to be a winner. And the chimp brain hates that. Our emotional circuits just fire off a whole bunch of pain avoidance signals, and it becomes very difficult for a trader to execute a trade. Now, that's the psychology side, and a very, very short example of how I moved past that was to not look for certainty in my results. I looked for certainty in my execution, which is what I believe Richard said. So you look and you say, this is a valid trade, and I need to do this. When I press that switch, there is no off button. I press it, and it stays on until my trade finishes. Is this an example where my edge is present? Because if it is, it's like a switch mentally in our minds. I'm going to press it. There's no going back. Because if we lack that certainty or that conviction in our execution, you will forever be stuck as a trader. You may have an edge that works. Worse, you may not have an edge that works. And you may sit there inconsistently executing on it, recording no data on it, and just stuck. Break even. And because of the, hindsight bias, where we look at all the winners and go, if only I took that trade, I now would be making this kind of money. And you're now stuck, because what we'll do is our brain looks for information that supports our bias. So if you had 5 trades which didn't work, but 3 trades which did, and you executed on none of them, if you don't log them in a data sheet, your brain will go, man, I just missed 3 winning trades. And now you're stuck in a fantasy of thinking your strategy can produce something that it actually can't, which means you're stuck and you're not moving forward, which is an utter waste of time and a waste of life, in my opinion. I wouldn't want to be in that situation. So when we understand that the chimp brain, our emotional brain, is wired to stay in its comfort zone and it doesn't like uncertainty, we can identify that executing trades without knowing what happens next is naturally going to cause a bit of friction. So our job is to say, right, I can't have certainty in my results, but what I can have certainty about, and all the brain wants is certainty. It doesn't matter if it's in the results or in your actions. It just wants certainty. What I was able to do is look at my behavior and say, you know what? I can certainly take only valid trades. I can certainly manage them according to my plan, and I can certainly allow them to be good losses and good wins and hit their TP targets. So if you're looking for certainty when you're trying to pull the trigger, mostly we're trading our emotions. So if you can build a framework that you say, this is a valid trade and I'm going to lock in on this and I'm going to execute it with 1 unit of risk. It's like having a push bike with 19 components in the drivetrain. If we can eliminate that down to 3, that's just less things to break. So for me, it's so simple. I have a proven edge that is backed up with data that I know has produced more than it loses. And my job is to identify the moment that edge presents in the market. Now, there will be times where I feel excited to execute on that. There will be times where I sit there and go, I really don't want to trade this. It looks like a pile of crap. Now, my job is to ask myself, hang on, forget your emotions right now. We're going to acknowledge them, but is this a valid trade? So objectively, I have to make myself say, yes, it is, or no, it isn't. When it's a valid trade, I have to commit it to 1 unit of risk. And that's it. So my process is this a valid trade? If it is, place 1 unit of risk and record the results in my spreadsheet. Now that spreadsheet, once I say a trade is valid, it's going in the spreadsheet. That spreadsheet never gets a, whoops, I made a mistake. If I say something's valid with all the information I have at the time, it's going in that spreadsheet, and that spreadsheet is going to tell me the true story. Now, that allows me over time to build a new neuro pathway with not looking for certainty on results, but looking for certainty in my execution. And then in my spreadsheet, I mark them as red and green based on my execution, not the results. And I'm reaffirming to myself that green means good, green means go, green means I'm executing as I should. And I allow myself to achieve the same result as the strategy achieves. Now that's one aspect of conviction in trading. That's the mental side. That's like a really dumbed down, very simplified version. But then you've got the technical side. Now, if we don't know that we have a technical edge, I've seen Richard's data sheets, I know how well he stacks up his data when it comes to this stuff. If we haven't back-tested a big sample size, or at least forward-tested, and have reliable data that says, hey, if I'd done this, I would make this, why should we trust it? And I would challenge traders to genuinely think about this. If you haven't ever tested your system and you go, well, I just kind of like these zones, okay? How many of these zones have you recorded 1s and 0s to see whether or not they actually make a bit more than they lose? And if you've never done it, then why should you be confident in it? I would almost say we shouldn't be confident in it, because what we're doing is trading our time, we're trading our money, and we're putting it behind an analysis that we have no idea, not if the next trade's a winner, but no idea if the last 100 trades or 500 trades would have produced a small expectancy. So this is why it's super important to have an edge, first of all, that is simple and fits you as a trader. And if you don't have that, then skip phase 2 of trying to be confident in your execution, because why should you try and be confident if you don't know if you have edge? So step 1 is know if you have edge. Step 2 is relentlessly execute on that edge and train yourself over time that consistency produces confidence, not outcome. So we want to focus on the process, not the profit. And very quickly, I'll touch on this, and it won't be for everyone. So let's say you've got a trading edge, and you've back tested it over 100 trades. It's a 1-to-1 risk reward, okay? It has a 60% win rate. And that means that 60 trades made 1R and 40 trades lost 1R. So after 100 trades, the strategy has made 20R of profit, or 20% if you're risking 1% a trade. Now we take that total result, which is 20%, and we divide it by the total sample size of trades. This gives us an expectancy of 0.2. Now what this means is that averagely, every trade you place, you have a 0.2R expectancy. So if you risk $1,000, every trade averagely produces $200. Not on a trade-by-trade basis, but that's the trade value of your trade. Now, my expectancy would be about a 0.17. So it's a little bit under a 0.2. It's typically quite a weak edge, but it makes up for it in volume. So providing I get enough volume, I can still get maybe a 0.3, 0.5 expectancy per day over a big sample. Now, when you know that you're executing at a certain value and what your expectancy is, you can put a dollar value per trade. So let's say, for an example, that Pedro is executing at $5,000. Pedro has a 0.2 expectancy, which means for every trade Pedro executes on, it has a dollar value of $1,000 over a very, very, very large sample size. Now can we start to see how important it is to understand how expensive lack of confidence becomes in your trading edge? If you finish the month and you should be up 6%, for Pedro that could be $30,000. But if Pedro didn't have the conviction in his trades the moment he was placing the button, and Pedro finished at break even, his opportunity cost that month would have been $30,000. Now, most of us in trading, we're in a chapter of our lives where we're trading $30 risk, $50 risk, maybe $100 risk. And the opportunity cost right now is relatively small. And it's, missed this trade, could have made $20, missed the next trade. And over a month, maybe the difference in results is the trader made $30, but the trader could have made $140 based on their data and their spreadsheet, okay? Now, the trader's job is to figure out, well, why am I not executing the way that I should be? And often it's because we're looking for confidence through results. Now, once you identify that, you can build a process, which we talk about in the course in Module 3, of how to get the same result your strategy produces. And providing you have a positive expectancy strategy and you execute on it well, the opportunity cost could be tens of thousands of dollars per trade. And this is where traders often don't get to the bigger levels of funding because they're not executing on the smaller levels of funding or in their smaller account when the stakes are relatively small. So this is our blessing as a trader, is to learn for cheap, because if you can't fix it for $10s and $20, there's no way when you push that to a 100K account and start trading at, say, 2% risk, there's no way that trader is going to suddenly perform better when they've got $2,000 on the line instead of 20. So what may be a cheap lesson today, if you don't grab a hold of it and if you don't fix it and figure out kind of what's holding it back, it could be the thing that stops you from executing on $2,000 next year, maybe $3,000 the year after. And if you're trading through prop firm, it would be very, very easy to go in excess of $10,000 a trade and still maintain some level of relatively clean risk management. But how do you get there? Conviction in your execution and conviction in your strategy before that. So it's a bit of a long-winded one, but this is like a trader of 8 years who's stumbled at every single one of these aspects and realizes, I can't, even now, I've got very good psychology in trading. I still cannot execute confidently and consistently on an edge I do not trust. This is why data and understanding your edge and the variance of your edge is so, so important. Because what do you do when it goes for a drawdown if you haven't tested it? Is it normal? Should you reduce your risk? We have a lot of emotions that come in, and we've got to know how to deal with those emotions. And the best way is the data tells the bigger story. So for me, I say, is it valid? If it is, I place 1 unit of risk, I chuck it in the spreadsheet, and the spreadsheet tells me when the drawdown becomes big enough that I need to stop trading that system. And the spreadsheet also tells me whether I'm executing well enough to get the results of that strategy. And I want to normalize the idea that it's okay to make 1 to 2 to 3% in a month. If you hit 3% in a month and feel like you failed, your expectation might be stopping you from following your trading plan. A 3% return a month, if you can pull that off on average, is going to get you a incredible 35, 36% return a year without compounding. You start to put that in a place where maybe you're aligned with prop firms, and now you're talking several $1,000s, maybe tens of thousands of dollars. And the problem is traders are bent on this idea of, I've got to hit 15% months, 20% months. They'll come. Like, there will be the odd month where you can get these outliers, but they're not normal. They're typically like one of a kind. And the best thing that traders can do is accept, you know what, a good strategy will give me 20 hour a month. And the next month it might give me -5. And the next month maybe +14. And the next month maybe break even. If a trader's not willing to sustain the course, typically they're going to be stuck. And they're going to be back on YouTube trying to find another holy grail system. And the trader is ultimately just caught with an expectation of trading should make money all the time. Nope. Trading shouldn't make money all the time because it's a probabilities game and there are times where we don't make money. And that was one of the hardest pills for me to swallow. Even after 4 years, I was still reworking my framework, trying to find a way to just make it a bit more profitable. And what I learned over 8 years in this game is find a small edge, know it works, and just shut up and execute on it relentlessly until your data says it doesn't work anymore. And align that in a way that just has a decent amount of upside as it goes through the ups and downs. And that's pretty much it. But if you don't do that, you're stuck going round and round and round in a circle, and then your friend will be trading something and that will look really good, and then your other friend will be trading something, and we're gonna have periods where things go super hot. Then we're gonna have periods where things go super cool. And our job as a trader is to take the average of them all. My edge done a 0.4 expectancy. Literally a 0.4. Every $1,000 I would risk would be a $400 gain. And it had done this month after month after month. Then it went through a period where it literally just wrecked at 0.05. Basically break even with costs. And it ruined my expectancy. But I set out with a target. Can I make 5R a month? And 5R at 0.5% risk is 2.5% return a month. That is my criteria. I need an edge that can produce 2.5% return a month. And if it can't do it over a 3-month period, I'm going to step back and I'm going to assess it. Doesn't mean to say I'll stop trading it, but it's got up to 3 months to absolutely ruin its results. And then what I'm going to do is look at the equity curve based on the upswing and the pullback or the break-even period. And it is shocking, actually, over 8 years, how many trading edges I've thrown out that have produced 5R a month, if not a little bit more. And I've got in my head that, nah, it's not good enough. I want 10, 12, 15, 20R a month. And that behavior pattern just keeps traders stuck. It keeps traders second guessing, looking for something better. And drawdowns don't help because you have losing periods where you have a grade A trade and you say, this is exactly what I've been waiting 3 days to find. The market suddenly steams through your stop loss and it does it several times in a row. And now all of a sudden it feels like you don't have edge and we don't want to execute and stuff like that. So it's just important to, as a trader, to quantify 2 things. 1, do you have an edge that you should trust? And if you don't, the course shows you how to backtest, how to go through. If not, get in the Discord on Thursdays and Fridays. We can do some backtesting sessions. I can show you how to collect and quantify data to build a system that works. It is by far my biggest hobby. I love building out data sets and strategies. I could sit there 50 hours a week and do that. You know that moment where you've done like 5-6 months of data and you're like, I've got something else good here. And then the next month just absolutely steamroll it and you go to bed like, man, why? Why does it always go really well? Then I go to bed, work on it the next day, and then it just flops. So have an edge you should trust. And then the second component is look for confidence through your execution, not your results. And typically the money comes as a byproduct of having an edge that you execute on well. That's been my own experience of it anyway. And it keeps it simple and rules-based.
I love that. And I just had a little thought now. Imagine you had several people and one person had Rich's backtesting and data compiling abilities. And then the other person in this team had Pedro's conviction. And another person had Will's willingness to participate and take a trade, and so on and so forth. Like you had this whole team of people that had that one thing, just one thing that they were insanely good at. And you compiled them into a room and you say, here you go, guys. Here is an account to trade. Each one of you bring your little thing that you do so well to that 100K account. What do you think would happen? And I think if I had to have people like that around me with that specific scenario in mind, I would be like, that would be the perfect trader, wouldn't it? you would have every aspect that you could lean on. Myself, I might not be the greatest in terms of my psychology, but I have someone in my team that is really good at that. I can lean on them. I have a lot of conviction in taking my trade, but I'm horrible at analysis. Whatever that might be, you have somebody on your team that can pick up that slack. Not to say that I'm horrible at analysis. You get the idea. The gist is that you as a trader, you're expected to do all of these things and do it well. So you've spoken about this before, Rich, where you've spoken about as a trader, you have, I'm a trader, but what is a trader when you break it up? You're a risk manager, you are a psychologist, and you have all of these things that you need to be good at. That is where the 5ers comes in. We are individually just a bunch of people that are good at one or two things specifically. But as a group, we're really good at everything altogether. So if you are struggling as a person in chat right now, struggling with certain aspects, there's going to be somebody on this live stream, and if not in the live stream, it's going to be in the Discord. And if it's not in the Discord, there's going to be a webinar. And if it's not a webinar, there's going to be a course that is going to deal with exactly that thing that you're struggling with. It's there. The only difference in whether or not it's a success or not is whether or not you, the participant, can take that information and run with it. You either implement or ingest or talk about it or question it or anything, like show an interest. And that's exactly the thing that Richard said now that I really love, is the fact that you were talking about the fact that that is your biggest hobby by far, is doing backtesting and data compilations and stuff like that. And as a data compiler, you're amazingly good at that. But you have these other factors that you're also really, really good at. So it's a real boon to have you as a part of the team and to have access to you free of charge, obviously. So because we can't pay people like this. What are you talking about? We don't pay people that are really good at their job. No.
Mate, okay. First of all, I appreciate that, and genuinely, I can see we've got some comments in chat around that kind of feedback. I really appreciate it. I'm not perfect, okay, and I have the same hiccups that other traders have. When we done this webinar about a year and a half ago about being the self-management in trading, there was like 10 topics that a trader has to be able to execute on. Now, when we talk about hedge funds, what I've been told is that they have an executing trader. They have someone else that does analysis. They may have someone else on the back end that does risk management. And the executing trader might not even know how much is being put behind each trade idea. Yeah. Now, sadly, as retail traders, we are literally stuck. And, there's a funny metaphor, which is, would you rather have something for toes or something for fingers? We're not going to go down that route, but it reminded me of it when you were talking about you might be a terrible analyst, but be an incredibly good executing trader. And I'm thinking that would be a nightmare, because you would have no edge, but you would just be so bullishly biased to your ability to get in and just say, right, I like this, I'm getting in, but there might be no edge. On the flip side, you might be an amazing analyst with the inability to execute on your trade, which again results pretty much in zero. I would say it's probably more frustrating to be that guy, because you can see your analysis working out, and it's like the ship that you built is just sailing off into the sunset, and you're
at least you're not losing money in that regard, where the first guy is losing money. He's really good at it, but there's still no edge.
I would say that person does, because you imagine you built the ship, you've got a ticket, you were about to get on, and you just kind of hesitated, and the ship sails off to the golden land in the future, and you're standing there basically holding your ticket and thinking, that was my analysis, and I'm not in it. And now all of a sudden, what does the trader do? They jump in the water and start paddling their way across, and it's like, no, that's not the boat you built. Now they're revenge trading and doing all this kind of weird stuff on the back of it. Well, not weird, but normal stuff that we do as traders. So just a little shout out to that, because if you're if you want, first of all, a little bit of insights as to what you're struggling with a trader, go check out that video from about a year and a half ago. I don't know if we can link it in chat, but it will give you the opportunity to just look at the different skill sets that make up the whole as a trader. Now, here's the good thing.
The master risk.
Was it called
Was the
Master? I think Master Risk was Victor's. Oh no, the whole event. Sorry, was Master.
The
Risk.
whole event was the master risk event, where you had your whole diary basically with what are you? How good are you as a trader? How good are you as an analyst? How good are you as an executor? How good are you, and so on and so forth. You had like these lists. How good are you as a documenter? How good are you at a data collection? And you had all of that. And then you needed to score yourself. And then we had some people score themselves a 7 out of 10 for everything, and you were like, nope, you're not allowed to choose a 7.
Yeah, there was so I've used that for about 4 years, where I've picked the 10 most important areas that I believe make up my trading, and I score myself out of 10 for every single one. 10s don't exist, so I'm only allowed to go up to 9. That's my highest, and my result is to try and get the highest score I can, and I review it on a weekly basis. I'll give you a couple. So one of them is, how aligned is my funding to my skill set right now? So a little subtle one. You could be a very good trader, but you might be playing it very safe. So I challenge myself to look at how big or small is my allocation. And to be honest, it's a 4 out of 10. And I look at it and say, right, what needs to happen to bring that to a 5? And it might be because I'm just sized down, or maybe I'm demo trading, maybe I'm forward testing, but there's potentially no upside. Now, another one could be, how organized am I in terms of making general mistakes? And a part of having a young child means that sometimes that score rapidly drops in a difficult week, and maybe there isn't as much sleep as you would hope. That score can be quite low. Now, I'm a trader of 8 years, and my score out of 100 is 56. If I was an employer looking at an employee with a trader skill set of 56, I would almost say, you're showing promise, but you're still kind of in the apprentice category. Now, that's how stern I am on myself. Why? Because I don't want to come in king ding-a-ling at 85 out of 100 and go, I got it figured out. I want to be the guy that's realistically saying, look, I'm scoring a 6 here. I want to call it a 5 just to give me a bit more motivation. How do I bring that up to a 6? And there are some things in there that are genuinely an 8 out of 10. There are other things that are a 3 out of 10. And Atomic Habits says we don't rise to the level of our goals, we fall to the level of our systems. Now, if you have a 3 out of 10 because your analysis is terrible, because you don't have a proven edge, then that's where your system breaks down on that 3 out of 10. And it's easier to pull that up to a 4 than it is to take a 5 up to a 6. For an example, so in the Discord, we're running the Trader's Journey, and in a few weeks, I'm actually going to share I don't even know where I picked that up from, but it's something that I feel is just relevant to trading at some certain points.
Yeah, it could be.
So the idea is, in a few weeks, we're going to actually bring this in as one of the missions of the week. And I'm going to share with traders how I score myself out of 10. Now, not every trader should measure themselves equally, because there are certain things that are important to me that might be different for Richard Butler, or maybe Pedro has something else that should be weighted within his 10 things. But I would definitely encourage traders to look at the entire skill set and say, okay, what's holding me back? Because sometimes it isn't just backtesting for another 1,000 hours. Sometimes it can just be sitting and saying, you know what? I need to change the colors on my chart, because red and green, they excite my chimp brain, and they're too, a bright blue background is too much. And maybe I just want to be a bit more objective and a bit less stimulated as I look at the screen. Maybe I put my phone in silent mode throughout my trading day. All these kind of things. One example, a really, really good friend of mine, he recognized that his ability to execute his plan and not meddle with his trades, he said he would always fall down on that. So what he did is he built an EA to execute his trades on his behalf. He said, I've got an analysis. It's very simple. It's rules-based. I just can't trust myself to just keep executing on the trade. When it's in profit, I'll close early. When it's in drawdown, I'll keep adding more positions in. Sometimes I even just delete my stop loss. Okay, he didn't used to do that, but I'm sure traders do. And he said, well, rather than train myself from a 2 to get to a 9, wouldn't it be better to just get an automated system just to execute my trades on my behalf? And obviously that then took him down a different journey. So he would then have to rate his 10 things based on how well his algorithm was trading his edge. So there are certain ways that we can find little workarounds through systems that we can build and stuff like that. And we don't always have to be a 9 out of 10 across every single aspect. But it helps if you are. But yeah, I'm not perfect. I'm 56 out of 100 in my own trader-related score. And I have told myself, Rich, if you don't get that score to 80 out of 100 by the end of the year, then you have done something incredibly wrong. Because coming back to what we were talking about, the opportunity cost, me as an 80 out of 100 is going to do tens of thousands of dollars different to me at 56 out of 100. And it's simply because that one small thing, maybe my trading allocation has me trading $300 a trade, but my analysis and my financial situation, maybe I should be trading $1,500 a trade. That alone 5x's my income potential. So it's little things that it's good to challenge, like, are we playing small because our data supports it, or our financial situation supports it, or are we trading small because we're just an absolute succumbing to our bias, succumbing to our emotions? Pedro's grinning, thinking I was gonna drop a big word there, but in my head,
he was like, "Yeah, Eric, say it."
I love everything you guys have been sharing, and Richard, I think you could create kind of some cards that you could start including those questions that you ask yourself. I think that would be doing really well, even if you sell them or even if you share them. I think those are trading cards. Like, how aligned is my trading based on my skill set as a trader? That's a beautiful question that maybe not many people ask themselves, and that brings kind of above all, the type of questions that you ask, and that's why it's so important for us to ask questions to ourselves, is it just expands our capabilities of thinking, right? It's just, especially when they are open-minded questions like you just asked, and positive questions, which is beautiful. That just takes our brain to a different dimension. And I think that's one really important thing. That's what you just mentioned, which you just as you're completing your thought. Above all, we are trading our own identity, right? And we need to expand our identity to be able to then eventually go into trading those bigger capitals, those actually bigger accounts. Otherwise, if our identity, if everything around us is as you mentioned, is maybe a $20 position size, or a $50 position size, or $100 position size, many times those values are based on usually maybe what the person spends when it goes out, when it's what is used to spend when it's about to buy a gift to someone. Like, no one's like, if that's what you are used to spend, that's what you are then actually going to be used to also risk in the market as a position. And to be able to then go from these 100s to these 1000s, you need an identity shift. You need to start thinking bigger. You need to start actually thinking differently from what you do. And thinking differently can be, yes, maybe I need to start thinking in terms of process. Maybe I need to actually start thinking in terms of how can I increase this 1% on a daily, or to get better 1% on a daily basis. Because again, you don't want to go from 100 to 1000. You maybe want to go from 100 to 150, 200, 400, 600, and now you feel more comfortable going eventually to that 1000 risk per trade. And that's the beauty of it, is literally that identity. And the way you mentioned in terms of processes, how to rank ourselves, how to create systems. I do actually. I think I watched that one, the market reset that you talked about, and I remember because I do kind of that on my own journaling, but based actually more on my execution and strategy. Like, when I'm journaling, I divide my trading in basically 7 different aspects, which is from the analysis, from the higher time frame, the size of the risk, the execution, the target, the stop loss, the way I manage my trades. I split my thing like in 7, 8 different things, and then I grade them themselves, because even when you win or lose a trade, maybe there's some part of this 7 or 8 different aspects of the trade that maybe even when I lose, maybe some of them are done correctly, and even when I win, some of them are maybe done incorrectly. And so that's why I'm trying to always understand and to differentiate. And then gives us a base as well, just like you mentioned, what I can improve, or what is my weakness, what is my strength, and how I can improve. And one of the main things that you actually already talked so many times as well is the ability to quantify these things, because many times we just talk generics, and we think in our head that I'm good at this, but without quantifying or without even putting a number, as you mentioned, 0 to 10, or even if we can go further and actually put a dollar amount, because you did mention several times to pay attention to this gap, and you mentioned my example of maybe I'm losing, of my opportunity cost is maybe $30,000 on the trade, whatever, on a monthly basis if I didn't take the trades. It's really good and really important to actually try to quantify it and attach to actually the reality of what we are doing, and in this case, profit or losses from trading, because that pushes to actually take action. Because if you just constantly think about, I missed that trade, or I could have made more on that trade, but then you never really quantify everything. Yes, it stays a little bit of a memory in our brain that maybe could have done more, but it kind of dilutes and you don't really take it serious. As soon as we start quantifying, and especially in trading, as soon as we start actually seeing the amount of money that we could have made based on actually our skill set and on the process that we do and strategy that we execute, it becomes more urgent. I think that kind of gives that extra step to actually start taking action and to start actually following the routines and the process that we are doing. Because that's the best thing, is to have conviction, because sometimes we even doubt ourselves. Whatever you want to do it, you may still keep that doubt in yourself. Should I actually do these things? Like, should I try to approach it differently or whatever? But you start seeing numbers. Yes, what I'm doing actually correctly. Maybe not yet. Maybe I'm not still executing at the best of my capabilities, but I can see that what I'm doing behind the scenes is working. Like, I'm doing a good job. I can actually just continue to follow through with the process that I'm doing, and this can become a reality. And that becomes eye-opening for everyone, and actually creates urgency, and that actually creates optimism to actually continue on the path that you are doing, instead of just continuously trying to shift gears and try to go check something else somewhere else, and so on. So and in the end, just to finalize it, that in the end, that's actually how you start, as Richard mentioned as well, you start reducing out those doubts, and it gives you more conviction and more certainty on the path and the journey that you are taking, that this is actually going to work in the end.
I had a talk with my wife last night, a completely unrelated thing, but the analogy that we came to is quite apt right now. And it's the idea of being in a dark room. All right. There's a door, there's a door, but you don't see it because the room itself is very dark. So something happens outside of that room that's putting a little of light coming through the keyhole. And you then know, there's the door, but you're stumbling over stuff in the room and you're falling over things trying to get to that door because you see that that's where the light is coming from. All right. That light is, in this case, is you wanting to be a profitable trader. You have these like little indications of what it is that you need to do, but where you are currently is so dark. There's so many things around you. You're stumbling over a table, you're falling over a chair, you're bumping your knee and your ankles and so on and so forth in this dark room because you're trying to just do something in the room, walking around. You're not aimless. You have a goal. You just can't see the steps that you need to take to get to that goal. Now, the light that's coming through that door, that is that I'm profitable, I'm consistent, I'm documenting, I'm working on myself, all of those things combined already. But while you're in the room, it's very difficult to see that end goal with all of the distractions, the dark portions of this room, basically. So what you need to do is you need to find that little candle or that flashlight, something that can help you see around you while you're trying to move towards your goal. And if those are the little things, like for argument's sake, writing in a diary and writing down certain aspects of your trading, because it's really difficult for you to see what you need to change if there's so many things that's bombarding you, or you're falling over so many things all at once. It's that little glimpse in one direction and seeing, okay, I did something today and there's a light all of a sudden over there. What did I do today that made that light be a little bit brighter behind that door? And then you start like looking around here in front of you and you don't quite know what. And then you do something tomorrow and you're like, ooh, I can see the light again. Something is happening. I know this is like a very silly example, but the idea around it is basically that it's those little steps that you need to take while in the room to help you get to your goal. Just having a goal is not enough. You need to know what steps to take in between where you are now and that goal. And the more you do it, the more steps you take, the more things you put into place, the more you're eventually going to see the light. Now all of a sudden the whole door frame is lit up and you can see the door more clearly. And there's a little bit of light that's coming out from underneath the door that's showing a little bit of what's happening in front of the door. And your picture becomes clearer, until eventually you see the whole outline of the door handle and you can then grab the door and you can open it up. Very silly, very cheesy way to explain it, but that's basically like the reference, the context that I got from everything that we've discussed. Doubt is that dark room. Conviction is knowing where to go. Not necessarily getting there and not necessarily having the goal itself, but it's knowing where to go. Knowing when not to trade is just as much conviction as knowing when to trade. Doubt is just as much being before the trade as being in the trade. So conviction and doubt are a balance. They're constantly teetering back and forth on this pivot. You can have massive doubts in one area, but a lot of conviction in other, and it might skew your trading in one direction or maybe another. So I love the whole analogy that Rich had, as well as yourself, Pedro. It helps to give context to something that to a lot of people feel like it's a little vague or it's a little generalized. But understanding also that there isn't one right answer. There isn't a have problem with conviction, step 1, step 2, step 3, 100% it's always going to work. That's just unfortunately not how it works. There's degrees to it. And those degrees are going to be dependent on the person. Once again, you can be how good of an analyst. If you're not a good executor of your trading, you're going to be in net zero. You're going to be stuck where you are, not on the boat. So I agree with everything that you've said, you guys, and I think that it's an amazing viewpoint to have. And by the way, I am in a NAS trade right now. I just took TP1. So just in case you guys were wondering, this is conviction. Even though it looked like it didn't want to go in my way, I took a trade. I'm in it right now, and I'm sitting with it right now. So TP1 was just hit as I was talking, so I was trying to distract myself from not trying to look at the market the whole time. So thanks for that as well.
Well done. Now, how can you journal this trade? You are going to include that you took this trade because Richard Wells was speaking at the same time, and now we need to kind of have a voice of Richard Wells speaking next to you every single time you're about to take a trade on NASDAQ, or is it because of your analysis? Is it because you're in a live stream? Like, how many variables are you going to add into this journaling?
One variable. One variable. Did I follow my plan, yes or no? And that is okay. Richard Wells. That is Richard Wells.
There you go.
Did you or did you not follow your plan? I followed my plan. That's the first thing. But us talking about all of this stuff, kind of, I don't know how to put it. Like, it's like
I know the feeling though. I know what you're about to say. I know what you mean.
There's like this well in your chest that you kind of like feel like, yeah, yes, 100%, yes, fucking yeah. It's like that. I'm not excited.
I remember.
But it's
it's like karma. Here. Okay, so sometimes I have the feeling of karma as well. So when I'm in the trade, okay, so when I execute the trade, and I know that's maybe going to be a trade that may last a few hours, somehow I end up doing really good stuff in the house. Okay, I start cleaning the house. I start like, okay, if I do good stuff, I put karma in my favor, and I think this trade is going to actually end up going in my way. Okay, so I started doing good things around the house. Okay, I started cleaning it. I started doing things that I should be doing. I became a good person all of a sudden. Just okay, this trade is going to end up going well in my favor just because of the karma that now I'm doing good stuff. So the market's going to look after me and it's going to take the price towards the direction that I want. I know the feeling. So if you do good things, most likely the market's going to do also good things for you.
So in that regard, it was like I felt inspired, and for
Exactly.
a lack of a better word, just like we're talking about it, and I was like, yeah, I'm convicted. I have no doubts about this trade. And then I'm looking at the trade, and I'm like, I have doubts about this trade. I don't. Maybe I was a bit too early. And then the more we're talking about it, more I was like, no, shut up, negativity. I have conviction. And then that started like becoming a lot more than did I make a mistake by entering this? It's like, no, I didn't. So that's kind of like the feeling that I was like referring to. It's just that if I had a Richard Wells on speed dial, which I have, by the way, I can at any point in time say, Rich, come on, man. Give me some positive. Come on. Just lift me up, bro. Come on. Just like help a brother out here. Just like tell me I'm pretty or something. Just boost me a little bit, you know? It's what we all need. We all need like Richard Wells on speed dials. Like, if you're feeling negative, think about it like this. And then in his voice, I can't do it. Like his voice is butter. Anyway.
It all works, guys. All this part of the edge. You guys think it's just analysis, like you are wrong. All this is part of the
Yeah.
But I want to say, when you said, no, shut up, emotions, we're holding our analysis. For me, that never worked, because later on I learned that emotions just want to be heard and they want to be basically cuddled. I was taught that your emotional brain acts like a 4 to 7 year old. So can you imagine a 4 to 7 year old is kicking off, going, no, don't do it. And you go, shut up, 4 to 7 year old. We're doing it anyway. That 4 to 7 year old is going to scream the house down, right? So yeah. I was always taught that you look at that 4 to 7 year old and you say, hey, I understand why we're a bit worked up at the moment. And all you're trying to do is just keep us out of harm's way. But do you remember that we had this conversation that your job is to keep me safe and my job is to do the analysis. And this trade, this is a valid trade. So we're going to hold this together. And working with my emotions, I always found worked so much better than going, shut up, you fool, and just trying to put it down and ignore it. So, and I loved your analogy about about getting in the dark room with your missus and turning off all the lights and looking through the keyhole. Is this something you did, or is this actually just a metaphor?
No, so we were having a discussion yesterday. I'm not going to go into the particulars of the discussion or what led to the discussion, but the analogy that we used to kind of substantiate the conversation was dark room is the uncertainty. It's I'm stuck with something, but I don't quite know which direction, or I don't quite know how far I need to go. And because you have this like dark and the darkness, you can add whatever you want as like dark room. The idea just being that it's that directional movements. You don't know where to go. You don't know what you're seeing. You have an idea of what you want, but you have no idea of how to get to it. And then you have these little things that happen in your life that kind of like shows, like I said, that little bit of light that's coming through the keyhole that gives you a semblance of like, there's something over there. What is that? And it's that willingness to explore. It's that willingness to go in that direction. And then obviously it's the fact that because it's a darkened room, there's stuff in the room. So you're going to have these moments where you're going to struggle, where you're going to hit something, you're going to fall over something. So it was purely a contextual based conversation. Not that I locked myself in a room with my missus and turned the lights off and then hoped that there was a chair or a table in the way and be like, oh no, my wife got hurt, I need to go and help her, you know.
So I'll skim over this very quickly and I'll finish up on this because this is a massive topic. But what you reminded me of with the dark room analogy is I was studying about how to rewire our minds more recently, and it was said that the easiest thing, or one of the easiest things for our brain to do, is behave in accordance of how we see ourselves. So I see we had a comment from Novel Navigators in chat saying, to be honest, I couldn't find the cure for revenge trading. It's like I don't want to do it, but in the end, you do it, and then you feel regret after, just like an addiction. Now, when we're in that dark room and we're behaving in a way that maybe doesn't serve ourselves, it's so difficult to behave in a way outside of how we see ourselves. And on some level, we're where we want to be. Heading towards that door that has a little bit of light shining around it means that one day if we get to it, we've got to open it. And opening that door can be massively scary because what it does is it challenges our behaviors, our thoughts, our feelings, and the reality of where our life is at the moment. So as much as we say, I want to get change, I want to change, the actual idea of change itself is massively scary to our subconscious mind. So it's so easy for us to keep sabotaging. Why? Because it keeps us stuck. And even though being stuck is a bad routine, it's a routine. And the brain loves routine because routines create certainty. It creates a level of familiarity. So if you can take anything from what we've spoken about today, it's about recognizing, first of all, have an objective view of where you actually are and figure out what's going to help you move towards the place you think you want to get to, and then start dropping breadcrumbs and figuring out why you're not actually moving towards it. And it's probably because the subconscious mind doesn't actually want to move from where it is because it's comfortable. It's a massive topic. We can talk about that stuff for hours. I'm not going to bore you with it, but this is why trading in itself is like an evolution of just trying to be 1% better, as Will would say, because we can't complete trading. The closest we can get is having a plan and executing on it and feeling relatively calm as we do so. And it's typically a biological state to start to feel a bit jittery and worked up around that execution. And that's a whole different skill in itself. So, hey, Will. Hey, Griff. How we doing?
Hello there. How are we doing?
All good. How are you guys?
All gravy, baby.
Hell yeah.
TP2 just got hit, and my stop loss has now officially moved to break even. So risk-free trade as of right now.
Very nice.
Nice. I've got a nice trade drawn up. I think you got in a lot earlier than I did.
I'm assuming you got in somewhere over here, or maybe on the close of that candle.
No, I did get in prior to that consolidation. I actually got in on the after the just later, little bit later there. Well, okay, above that, but it was the close break candle of that.
So this one.
There you go. Yeah, bang on there.
Ah, okay.
Yeah, it was that break and close above that I was looking for.
Oh, I mean, we had, if I go over to the 15, you'll see a nice little base area here.
Oh, yeah, nice. Yeah.
And
nice.
When we were talking about it earlier, I wanted price to come back down to tap into this area over here, basically this whole zone that we had here, where we were struggling so much. I wanted us to tap into this. We did. And then on the 5 minute, we effectively made a higher low. There we go. So we had the tap here. We tried to push away. We slowed down ever so slightly. When we did try and push back lower, we made a higher low in relation to this one over here. And then we started moving a little bit more convictively, breaking this high swing, the most recent high swing that we had. And I was like, yeah, I'm going to take this trade. So there we are. So far, so good.
Very nice indeed. I had something similar. I didn't have that sort of... What happened... In fact, actually, let me bring my chart up. I'll show you real quick. Something similar, but not similar at the same time, which is quite interesting. I think I've actually got a tighter stop than you. I've got 38-point stop.
Oh, mine's a 40-point, as always.
Yeah,
so
but
40, 80, 120, 160 point.
Yeah, so what I was looking at is the idea of possibly, heading down and shifting direction as we broke under here. And what I wanted to see was a pullback into this zone and a continuation lower. We didn't get it. Now, the fact that we didn't actually get it, we put in a higher low. We put in this consolidation break higher high. I thought, okay, there it is. And it was that shift in structure above here, then consolidation, and then that shift and break above the consolidation, break and close above the 50 moving average. I thought, okay, yeah, there's the confirmation we're continuing price. We're not going to reverse today, or not yet anyway. So
no, I think we got the reversal already. I think not the reversal, we got the pullback already.
The pullback. I wanted to target these highs up here, but it was like just under a 1 to 3. So I thought, screw it, 1 to 2, nice.
Yeah, my TP3 is basically at the high swings. TP4 is above that, so it might be a TP3 and then home to break even. So I don't know, but it's risk free. So yeah,
happy days. Happy
yes.
days, my friend. Happy days. If I was to go any more than a 1 to 2, I'd probably implement your break even style and like taking partials. But with a 1 to 2, I think it's nice enough. You know, providing I've started tightening my stops, whereas before I would have had my stop loss at the low here.
Come on, Will, join the dark side of the force.
Mate, literally that. But then that would have been a 1-to-1 trade. Or if I was targeting highs, not even a 1 to 1.5. 1 to 2 would have been all the way up here, which probably would have been closer to your 1 to 4. And I thought, well, if that's the case,
29,970 is TP4.
29,970. Okay, yeah, so I would have been higher than your 1 to 4 just to get a 1 to 2 if I hadn't had a tighter stop. What did I say? 38. There we go. Yeah, so with that in mind, I thought a 1 to 2 with a nice tight stop actually gives me a higher probability, and providing I correctly analyze the trade, in theory, it shouldn't come down into my stop loss. And if it does, so be it.
Nice tight stops.
Yummy. Nice.
Anyway.
Guys, thank you very much.
Pedro's up on that one. Anyway.
Another great conversation. As always on Tuesdays becomes kind of my favorite time to join sessions here with Richard, and the conversations that he brings for others to listen to and to participate.
They're very thought-provoking, aren't they?
Sorry? Yeah, they are.
They're very thought-provoking. Yeah.
Yep. And positive as well. I see it as a challenging and positive, and that's why I love them. Yeah. Thank you very much, guys. And I'll see you on Thursday, just when Portugal plays again. Midnight. We'll see. Thank you very much, guys.
They will win.
Hope so. Cheers.
Thanks, Pedro. Have a good one.
Cheers, Pedro. Richard W., you doing the Discord today? No, we're going to be doing the Discord on Thursdays, Fridays, but Victor is doing a Discord session today. So he'll be covering quasis and order blocks and price action and all sorts of good stuff. But Thursdays, Fridays this week, that's when you'll catch me in the Discord. Cheers for keeping me company, and I'm going to shoot off, and I'll catch you all shortly. Boo. See you later, guys.
Cheers, Will. Have a good one.
Have a good one, man.
All right.
Alrighty then.
And then there were three, a Griff, a Will, and a Rich. We no longer have a Richard sandwich. That's very unfortunate.
My favorite sandwich, that Richard sandwich.
Is it a Richard sandwich or a Pedro sandwich?
It was technically the buns were Richard's, and then the meat was Pedro.
Yeah, because a Richard sandwich, otherwise it would be like saying a bread sandwich.
Yeah, that's the
I mean, bread is a sandwich, isn't it? But it needs something in the middle. It needs.
So you don't say I'm having a bread sandwich, but then put ham in it. You have I'm having a ham sandwich. So
yeah, that's why I'm saying the bread portion is the sandwich.
So a Pedro sandwich.
So it has to be a Pedro sandwich, yeah. Fair.
Yes. The sandwich portion is the fact that it's sandwiched between two buns.
Of course.
Otherwise, it's a taco, or it's a pizza, because it's got a base and a topping.
I suppose. Yeah, true. Yeah, we'll go with the pizza.
Yes.
Are you guys trading different management, but fairly similar entries.
Between the two of us. No, Will decided to be a thief and steal my strategy, stole it. No, he's taken some of the stuff that I do and just adapted his own analysis to it and evolved it into something slightly less impressive than what I created.
I held him at trade point instead of gunpoint. I held him at trade point. I said, give me your strategy if you want to survive trading. And
then I gave in. I just gave in, and I gave him everything.
He just keeled. There was a bit of a whimper in his voice when he said, okay, you can have it.
What's the ultimate threat you could make a trader? Like, give me your strategy.
Give me your strategy. I'm telling Donald Trump you exist.
Delete your MetaTrader account.
Give me your strategy, or I'm gonna hack into your MT5 and just full margin the NFP.
Full margin. That's probably the worst thing you could do.
I'm trying to think more grandiose than that. I'm trying to think of give me your strategy.
I tell everyone you're trading.
I'm going to deny you access to any brokerage.
But how could you'd have to have access to that ability, or what you could do is give me your strategy, or I'm going to go on social media and say that you trade ICT.
I mean, there's a lot of people that trade ICT.
You know what?
Give me your strategy, or I'm going to tell people that you are JTR's best friend.
You're whose? You cut out then.
I did what?
You cut out. I didn't hear what you said.
You give me your strategy, or I'm going to tell people that you're JTR's best friend.
Hey, right. All I heard was, tell me your strategy, or I'm going to tell a friend.
I'm going to tell a friend.
I was like, whose friend? I was like, what?
Okay.
Have you
okay.
Rich, do you know how blackmail works? Do you know how extortion
Literally.
You're not going to come to my birthday party.
Anyway, Griff, what's news, man? How you doing?
Yeah, I'm all right, thank you. I'm all right. There was some nice trends last week, but no opportunities for me, as usual.
Even when there's an A+ setter, Griff just can't take him.
Well, that's not true. There's just no A+
I still want
setup.
Griff to join us on the lower time frame. Come on, join us.
Oh, I know. It does look fun.
Do it. Do it.
Yeah, you do tempt me. And I like the look of this entry model you've got, where you're taking reversal when you get a higher low, the first higher low, basically.
Yeah.
What other confluences do you need? Because I imagine you don't just need a higher low. It's got to be in the right session. Looks like it's got to go into an order block type thing.
Yeah, so effectively, what I do is I will put continuation trades as well, but my main strategy is on the, as you say, after a reversal has taken or a pullback has happened, and a reaction off of an established area, and then a continuation of that reversal effectively. So we were bullish. We had a bearish retracement into an area with what I call an established zone. Established zone can be a previous session, daily high, consolidation, an area where we had a sudden spike of volatility or a sudden movement away from it, like convectively. And those are areas that I have as established areas. And then I want to see a reaction off of an established area, which is then in this case a wick in this case. And then I want to see the momentum shift. And in this case, the momentum shift was from bearish to a potential bullish movement after failing to produce a secondary low. So we had the low that was created on this established area. We have an attempt again, and then volume and momentum starts picking up to the upside. And then I just look for a bullish candle after an attempt to push lower, which is, in this case, the closure of this candle over here is where I would enter. So we've swept that most recent high with this movement over here. There's a lot of drawings. I'm going to remove some of them because I'm confusing myself. We had the low. We had the most recent high swing before trying to retake a new low. We did not make a new low. We made a higher low. We started sweeping the previous high, creating a new high. I want to see momentum start shifting. I look at the candles. We attempted with vigor to try and push lower. Even with these 3 bearish candles, we could not create a new low. And it was then followed up by a pretty decent bullish candle that took up more than 50% of this whole leg movement that we had down. And then I look for an area to try and get in. Confluences that I would add is, like, for argument's sake, are we below or below? Below. Huh, interesting. Below or above the 50 EMA?
Below or above.
Yeah. I would add the MACD as well to kind of like see if we are breaking out of a little bit of consolidation as well, which is also just EMAs or just moving averages. This just gives me a little bit more confidence that we're potentially going to try and push higher. But I can do that without this, and I can do that without that, and I can literally just trade with this. And then what I do is my trade management is to take partials on my way up to reduce my risk allocation as I'm moving into more of a move.
Very nice.
You know, is it primarily the NASDAQ that you're trading this strategy on?
Yes.
I feel funny about trading the NASDAQ and indices because, I mean, it's great that they're so trending because you get so many excellent trade opportunities. The way that they move, it's really nice. But I feel like I've got my mind segmented where kind of indices are for investing. Like, I feel like it's pretty hard to beat the NASDAQ's yearly return. Like, I know in the last, I think in the last 20 years, it's had 3 losing years, which is great. And, you know, that, like, in the last few years, it's been like 20% returns, you know, since COVID. It's like 20%, 30% returns every year, which is hard to beat. And that's just buying and holding. How do you guys feel about that? Because that's one of the main reasons I choose to trade Forex, because I have my investing with indices and then I'm trading Forex, which, you know, I wouldn't be able to just buy and hold traditionally.
That's really interesting, actually, because I do something similar. So I was very much the same as you, where I was like, okay, well, look, what can I invest in? What can I hold? What can I trade and what can I leverage? And then what can I invest in outside of my industry completely? 3 different investment mindsets, because I like diversification, certainly when it comes to my financials. So I did think to myself, okay, look, if I'm investing in the NASDAQ, the S&P, and whatever else, why would I sort of leverage trade it? And then it got to the point where my currencies were starting to underperform. And I thought, okay, well, now I've got to consider forward testing something else. Whilst I'm still trading my currencies, they may be underperforming now, but what can I test? And Rich was just doing phenomenal in his NASDAQ trading. I thought, Rich, talk to me a little bit about this strategy. So we jumped on the Discord and we were just chatting about it, and I thought, okay, that actually makes a lot of sense. You know, everything he spoke about resonated with me, and it got to the point where I was like, but that's my investment asset, a bit like my investment vessel, a little bit like how you explained it, Griff. And I thought, do I want to leverage what I'm already buying and holding? And I thought, yeah, of course I do. Why the hell wouldn't I want to? If there's a hedge in it, I'll trade whatever the hell I got a hedge in. And it kind of, I almost started looking at myself like, Will, stop being an idiot. If it works, it works. And if it works for both, happy days. You know, and I started thinking to myself, like, it still makes me feel weird. Like, because like if I'm investing like every month into the NASDAQ or the S&P, and I'm thinking, okay, this is my investment vessel, but then at the same time, I've just come out of a sell when I'm long-term buying, but I've just come out of a TP sell. I'm like, oh, this still feels weird. And it does feel really odd. But if it works for both, it works for both. You know, and there's going to be pullbacks. So because the NASDAQ does pull back. Look, you know, you could have caught sells today here. You could have go away. You could have caught sells here. So there's always selling opportunities because I'm trading on the 5-minute. I'm not trading on the 4-hour, weekly, daily, monthly, etc. I'm not swing trading the NAS. If I was swing trading the NAS, then I'd agree with you, Griff, fully 100%. That's why you won't often see me trade the S&P or the US 30 because they are my swing trading strategies. And why am I going to swing trade a strategy when I already buy and hold and invest in that asset? So my thought was, okay, my swing trading strategy is if all else fails. It's the crap, shit's hit the fan. All of my strategies of just completely underperforming and hitting the bricks. What do I need to do? And then I'll move over onto my swing trading strategy just because it keeps me ticking over leverage trading whilst I wait for, everything else to start performing again because the markets are secular. So I did have that thought. Now, I do also test this strategy that I stole from Rich. I did actually test this on currencies, and I can now confirm it does work on EU and GU quite nicely as well, actually.
Okay, so Griff, your original question was indices generally is an investment medium, and you would much rather be trading like intraday or on your strategy of trading itself on currencies because you differentiate between the two. All right, so to give you an example of why I feel like you can do both with indices in this case specifically is because of the fact that it does trend, yes. So buy and hold makes a lot of sense, but buying and holding gives you that lockup. You lock it up for quite a while and hoping that it's going to continue appreciating, which historically it does. But the trading side of things is like that intraday. While I'm swing trading, I'm also doing scalping intraday. It's like that differentiation, if I can put it like that. The idea is that even though it's moving bullishly, it has these pullback sections. It does pull back significantly enough that you can get in on it. Like I tried to mark it up here just to kind of like show you this is a continuation where you have a dip down and then you look like you're going to try and continue lower and then you start pushing up. So you can buy when it's doing its dip down and then continuation. But at the same time, this is actually a better example than what I had down here, is that reversal as well in the opposite direction of it, where you still have that idea of failing to produce a new high and then we start swinging lower. And then looking for a potential entry point for argument's sake over here as an example where you get that swing and then a failure to continue higher and then you start pushing lower. And then you could potentially have gotten in on a trade. Yes, in this case it would have been a loss, but the point still stands that it's still very probable to do reverse trend trading on indices. And that's why I added the partial taking, so that I can lock it up if I'm going to be counter, basically. Generally, buys on NASDAQ works a lot better than sells, even if you're trading intraday, in general. It just depends on when you're selling, because it's very much like any other asset in the sense that it has a push in a specific direction, and then it corrects a little bit, and then continues. Whereas with currencies, it's more of a fight for back to normal or back to the mean, where we're moving away from the mean, we come back to the mean, we move below the mean, we come back to the mean, and we kind of trying to generally stay within that mean band with currencies. But try it. Like go ahead and like test a little bit and look for something that's very that's very similar to your hour strategy that you use, the 1 hour time frame strategy, and look for the NASDAQ to see how it plays around in that. And then maybe you can, as an investment medium, still invest in NASDAQ, as an example, but still do the intraday trading to try and I don't know, like scalp your way through a section, or kind of like just eat a little bit off of the chart. Let's put it like that. Just like steal a little bit here and there.
It's interesting. Yeah, I can see how diversification's a benefit, because you're not tying your money up in one strategy. There's sells, there's scalping, there's swing trading. It doesn't matter that the instrument's the same. But then I never thought about the liquidity of it, how investing, you can't pull your money out because it's like one long position. You can't sell that. Whereas in a trade, on the 5-minute time frame, you'll be getting your money back in 2 hours, and then you've got it all in cash again.
Yeah, exactly. You can liquidate it pretty quickly and then reinvest it, liquidate, reinvest, and you're a lot more lucrative with your money when it comes to, like you said, leverage intraday trading, certainly on the lower time frames.
One interesting thing I've recalled, for a while I had a really big trading account, like way more cash than I needed to have, and it was just sitting there. And when you're trading 1% per trade, it's crazy, because I pretty much never have more than 2 or 3 trades at a time. That's the maximum. That means I have 97% of my accounts cash, just sitting there, not doing anything, which isn't necessarily a very good investment. And I was thinking about how my max drawdown is around 15%. That's the worst ever. And even then, I have 85% of my account in cash just sitting there. So I'm never going to use like 80% of the cash in my trading account. So I invested half of it in the S&P 500, and then I just traded 2% risk on the remaining half. So it was as though I'd invested half of my account just to kind of reduce the amount that I'm getting hit by inflation, I suppose, because of the fact that so much of my account is just not being used. By investing half of it and risking 2%, it's still kind of like I'm risking 1%.
Yeah,
Technically,
if that makes sense.
I was going to say, so you're still because the money's still there. You can still, if you wanted to, you can liquidate it and put it back into the account, worst case scenario. But you're still trading, let's say you're trading with $10,000 in an account. You take 5 out, you invest 5 in, so you've got 5K in an account, but you're still trading it like it's 10K, because in theory, you can liquidate the investment 5K to put it back in and reimburse the account until you grow back. And then you can take it out again. So it's just simple, like risk management, it's like portfolio management. But you're still able to trade, like you said, instead of 1% risk, though, it's 2% risk.
Yeah, I think that's a pretty good medium, like a good in-between of when it comes to investing and trading. Because also, like, if the S&P 500 account grows from the 5K investment to 6K, well, now your 1% risk is bigger as well. So you're just making that money, which is sitting in MetaTrader, work for you a little bit, like passively on the side, because you're not trading your entire account. And that's what makes prop firms so good in a way, because, if you get a 100K prop firm account with 10K max drawdown, realistically, you kind of have a 10K account because you can't exceed that. So it's kind of treating your personal account a little bit like that, where you're treating it as though what is my max drawdown? My max drawdown's 15%. I'm going to treat my account like that's the maximum, so that you're kind of not wasting 80% of your money just sitting there. Yeah, worth thinking about.
So, something to take into consideration is being margin called. Obviously, brokerages have these, let's call it fail safes, to protect themselves and yourself as well, to margin call you if you reach a certain level of drawdown effectively. So even if you do have $1,000 in account, if you say have a margin call of 70%, if you reach 70% in drawdown, you're left with $300, and as an example, you're going to lose that account regardless. They're going to tell you, look, we're suspending your trading. So even then, your $1,000 is only 70% of that, technically. And the idea of doing like prop trading as well, when exactly like you explained now, you buy a 100K account, you technically have $10,000 in drawdown available to you. Ergo, you have a $10,000 account. Once you lose $10,000, you're done. It's the equivalent idea of saying, well, I'm trading 100% of that account if it were a 10K account.
Yeah.
So you have 100% of 10K available to you, but if you did the exact same with a brokerage, there might be a margin call zone that is going to be even slightly less than that. So in your case, you take 10K, you go put that in a trading account, and then you just trade 10K. And every time you reach a certain level, you just extract and you leave yourself with a 10K. And technically, you still have a 100K account equivalent that you had, with, for argument's sake, a prop firm. It's a really interesting way of looking about it, I think. So
It is. Yeah, it's a super interesting concept to think about.
Because, like, the way I trade my prop firm accounts is, like I said, I've got 15% max drawdown historically. That's the worst I've managed to get. So I try to give myself room for 21% losses on my prop firm accounts. So that means when there's 10K, well, when there's 10% max drawdown, I risk 0.5% per trade. That's how I figure out how much risk to use. And yeah, I thought, why don't we do that with our personal accounts? Like, why do we do 1% risk and leave 80% of the account just sitting there? So yeah, investing the other half, or maybe risking a little bit more, dare I say, isn't necessarily a bad strategy if you're comfortable with, you know, seeing big losses, and you're very experienced. Like, obviously that's something to explore later on in your trading journey.
sorry, you guys saw Sol's email for a second. Sol at The5ers accidentally pasted when I did not
Nice.
do what I was supposed to.
I like this from Unbiased Trade as well. I have started to value my funded account based on the available drawdown, not initial account balance. It helps me a lot with my emotions. I love that, because that is exactly what Rich was just talking about, is actually, you know, having that risk management mindset of you're trading your 100% drawdown, not 10% of the account balance. So instead of actually limiting yourself and saying, oh, I got 10K, I got 100K account, but I've only got 10% drawdown, blah, 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 blah. Instead, think of it like I've got 100% of a 10K account. And it does help a lot when it comes to risk management. And to be fair, a few traders I know have actually started implementing that Unbiased Trader, and it has helped them a lot when it comes to understanding their risk. Also, still love that profile picture. It's absolutely epic.
This that I'm writing here is to answer this question by Mache asking, what are your TPs based on? So my TPs, I have 4 take profit points. They are multitudes. Oh, sorry. I made the same mistake again. Jeez. I accidentally moved the screen in front of us instead of this screen. TP1 is effectively a 1-to-1. So if I'm risking 40 points for TP1, TP2 or TP1 in this case would have a 40-point reward, so equating a 1-to-1. TP2 is a 1-to-2, TP3 is a 1-to-3, TP4 is a 1-to-4. So I take partials at TP1, so I remove a quarter of the risk. So each one of these profit points has a 0.25% risk associated with it, so that the total risk that I have on the board is equal to 1%. So I break up the trade into 4. Each profit point has a 0.25 risk associated with it, and then it's just a multiplier of that risk. So if I take TP1, if TP1 gets hit, that is a 0.25% profit. And then a 0.25% is reduced from this trade, even though the take profit or the stop loss is still at the same spot. So I'm just reducing my risk as I'm going up. The moment I reach TP2, I move my stop loss to break even, making it now a risk-free trade. And whatever I then get after that point is just bonus, basically. So if it reaches TP1, I lock up a 0.25% of risk, but I'm still left with 0.75% risk on the table. If I hit TP2, I lock up another 0.5%, bringing my profits up to 0.75% of my risk, but my risk is now 0. If I hit TP3, that locks up another 0.75%, which then equates to my total profit being 1.5% of what my initial risk was. And if TP4 gets hit, that is another further 1% added to that, which then equals my full movement if TP1, 2, 3, and 4 being hit, equaling 2.5% of my initial risk, basically. So 2.5 times my initial risk. I don't know if the way that I explained it makes sense.
Yeah,
TP1 is 40 points. My risk is always 40 points. TP1 is 40 points. TP2 is 80 points. TP3 is 120 points. And TP4 is 160 points. If you were looking at it from futures or like trading a futures account in points. So it's the equivalent of $1 of NASDAQ movement is 1 point. And then just to follow that same one up with this, Kavish asking, I thought NQ is like gold. Like even you take a micro lot, it will risk like $5 per 150 points. But I just scored a win on NQ with a 0.01 and only got 70 cents. So that's like understanding the difference between CFD and futures. So with futures, you have a contract size minimum of 1 micro. And 1 micro, if you have 1 point of movement, it's equal to $2. So with CFD, you can go as low as 1/100th of a contract size, basically. So you can go as low as 0.01 of a lot size, LOT, lot size. So that then means that it is broken down even further. So there's that theoretical minimum would then be the 0.01 times the value of 1 lot's movement. If it is $10, then you would get 0.01 multiplied by 10. In this case, would then give you 10 cents. So every movement would then give you 10 cents. Every 1 point of movement gives you 10 cents. Just to give that as an example.
Yeah, I'm hit TP4 now. My main TP I've just entered in on my stream account now as well, and my TP is now. In fact, where did you say your TP4 was?
29,916.9.33.
969.
Yes, 969.33.
Yeah, I'm 967.
And then Wesley is asking, Richard, does the position sizer EA you all use do it for you automatically? Yes, but you need to set it up.
That's only because you're posh. You've managed to like whisper sweet nothings into its ear, because I look at it, it's just so complicated.
Okay, I'm gonna walk you through exactly how I set mine up. Okay, when you have the position size EA on your chart, you go to the main tab section. On the main tab section, this little plus that you have here, first and foremost, ensure that you've locked the profit point. You have a 1x multiplier. I can make it 2x just to give you an example. Let me show the... there we go. It's all the way down there. When you've locked it to this multiplier, this is the multiplier. This is this 2. The stop loss is going to be what you drag around, and then your take profit is going to be a multiplier of that. So it's a 2x multiplier of whatever your stop loss is. So if my stop loss is 5k, then my take profit is going to be 10k. So what I do is I put my multiplier on 1. Okay. And I then add 3 extra take profit points. So the first profit point would be, in this case, a 1-to-1 R. So I'm risking 1% to make 1%. If I add another TP, you'll see it adds it on the screen. So now there's 2. I have a third one and I have a fourth one. So I have 4 trades in total. And then you'll notice here on the left-hand side, on the right-hand, sorry, 0.66, 0.66, 0. It's going to hop around a little bit, but it gives you the same idea of the risk being 0.25%. Then, once you've done this, you go to the trading tab. And on the trading tab, you will see that you have a share in profit here. So each take profit point will equate to 25% of the total profits being taken off the table. So you can change this to equal 100% at some point. Like you can have it 40, 30, 20, 10. You can mix it up however, 40%, another 40%, 10%, 10%, however you want to. But the way that I do it is I take off 0.25% profit every single time. The break even, when I hit TP2, I select here. So because my trades is 40 points, whenever I enter a trade, I know that TP2 is a 1 to 2, which is 40 times 2, which is 80, which then equates to 800 points. In this case, with MetaTrader, it references the decimal points as if it's 1. So the second decimal point is 1 sec, the first decimal point is 20, or in this case 10, then you have the decimal point, then you have 1, which then equates to 100, and then the second one here, so the second price point equates to then in the thousands. So set it to 8,000, which is what my TP2 is, and then once I do that, if I take a trade right now and price hits TP2, it's going to automatically move my stop loss up to break even. Automatically. I don't have to do anything. So when I enter a trade, the only thing that I ensure that is in place is that my stop loss, in this case, is as close to the area that I want it to be. So in this case, let's say it's, I'm gonna take a trade right now, just to show you. Okay, my trade is in. Come on, hide it. Okay, it's right there. The trade is in. All of the points have been put in. All right. What I do then is I just go and check the first trade that it is equal to 4,000. So in this case there was a bit of a change there, but you'll get the point now. Order is in queue. I modify the next one to 8,000. I do the third one to 1,000, 12,000 in this case, which is then equal to 120 points, and then the last one, sorry, to 1,600. Or 16,000 in this case. It's not updating. Let's do this. There we go.
They just love it when it doesn't update when you're trying to make an example.
Yeah, when you're trying to prove a point.
You're trying to show how it works, then it doesn't work, and you're like...
When you're trying to prove a point. There you can see it's now on 4,000. The next TP2 is at 8,000. So what's going to happen is, hopefully, this example is going to play out as I want it to. But hopefully, TP2 is now going to be hit, and then this stop loss, the remaining stop loss that's there, is going to then land on break even, and then my trade is done. So at this point, I'm done. What I do is I minimize and I go on with whatever else I was doing, because now the trade is basically automated, in as automated as it can be. And then auto take profit taking is just literally just that. If it hits TP, it's going to clear a portion of the trade. It's going to remove a portion of it. It's going to close the trade down here. As simple. Just one of them is going to. So the way that this EA or this position sizer works is it breaks your trades up into equal trades. So instead of entering one trade and then taking off partials as it's going up, it's entering 4 trades. And then it closes each one as if it was an entity of itself. Does that make sense?
Yeah, assume Wesley as well. That's actually pretty cool. Thanks. Yeah, dude, it is actually a really cool feature. Yeah, it is really, really cool.
As automated as I can make it without completely letting it over for an EA to take over my trading.
I was gonna say, mate, that is, like you just said.
Yeah.
You have automated that to the max without automating it. So you're still technically trading, you're manual trading still, but with as little effort as humanly possible. All you need to do now is find the correct entry according to your strategy and according to your plan,
Exactly.
execute and make sure everything is set up correctly.
Yeah, and there's a nice thing as well with this position sizer is you can have your where is it now? You can have your shortcut keys set up however you want to, but you can also have defaults, which I am looking for here. So you can set defaults if you want to, and then whenever you open it up and you basically say trade default, then it's going to trade the default settings. So if you're only looking for longs and you want to always risk 4,000 points and you always want to take 1% of risk, you can do that with your defaults here, and then you can just trade the default as well.
Mm-hmm.
So there's cool ways to play around with the position sizer, and this to me is the best way that I found to utilize it so that my trade execution is as simple as I can make it without having too many steps. So I know to enter my trade, it's Shift T. I just need to make sure that I don't trade without my lines being hidden. So if my lines are hidden, I can't take a trade. The lines need to be shown. So I can see it. Great. I can see where it's going. I press H to hide or H to show it again. If I want to take another trade, I press a sell. I press S to switch it. And that's the only three things that I use. It's just those for the trade execution. It shows it. I can switch it. Okay, cool. It's the right direction. I drag my stop loss where I want to have it. I Shift T to execute. I hide it. And then I hide the panel as well with the tilde key, which is just underneath the exit next to your 1.
That's so cool.
So
really
trade execution to me is, I make it as simple as I can make it. It's as quick and easy as I can make it. I don't have to go and drag now to stop loss. It's done and dusted. The only thing that I have to ensure is that my levels, my take profit 1, 2, 3, and 4, is where I actually want to have it. And then I leave it. Is that a live account, Rich, or a demo? No, this is a demo account. This is one that we play around with on stream. I use it to do some illustrations on how to do certain trades and stuff like that. If this trade were to lose, there's no monetary loss of any sort to me. And if whatever it gains, there's also no monetary gain. This is a purely demo account. That I think we use this account for the 1v1 battle. Yeah. So
They were fun.
It's for illustration purpose. Griff, you're joining next one. You're joining. I'm telling you now, you're joining the next one.
I was the ring girl in the last one.
Yeah, I want you to not walk around with a sign. I want you to be like, all right, guys, I'm destroying Will today. Will is going to have his ass handed to him by Griff.
Sounds fun.
Yeah.
Oh, man,
so
I'm just waiting
this
for
was just for
NASDAQ
illustration.
to break the high now. Why won't it break the high? It's like it's at that turning point as well. It's like that moment where it's at the point. If it's going to reverse, it's going to wick this high and drop. If it's not going to reverse, it's going to break and close above this high, and it's going to continue to TP. So,
do you know what I would have loved with this position sizer? If you had a close all trades shortcut key, which I don't know if it has. Does MetaTrader have a shortcut key to close all trades?
MetaTrader?
Yeah, does MetaTrader have...
I'm sure it does. Let me Google it. I'm sure MetaTrader has a shortcut key to close all trades. I know it does on your phone.
Because what I always do, if I want to, let's say there's news coming up or something and I still have multiple orders, I right-click down here and then I say bulk operations and I say close all positions.
You could try Alt F4.
Yeah, shall I try Control Alt Delete after that one as well? Alt F4 will just do exactly what we say. So you can say like close by NAS positions.
Okay, so I got here. There is no native single key keyboard shortcut, closing all positions simultaneously in MetaTrader 5. However, you can achieve this instantly using the built-in bulk operations menu, keyboard cycling on or a third-party tool. So method 1, open the toolbox window, press Control T to open if hidden, and then click the trade tab. Right-click.
Wesley, anybody in chat, don't. Just don't. Just don't.
Yeah, that's
Really so funny.
Yeah, that's such a troll thing to do.
Have you guys heard that MetaQuotes are working on an MCP? If you know what that is.
Please educate us. What is an MCP?
It's have you seen with these AI chatbots, you can integrate third-party tools using something called an MCP. So for example, I don't know if you know Claude, but Claude is like really bad at graphic design. But there's all these different graphic design MCPs which you can plug in, and then suddenly Claude is really good at graphic design. And anyway, MetaQuotes is working on an MCP, and what that means is, well, they've released it into beta apparently. I saw it on LinkedIn. And what this means is that you can put MetaQuotes MCP into your AI chatbot, and you can say things like, hey, open a trade for 3 lots on this pair. And you can say, hey, close all my positions. So you can trade conversationally with your AI, and it will execute your commands for you.
Hey,
pretty
cool.
interesting.
Analyze gold and take a trade that must win.
You can say like take 30 trades or like close all my trades, and it will execute it, because the MCP is like, it knows where all the buttons are, it can press them for you, and it can do it much faster than a person. So yeah, it's interesting to see the future.
Yeah, I never actually thought of it like that. But that would be nice. I would just not trust it.
Me neither.
Yeah, fair, no, true. Yeah, 100%.
At least initially, I would not play with it.
I definitely won't do it on any of my accounts. I would do it on a demo account, or I would want to test it to the point where I know the inside and out of how to do it.
Oh, mate, even then I'd struggle.
Yeah, I mean, fair, but it's like this EA that we have with the position sizer. All right, you're still allowing this thing to take over the management of your trading to a degree. So there's a semblance of trust that this thing is going to do what you expect it to do. So I don't know if I have it in me to just let it into this AI's hands and say, there you go, do, and then I just
do work.
Yes, just do. I don't know. Like, I don't know if I could trust it to that level.
Yeah, with real money, it's pretty scary. Like, I can see it works with a lot of things. But yeah, I mean, maybe not for trade execution, opening, closing trades. Maybe you can choose to toggle that on and off. But you can still use it for maybe like getting account analytics and insights and hey, what's trending? Which pair of my 20 on my watch list is trending the most right now? Which pairs are forming a descending channel. I expect things like that. I just Googled that, and delete everything from my root directory was what it does. So I'm glad I don't have a Linux computer.
That's the thing with like, because Wesley is a software developer, MGN Thalantir is a software developer. They just know all of these things. They know that if you so MGN is my brother. If he says something about the PC, I'm like, okay, Sean, are you sure that this is what I need to do? And he's like, yes. You want this because this, and this, and this. But when he's saying joking stuff like this, then it's just like, no, I'm not doing that. That is danger. That's dangerous.
Yeah, maybe you shouldn't trust
it. There's a little hee-hee at the end of it. Oh, you should press Control Alt Delete. Hee. Yeah, no, I'm not going to do that.
No.
I have to shoot off a little earlier today, if that's all right. 2 minutes early.
No problem.
No.
Enjoyed talking to you guys. Interesting topics, and I'm looking forward to seeing you both next week, and everyone in chat.
Awesome. Griff, have a great day. Good luck with all of your trading, and good luck with the other extra stuff that you have going on in the background. We'll love to see how that works out.
Appreciate it. Thank you.
Yeah, all good, mate. All good.
See you soon. Bye.
Cheers, Griff. All right, Will. I'm assuming you are also heading off, mate.
I am going to be heading off. I'm bored of this trade as well, man. If this just hits break even again, I may just flog it off. I'll hold it. I'm going to hold it.
Okay.
I'm going to hold it. There's no reason not to. If it breaks and closes under 29,838, then I'll probably close it. But until then, it hasn't broken and closed above the high. That's the only issue. So I'm going to set and forget. I'm just going to walk away now. I'm going to go have some lunch. So in the meantime, guys, I'm going to love you all and leave you. Thank you very much. Make sure that you stick around and harass Rich and ask him some awesome questions or some awful questions. Ask him whatever the hell you want, I suppose. Depends whether he's going to answer or not. It's a different situation. Anyway, guys, thank you very much. See you all el mañana. Peace.
Cheers, Willem. We have broken the high of this previous swing. We just didn't close above, which is sadness. It's still bullish. Just it's slowing its ascent now ever so slightly, but I'm gonna leave mine to do its thing. Anyway, everybody in chat, in half an hour or so, we will have Samir and Victor join us for the stream, and then they will go through the pre-New York setups, basically. Samir, being a NYSE trader, trades the New York session primarily, and then Victor being more of a Quasimodo trader, so waiting for certain setups to arrive, and then he would trade based off that, and that can happen at any point of the day. As of right now, my trade is still ongoing. It hit TP2. My stop loss has automatically been taken to break even around this point, and now we're just kind of sitting here. If I were to close this trade right now, it would basically lock up another 0.75% in total if I were to close it right now, but that's okay. As it is moving in this area, it's okay. I don't mind it coming back and hitting stop loss now, because I've seen in the past, for those of you that's probably going to ask now, why not just close it now and lock up another few percent? The problem is I've seen price sometimes do this. So it comes back into a little bit more deeper, let's call it drawdown from the previous swing points, like over here, and then it reverses and continues. So it's happened sometimes. And a few of my full wins that eventually hit TP4 has done that, where it had a deeper pullback and then continued up. So that's why I don't try and close the trades earlier anymore. What I do from time to time is, if we have, let's say hypothetically, we have high impact news that happens there, then I'll close the trade, because I don't want that sudden volatility spike of doing this and then picking up and then knocking me out. I'll do that. So sometimes you get like a bit of a, just a little bit slipped on your trade. So in that case, I will close it. Success is asking, Rich, why US tech always? So I trade NASDAQ predominantly. That's my pair that I normally trade. So the reason why it says US tech is because I'm using the IC Markets data feed. I have found that the IC Markets data feed is the closest to the 5ers feed. Now, the 5ers is not receiving their feed from the same place as IC Markets. They have multitude of feeds, but this is the one that closest resembles the 5ers feed. So if I'm taking a trade on my 5ers account, I use the US tech, which is what IC Markets calls the NAS 100, on their data feed. That's why. So you can use any data feed you want to. You can use Awanda, you can use Pepperstone. It doesn't matter which data feed you use. The reason why I'm using it is so that my analysis and my trade execution is as close to each other as possible. It's very jarring to have, for argument's sake, a different data feed, and there's a 10 to 20 point difference between the executing price and the analysis price. So it's a little annoying, and yeah, it's just how I go around. That's a gem you dropped there, Rich. IC Markets is the closest to the 5ers. For this asset, I found. So there could be other assets or other brokerages, let's put it like that, data feeds, that may be closer. This was the one that I found that was just a little bit more consistent from what I was looking for. And on top of that, I also have experience with IC Markets as well, the actual brokerage. So I don't know if it's like a trust point or whatnot, but for me, it's just like it's close enough. Yes, it's not always so. You get like spread differences sometimes, and you also get like increases in volatility. Like imagine here it's showing a gap on TradingView, but when you look at IC Markets or you look at the 5ers terminals, there's no gap there. So there's sometimes data differentials, but in general, to me, it's negligible. Let's put it like that. Yeah. Samir and Victor will be here in about 25 minutes. So their time slot is 12:30 GMT. So they will be here very soon. Good question this by Alex Lowe. Why not take now and re-enter at a hypothetical low? So the thing is, I'm a momentum-based trader. I like seeing shifts in momentum, and I would like to participate in those shifts, but I would also like to participate in continuations of said momentum. In this case right now, I could always just re-enter. It's not a problem. But if you consider that we had 80 points of movement from this point down here to that point up there, this was 80 points of movement. And it took how long to get there? From my entry to the time that it hit TP2 was basically 55 minutes, so about an hour, all right? How long did it take for it to reverse that full 80 points? From that point there to reverse that same 80 points, let's just get it to 80 points, took 15 minutes. So to me, this signifies that there is a shift in momentum now, all right? So if I were to enter again at this theoretical low, which is somewhere down here or even down here at this point over here, I don't know what the momentum is leading into it. So I could, hypothetically, enter another trade here with the expectation of holding it up higher. I would have the same take profit point, same stop loss and stuff like that. But the difference is the momentum leading into it. So I don't like entering these kind of trades where I have a sudden change in momentum in the opposite direction of my trade. I hope that makes sense. I hope that how I explained it now makes sense. I'm also a trader that wants the confirmation. So I don't trade on speculation. If it hits this point, I'm just going to take a buy because we're in a zone. I want that confirmation of rejecting the zone before I enter. So I hope that how I'm explaining it and what I'm explaining makes sense. Or at least I'm explaining it in a way that makes sense. So right now, you can effectively see that even though we're above the 50, if I just move this out of the way and just that a little bit, we have a theoretical, where's that box now? We have a theoretical high that has, high that has struggled to be closed above. So we're losing that upward push. What we are doing, however, is we started breaking that most recent low swing. So this now makes me want to think, all right, if we were to continue going higher, what do I need to see? I need to obviously see price come back to that high and then break it. That's obvious. But the way that it's setting up right now, it feels more like there's this potential for it to want to try and go a little bit lower. Maybe come and retest these lows that we had down here. The reason for that is we've swept a most recent low swing. We've made a high, but it was not convincing. It was with a little, there was some nice momentum going into it, but the moment we swept the high, that high of that candle, we failed, and we immediately followed up with 1, 2, 3 bearish candles. And not small candles either. These candles are large enough that they completely eat up the whole move that we had from that swing point. So in this case, the momentum is shifting. If we look at the time, it's currently 2 o'clock my time, which is 12 o'clock GMT. 12 o'clock GMT, we start seeing a little bit more of a wake up in the New York, like pre-New York, basically. So New York session is going to open up in an hour and a half. So this is that pre-New York session that's now coming into play. We're seeing a little bit more momentum, a little bit more volume, seeing a little bit larger candles, a little bit more conviction. This is that time of the day where my trading specifically might take a bit of a loss. If I were to try and trade this now, because the volatility is picking up, we're getting closer to the New York session. The New York session is going to have its own volatility, its own volume increases in general. So right now, my trade is where it is. My back-tested data is not going to really provide me with much evidence to say enter again, to push up. I take one trade per leg, basically. So we had one downward leg. If I wanted, I could have taken one trade on this downward leg. I don't trade this area because I'm at the gym. I trade the London session. I get one trade during the London session. On average, my trade lengths have increased now from about 40, let's say 40 to 45 minutes to above an hour on a trade for the full play out, whether it's TP 1, 2, 3, and 4, then stop loss, or TP 1, 2, and then break even, or whatever it's generally. So the time it's taken for me to get my trades during the London session has increased, but my New York trading time has reduced. So my time in trade during the New York session is a lot faster. So yeah, I hope that answers it. So Rich, you mean it's better to do analysis on a broker whose data is closer to executing broker? For me, it is. Like I find for me that it is better, because if I'm looking at the price right now, let's say I analyze on IC Markets US Tech, but I'm trading Owanda charts as an example, or I'm trading with Owanda as a brokerage. Here, I might be doing my analysis and I see, no, this is great. This is a great place to enter. But when I go and look at the Owanda chart, I've already been knocked out of the trade, where this one is maybe still ongoing. So I try to have my executing data the same as my back-tested data. I don't execute on TradingView, but I don't backtest on MetaTrader. I backtest visually on TradingView, get some sort of analysis and idea, and then I do forward testing on TradingView, on MetaTrader. So on MetaTrader, I want to have my forward tested data and my execution data the same. So the two of them together helps me have a little bit more confidence that if I'm going to do my analysis on TradingView, that it's going to be as close to possible as my execution data from my forward testing and my executing trades on TradingView. Simple. I mix auction theory with breakout. So I like a break and migration to a next auction bracket, or break and reject back into range. I kind of like that. It's the idea that you're going from consolidation, breakout to consolidation, effectively. So you're seeing that there's agreement on price, a breakout to agreement on price. So every time you have basically consolidation as an example, that's basically all of the market participants agreeing that this is the fair value of this asset at this specific point in time. If we have a break, in this case, it broke up higher, you're going to reach another area. Obviously, you're probably on the higher time frame. I'm assuming that you use higher time frames, because you get a lot more false breakouts, false retests on the lower time frame than you do on the higher time frame. Just an assumption. Just give me a second. I'm just reading a message here quickly. All right, cool. So right now it looks like it's hit my stop loss. I'm just going to confirm. Yes, I am out of this trade. All right, so this trade is now done. I'm just saving the screenshot. All right. And then all I can do now is then just delete everything and move on to the next trade and wait for my next trade to prep, basically. So generally with NASDAQ now, I would only take a trade after 4 o'clock my time. So that would be half an hour after New York Open. So New York Open, my time is 15:30, so 3:30 my time, which is 1:30 GMT. I don't trade in this area here at all. So generally what would happen is you would have these large volumetric spikes in price, which does not play well with my strategy. So if you look at what happened yesterday, this first half an hour, so 5, 10, 15, 20, 30, so this first segment here is showing how much movements was this. From the low to the high is 280 points of movement. So for me, this is too much volatility, and it's moving up and then it suddenly moves down, and it just moves around way too much. So for those of you who were here yesterday watching LJ and his trade, I'm always skeptical the first half an hour, basically, of the New York session. Even this sell-off here, to me, makes it very difficult for me to get into the trade initially. Where I think if you're somebody that has like this breakout mentality, where you basically take the high and the low of the first, let's say, half an hour or so, and then you wait for a break of sorts, that you can then say, oh, okay, cool, we get the break here. I'll take take a sell there. I'll have my stop loss just above that previous candle, and I'll do a 1 to 2 or something like that. This kind of movements would work for you because there's a lot of volume. There's a lot of volatility suddenly pushing price in one direction. I can't participate in it because it can just as easily, and this is 90 pips or 90 points, sorry. If I had my regular trade, look how small my stop loss is in relation to the candle sizes. So one candle is enough to knock me out of my position, which I don't like. I don't like that. I want to have the opportunity to be in the trade a little bit longer, or at least if it starts moving, to provide me a bit of opportunity for price to slow down a little bit and choose its direction. So I did not take any trade here. Even this movement that we had here, we had the complete sell. We had a sell-off. We swept this area over here, which was the last time that we had a very strong reaction, which was at rollover. We tried to push lower, we failed, and then we had this volumetric bullish candle indicating, okay, we're not selling off anymore, we're going to start pushing up now. And that's eventually what happened. If I wanted to get in, I would have had to have gotten in on the close of this candle here. So I didn't. Get in on this trade. It would have been, once again, hindsight trading. So if I just take the close as an example, and I take my strategy, it would have looked something like this. So it eventually would have been a winner. Would it have hit TP2 and then sold off? No. So I would have hit TP2 and then continued with that. So this would have been a full 2.5% trade. Had I taken it, didn't take it. Didn't want to participate. To be honest with you guys, this sell-off that we had here scared me a little bit. Even though we had the price push back again and fail to push lower and then start showing a little bit more of a bullish trend, it was a little bit scary. I did not really think that we were going to come back up again to that high point, considering how much we rejected and how deep this push was. So, to be honest with you, that was purely just a fear response. Let's put it like that, not entering. Had I entered, it would have been a great trade, but I don't know that in the moment because all I see is this. That's all I see. And I'm like, is this going to continue? I don't know. Are we going to reject here? So if I take the fib, that is not even at the, well, in this case 0.75, but this is not even at that 0.718 zone either. It's at just above 618. So to me, it would have been like, I don't know, I'm not sure if this is going to continue going up. But anyway, so just a little bit of food for thought. We've got Davide in. Hi, everyone. Hello to you. Where's price? Oh, there we go. I map them out beginning of the week and watch price ping pong between them. Can take any setup that forms inside. Oh, okay. That's pretty cool. I like the weekly time frame. I check it like every now and then, just to get an idea of if we're still trading within extremes. Because if you have a look at NASDAQ, this is NASDAQ on the weekly, you have a few weeks of bullish momentum, a few weeks of bearish pullback, a few weeks of bullish momentum, a few weeks of bullish pullback. Bullish, bearish, bullish, a little bit bearish, bullish, bearish, and it does that on the weekly. So here we've had one of the longest bullish runs, and then a few weeks, 1 to 3 weeks of a pullback, and then consolidation, pullback more, and then an absolute rise. So I like the weekly for that specific idea, is to see, okay, we had a bullish week last week, as an example. Are we more likely to have a bullish week this week or bearish week this week, depending on where we are in relation to when we started the movement? So you have bearish week, bearish week, bearish week. We wicked the previous swing bearish week low, and then we started pushing up again. No idea that it was going to go into consolidation, but you get the idea. I do like the weekly for this. Don't really trade it all that often. Davide asking, hey Richard, is it possible to have the same entry rules but different exit rules for trades on 2 bootcamp accounts? Thanks. So when you're looking at bootcamps, you're talking about copying basically 2 trade ideas. So bootcamp is the only account that you cannot copy 2. So high stakes, hyper growth, you can't copy them to a bootcamp account. You can use the bootcamp as the master and have all the other ones as basically the receivers of the trade. So you can copy trade out of a bootcamp. You can't copy trade into a bootcamp. So if it has the same trade entry, same entry point, but is managed differently, I don't think that is going to be allowed, because you're technically saying I'm copying the trade, I'm taking the same entry, but I'm just having my risk between the 2 trades be slightly different. You know what? I think the best thing for you to do, David, is to reach out to help@the5ers.com to get that clarification from them. They would give you very clear, this is what you're allowed to and this is what you're not allowed to. Because the problem is the copy trading, is that what is defined as a copy trade. And what a copy trade is, I've 2 accounts that share the same entry point and share the same analysis and share the same risk parameters and stuff like that. But I don't know how much of that risk parameter needs to be similar or the same for it to count as a copy trade. For me, in my mind, a copy trade is entry and exit is the same. So entry and exits, and your exits being stop loss and take profits. What do I think of EU and GU? EU and GU I have not really had much of a look at today. But let's go through it. I'm going to do EU a very quick, let's say from the 4-hour down, and then we can jump into GU after that. All right. So yesterday we had this area of consolidation over here, which then led to us trying to push up, but we failed to sweep the Friday highs. So Monday was bullish initially, but did not sweep the previous week, not previous week high, but previous day, which in this case was Friday's highs. Tokyo has been very bearish, pushing price lower back into this area of consolidation, which then led to us on the 4-hourly to have this little bit of an indecision candle, bit of a wick below, not really breaking lower than that previous swing point So let me draw some boxes. So we have the week low so far, which is this area over here, the current week low. We have the current week high, which is up over here. All right. We had the previous, let's take this one. We had the previous day high, which was Friday. And then we had the previous day low, which was Friday as well, these two. So as of right now, we're currently playing between the highs and lows of last week Friday. We tried to sweep the highs of last week Friday. We failed and volumetrically started pushing lower, which is in line with the overall downward trajectory that we've had over the last, let's say, 2 or so weeks. We've had the lows of that period also basically be failed to be retested. So we have a low down here and we have a higher low, and this effectively is still a high that has not been hit, and we've created another higher low effectively over here. So we have the low of last week, we have an attempt which failed, we have a secondary attempt which failed as well, trying to push up. My problem is that right now we have not created a new high off of this consolidative movement from Monday. I would have loved to have seen price actually push higher than Friday's high, come back down into the range and then reject and start pushing up. We're not receiving that as of right now. Right now, we are stuck in these 2 points. We're stuck in yesterday's lows and yesterday's highs. So we're consolidating as of right now on EU, which is a bit annoying on the 4 hour. If we go down to the hourly, we can see that exact thing play out. We have consolidation over here. We had a breakout, we had a retest and a continuation higher. The continuation higher did not, however, break previous week highs. It did indeed come back into a little bit of consolidation at the end of the New York session, as well as the rollover. And then we had this volumetric sell-off, which once again just brought us back down into this area of consolidation. So you can see it a little bit more clearly on the hourly as well. I think, as of right now, there's a higher likelihood of us respecting this consolidation right here and potentially trying to push up than it is for us to break through and sink off to get to these lows over here that we had for Friday. So Friday's lows. The reason for this is because this was a strong reaction. This was another strong reaction. This was a singular strong reaction pushing us lower, which needs some sort of correction, don't you think? I think we can potentially come back up here again. You need to break through these little swings that we had on EU on the 1 hourly. But it is struggling. It's struggling to break lower, especially on the hourly. It is consolidative for sure. Lower time frame on the 5 minute or so, it would have looked like a continuation of a downward trend. But EU to me right now needs to do one of two things. We either need to break through this consolidation that we had here, this range. We need to really push through, retest it, and continue lower, and then we can potentially sweep the lows of last week Friday. Or what we need to do is we need to bounce off of this, sweep these highs, fail to make a lower low, and then continue pushing up so that we can potentially come and test this section over here. Those are the two likely directions that I want to see hit and how I want to see it hit. Now, obviously, time will tell which one of these two we're going to have. If we have a breakthrough above this point here, then we know for certain that this is a potential continuation pushing up. I'm not too keen on the fact that this has an equal low to this area over here. Doesn't feel all that good. You can effectively see it as if we have broken out of a channel and have retested and want to continue pushing lower. It's that follow-up that we're looking for. So I think GU is going to have a similar price action. Okay, so this was yesterday when we made the low, convective move higher, and then we continued pushing up. We eventually broke this area that I had marked up, so I can just take off all of this. We did eventually have a nice bullish reaction, and this is way more of a rejection than initially thought. So how high did we get into this? All right, so we basically came into this whole segment here. This is what we came into. We rejected off of it. We are looking like we're potentially going to want to try and break lower than this area over here, which was the last swing point yesterday before we started this volumetric push up. So we're at this crux point right now. We need to see how we're going to react here. Are we going to react and start pushing higher, or are we going to start failing through and pushing a little bit lower? So definitely a crux point at this point in time, I think. Oh yeah, about the yes. Success saying, I have a problem with taking profits. I don't know if I'm greedy sometimes. I miss it. Any solution for me? So give me a little bit of context. Tell me how you would normally manage your trade. Are you a set and forget kind of person? Are you trying to have a trailing drawdown? Or are you trying to have trailing stop loss, that kind of like thing? How do you normally approach your trades itself? So the idea of taking profit it was in my mind also something that I used to struggle with. I used to struggle with letting a trade just absolutely run, because I would always have this fear that at some point the trade was going to do exactly this, as an example right here. It was going to go up, go up, go up, and then eventually just take all of that profit away. All right. So that kind of led me to wanting to be a set and forget trader. So I would look at entering a trade and then having a set TP that I want hit. And then if that gets hit, I'm done. And usually those set TPs were, to give you an example, if I entered a trade here, as an example, my TP would have been lower than that most recent swing point. Almost as if to say it's a higher probability that it's going to hit that point before reversing. So if you're struggling with taking profits and then resigning that the trade is now done, consider putting partial take profit points in. Or, hypothetically, set your take profit slightly lower with a little bit less risk, as an example, and build that up until you get comfortable with the idea of letting a trade close out a little bit earlier, as an example. I don't know if this is making sense, but consider this. Why are you're saying that you might be greedy, that you want to have a lot more out of the trade, but consider this. I have a trade that has $1,000 in profit theoretically. It's all unrealized. However, I'm getting close to that 1,000. I'm like at 800 something, 900 and something. I can make one of two decisions. I can say, you know what? This is close enough. I'm going to take my risk off of the table. So I'm taking all of my risk off the table. I'm taking a partial win. It's not the full 1,000 that I wanted, but it's close to. It's like 830, 840. I'm happy with that. Excellent. I close the trade. Now, psychologically, I've locked up a bit of profit. The only time that you're going to feel like, oh, I should have kept it going, was once price played out. When you see in hindsight what it could have done. So if I made a decision to close my trade right there, knowing that that was the high that it had at that point in time, and I'm happy to take that, but now I look at it in hindsight and say, oh, I could have had it all the way up over here. You're going to convince yourself that the decision that you made was the wrong decision. I should have left it to go. Fair. But you made a decision in that moment to cut the trade, as an example. There was something about the market, there was something about the analysis, or there was something about your fear that was saying, look, close the trade here, it's done and dusted. Whatever happens afterwards, it wasn't your trade to have. But if you want to have these trades where you leave something to eventually reach there, take partials. Take some of your risk off of the table. Lock up something. It's going to make you feel like, look, even if this trade were to go against me, I at least locked up something. So it's not a net loss. I have less risk on the table. So that's the advice that I would give. Go and look at your current style of trading and see how that aligns with the potential of taking partial profits or potentially locking up some trades as you're going up, so that you can get used to the idea of letting your trades run or letting you come to terms with not closing your trades too late. Because remember, everything is unrealized until you close that trade. So you can see your P&L is moving up and down and up and down. That's all unrealized. If you're on drawdown, it's not a loss. It's a loss the moment you close that trade. And you only lock up profit once you actually close the trade. Everything else is just unrealized. You're just seeing a number go up and down. So get into this habit of not feeling like if you were up, let's say $2,000 in profit, and then all of a sudden that $2,000 gets wiped out by a single move, that you lost that $2,000. It wasn't you never closed the trade. You never actually gained that 2K. It's only once you click that button and say I'm closing this trade that you lock something up. And once it's locked, that's yours. You have a winning trade. Everything else is theoretical, if you consider it like that. So in this case, I would say consider doing partials and seeing whether or not that assists, or have a set take profit point that you want hit, and then anything above that is not your trade, and then see if you start turning your profitability around. So Victor is in the background, and he's amazing at knowing at what point. Well, now he's in the foreground. He's amazing at knowing at what point he wants to be in the trade and at what point he no longer wants to participate in the trade. What's up, Mr. Victor, the boss himself?
How are you doing, Rich, and everyone watching? Thank you for that too kind of an intro. I think there are many different ways to approach this, right? There are a couple of things you can say. I think it's you can never eliminate completely that uncertainty, the uncertainty of what if. That's never going to go away. It doesn't matter how many years you have in the market, how big your edge is, how whatever. It's just it's a given that the market has a random sequence of the results you will get, right? Even if you have a bad a strategy that does not have edge, or if you have a strategy that has a lot of edge, there is always a degree of randomness in the results you will get, meaning the next very trade could be a winner, could be a loser. That's always going to be the case because it's always probability. There's no way you can eliminate completely. So instead of aiming for certainty, which you will not get, I think it's better to embrace the uncertainty. So before we get into the trade, accept the fact that we don't know what's going to happen. This could be a loser, this could be a winner, and accept the loss, even if it hasn't happened, and hopefully it will not happen. Accept the fact that this could be a loss, and if it happens, it's fine. I accepted it. It's okay because my risk management told me how much to risk, and I did it according to the risk limitations that I set for myself. And it's okay. It's part of the business, right? And when you accept it, when you confront it, you accept it, you desensitize yourself for, the negative effect, at least a little bit, of losing, because you will lose. We all will lose. I will lose. That could be today. Richard, that could happen to you tomorrow. It's a given. So that's one thing. So the psychology behind losing should be not avoiding losses, but accepting and embracing the losses and controlling them, because we can control the loss. You cannot control when it happens, but you can control that moment that it will happen. You can control how big it will be. That's completely in our control, and that's called position sizing. That's called risk limits per day, per trade, etc. So we should engage into those practice, right? Actually control it instead of just hoping and claiming, the win is mine. It's not yours, right? It's not a given.
Yeah.
It's good to be positive, and you need to be positive, right? Otherwise, it's going to be difficult for anyone to survive this business. But blindly focusing on winning might backfire, because the reality is we will lose, and if you're not prepared to do that, that can totally get you out of balance psychologically. And the other thing is, when you think about it, our goal as a trader is not to win every trade. That was never the idea. That's because if that's the idea, everyone will lose. Everyone will, completely fail. It's not about winning all the trades. And sometimes it's not about winning the majority of the trades. It's not about having a high win rate. That's of course you want it to be as high as possible, but that's not the goal. The goal is in the end to have profits, not to win. Those are two completely different things, but to end up in profit, end up in green, not after one trade, but after a period, a series, can be 10, 20, even 50 sometimes.
Yeah.
It depends on how big your edge is, how the trade frequency and things like that. But there's perfectly solid edge out there that you will not see within 10, 15, or even 20 or more trades. It's there, but because of the fluctuations and the degree of randomness in every delivery of the results, you will not see it. Sometimes you will, sometimes you won't, because you had, a little bit of a drawdown and it's not positive. Doesn't mean you don't have edge. So when we start to see it for what it is, there's that degree of randomness, there's that probability, we embrace that, we control for the risk, and we let go of that urge to win every trade. That could be one of the causes of having a unprofitable equity course, because we can't, once you have, if you have this anchor, the psychological anchor, that you have to win every trade, and it depends on you, on whatever you can do to win it. That's wrong, but you see that a lot. Some traders, sometimes I hear some traders say, I'm not going to close this trade because I can't accept this loss. I don't want this loss. And it's completely true, and it's completely reasonable, and it makes complete sense. But as a trader, that does not make sense.
But I mean, it's the inverse is also important as well. It's the other side of it, where they're unwilling to close the trade because they believe that they can get more out of the trade. They can win more, as an example.
Sure. That could definitely be, and they could be right in the sense that maybe the probabilities are in your favor to actually hold it longer, right? But once you have to ask yourself, why is it that you are not willing to close the trade? Is it because you know something, or you feel something? And feeling, I know a lot of traders trade on feeling, but to me, it's not useful to me, because one day I feel good, other day I don't feel that great. My feeling goes up and down all the time. My emotions go up and down all the time. Numbers, they don't change. If I measure it, if I measure a certain length or a certain profit, there's fluctuations maybe, but let's say I apply a certain rule on my strategy, and I do a back testing from the whole month of June. Today's the last day of June. How are you doing, Samir?
Hello guys, how are you?
Is Samir in the stream?
Right?
My
yes. Go ahead.
My stream is frozen then, because I can only see myself and yourself, Victor.
Hello, mic check. Can you hear me, guys?
Oh.
Yeah, I can hear Samir. I can't see him though.
Yes.
Maybe I should take this opportunity to take my leave, because I think
maybe I can see him.
Yeah, I can see you. I can see you both.
I'm clicking on things and nothing is happening, so I think my stream is frozen. All right, so if I'm going to use this moment to jump out and say thank you to everybody that has joined us so far. If you haven't already, drop a like, drop a subscribe, please. It does help the stream quite a bit. So we're going to be again. I'm going to be in again tomorrow morning, but I think my stream for now has decided it doesn't want to anymore. So yeah, I can't even stop my screen share. Oh, this is annoying.
It's okay. It happens
Anyway.
sometimes.
I'm just going to exit, and then if Remy, if you don't mind trying to close my stuff out, I would appreciate that.
Okay, now it's
yeah.
okay.
You're
No,
not. You're not on the screen, Richard. That's fine. Rich is no problem. You guys at home cannot hear Rich, but he's, since he doesn't have visuals, doesn't have a visual feedback, he was asking ourselves if he's still on the screen, but he's not. So let's get going. Thank you, Rich, for, holding the fort. Samir, we were just talking about how to deal with the uncertainty of in trading, right? How do you get along with the fact that when let's say you are 75% close to your TP, how do you deal with that uncertainty of not knowing if you close it now, you get certainty because you get whatever the profit is, but you sometimes, just by probability, sometimes you will close it and it will go to TP. How do you deal with the emotions of looking back and seeing I could have, if I just left it, had more profit? How do you deal with that?
Actually, I was talking about the same thing in the traders meetup, where as a trader we are stuck in a loop, and this loop is very dangerous. And what this loop is, we make profits, we lose some money, we get in a losing streak. You cannot say that you are fine with it. Of course, emotion side, psychologically, you feel bad only as a human. You cannot neglect that feeling. Of course, if somebody has lost very small amount in comparison to the net worth he or she is having, then of course maybe that thing is not really causing any effect on the emotion side. But me and you, I am actually kind of a full-time trader, and if I talk about trading, I think as a trader who wants to pursue this, or who are doing this thing as a career, we are in that loop. We make profits, we have a good month, maybe good quarter, or a good year. I don't know. It can be a good year also. But when there is a losing streak, then your confidence is shaken, and you doubt yourself, and then you backtest it. It is really up to trader how he or she gain back the confidence. So then you do some live testing, back testing, some smaller position size, all the ways that you want to try. But somewhere we are stuck in this loop, although we make money at the end. If you are a profitable trader, if you stuck
I'm
with
not sure
the
if.
system.
Okay.
Can you hear me?
Yes, I can hear you. I don't know if it's on
You
my
want, you
side
wanted to say
or
something?
your side, but no. I there for a minute there I lost you. I don't know if it's if it was me on my side or was the actual stream that got. Let me go ahead. I'll check the live stream to see if it's me or if it's the actual stream that lost you.
Okay, so let me know in the chat, guys. Is it fine? We hear you all clearly. Okay, thank you. Yeah, I was on the point. We are stuck in this loop, and I don't like it. As you mentioned, how I deal with when the confidence is low, or whenever you are in a losing streak, or when there is uncertain things happening in trading. So I just accept it that I'm a part of this loop, and as in trading, I think this is all you have. Like, you make profit, you lose, and then you repeat the same circle that you are in. You cannot escape this as a trader. The level of the money that you are making, it changes over time, but you will still be in the loop. So if you ask me, I have figured this out, that as a trader, this is the thing that I am in, and this is how the business work, and this is the circle that I'm in. So I have accepted all of it. I know I will make some profit. I know there will be a time I will lose, and there will be a time when I am down also. I cannot say like I made a certain amount of money, and it will be a happy moment every year or every month. I cannot say that. As I'm aware about this thing, this loop thing as a trader, so I have accepted it, and the uncertain things in trading, I have accepted that also. And how I get out of this fear or this kind of terminology that we are discussing, I just optimize, I just see the charts, I just rely on the experience, I just have some positive hope. That's how I deal with it. I will say positive hope can be a crucial point here. So yeah, this is what trading is about. I know it is kind of sad, because if you look at this thing deeply, nobody wants to be in this loop. But sadly, I think trading works this way only. You cannot escape the circle. And it is just my point of view. I don't know if person A, B, C, how he or she thinks. But if you talk about trading, I think this is the circle everyone will be in, unless there is one point that I want to discuss. Unless you have multiple sources of income. This is the only key point here that you have to focus on. Yeah, if you are just focusing solely on trading, this is the circle that you will be in. You will still make the money. It's okay. As I think if you continuously do the same thing again and again and again, you will get the results. That's what I am aware of. But at the same time, this circle is, you cannot escape this circle as a trader if you are only focusing on trading. But if you have other things also, somewhere you can put your energy there, and you can find some way. So that's how I will put it in my words. And uncertain things, it's always going to be in trading. I think you can just rely on the experience that you have. You can rely on the positive hope that you have. If you have no experience, you have only the hope. You are seeing us, you are seeing me. Okay, he or she has done something. Maybe I also can do that. So as a beginner, hope is the thing. If you're intermediate trader, advanced trader, I know that all these things happen. So I think experience will be your answer here. But the circle will always be there if you are only relying on trading. If you want to manage this thing, doing something other than trading is very important. Else you will be in this circle forever. I have been there for 4 years, making profit, losing, feeling bad about the losing streak. All my life is revolving around this circle only. And I don't want you guys to be a part of it. I want you guys to develop some skill also, so that you can deal with the uncertain things in trading. It's always going to be there. So that's how I will answer it in my way. Hopefully I am able to share my views properly here. So yeah.
We have, thank you for that, Samir. Go ahead.
What do you think about this thing that I just mentioned?
Actually, what you said, it sounds. I mentioned before you came on. I said, one way to deal with it, and I think it is good, is that to embrace the uncertainty instead of shying away or moving away, trying to avoid losses. Embrace the fact that you cannot know. There's no way to predict what's going to happen. Even with your equity curve, you will know on a big series, let's say 50 trades, 100 trades. If you have data, you can say, all right, I'm supposed to have this kind of results in the future because that's what I measure in the past. But you cannot, that doesn't apply for your very next trade. So when you're in a trade and you are getting close to your TP, you know, your data will be the only thing that will help you decide whether or not you should hold that. And the uncertainty of whether this particular trade will go to TP, that uncertainty is best embraced instead of fighting against it, because you will never avoid it. You will never, there's no way to eliminate it. You will all, even if you have data, you will have that uncertainty, because that data tells you something about a sample size. It tells you something about in 20 trades, in 50 trades, in 100 trades, this is more likely to happen. It's going to more likely or not to hit your TP. But this particular one, your data on a one data point, it cannot say. That's the uncertainty that always will be there. And so instead of focusing on this particular trade, which I think is the wrong framework to look at it, instead of focus on the next 10, the next 20 trades, what will happen, and base your decisions on that, of course, on the data you have. But okay, I'm going to hold the trades to my TP because my data says, because I measured that this is what I'm supposed to do. If I do that, I make more money than if I close it at 75% of the TP distance in a similar condition. And then let go of the uncertainty, embrace it basically, understand and accept the fact that it could be this, it could be a winner, it could be a loser, it doesn't matter. I just execute, I have my data, I have the reason why I'm holding it all the way to 100, or the reason why I'm taking it off at 75, because I've seen that, I don't know, if by whatever time hits, it doesn't, you know, if let's say it's supposed to hit my TP, all of my trades in the past, of the majority of my trades in the past, they hit TP in 8 hours. Just an example. And those who no TP has been hit with a trade duration longer than 8 hours, right? And you have, let's say, you have 30 cases where it took less than 8 and your TP was 8 hours and your TP was hit. That's useful information. That is something that could guide you to navigate that uncertainty. But even when you do have that data, it doesn't mean that, you know, it's 100% certainty. Even if you haven't measured it and it tells you something in the past, there's always that, you know, probability that in this case it will not hit it. So you just use that data, you accept the uncertainty, and you execute it on it, and you let go of it. You embrace the fact you do not know. You make the better choice here based on the information you have. You make the best decision you can have, and you walk away from that decision. You did everything in your power with the information you have to do the best decision, and that's it. And accept the fact that you're never going to have the complete certainty. So it's basically not very far from what you said. You said something about, you were talking about the cycle, you know, the winning streaks in cycles, not necessarily in one trade. So you said you just accepted the cycle, that there's good periods and there are bad periods as a trader. And one of your solution is to accept that cycle, not fuss about it.
Yeah, you cannot escape this when it comes to trading. So there is only one thing that accept it.
Yeah, it's a given. That's one thing. And the other thing you said is to have another, you mentioned another, stream of income, so that it alleviates the stress when you are in these drawdowns, which will happen because you accepted the cycle, so that you can endure them, you can go through them with less stress because you have another stream of income. And I think it's the same way as, you know, it's building in safety guards, basically, right? Same way when you take a partial, somehow when you take a partial win, like you hit TP1, have you know, I don't know if you do partials, Samir, I don't think you do. But let's say you do. Hi, Unbiased Trader, how are you doing? Let's say you do take a partial. Let's say you took a partial. We all know how, have you noticed how it changes how you feel, how you're less stressed, because you already have, you know, part of the profits in your pocket that can never be lost, you you no longer feel the pressure or the fear of losing. It changes something in you, and what that does is the same thing as having a second stream of income, because you take out some of the stress, some of the pressure. You know, you have partially you have things covered, and that puts you in a psychological, more comfortable position, and that's a real thing that will affect your execution, how you feel, how comfortable you are, your stress level, any given moment during you know, the week, the day, the month even. If you're stressing about, you know, things you have to pay, or let's say you have some plans of going on a vacation in a couple of months, you have a budget in mind, and you know you're stressing. That's not healthy for as a trader. It's going to backfire on you, and so the best way is to alleviate it by having a second. That was your advice, which I think is great, or you know, decouple yourself from that expectation, as in it has to happen. You know, look at as in a longer period. All right, so I'm going to make in the next 6 months. There will be ups and downs, but I will make, given my results, I'll make this kind of money trading, but it's not gonna. I don't know which months will be, how much the profit will be in any given month. I just take a period, and then you can, you know, navigate that period better,
Yeah.
knowing that you will have some losses in the process, and it's fine. It's completely fine. You just embrace the fact of the uncertainty and the you know,
Yeah.
the randomness basically of how the results are. I mean, in what sequence they will come. Not that the results are completely random, but you know, any given week or day could be a losing week, and that
I think
there's nothing you can do about
yeah.
it other than doing your best and execute to your best of your ability. But you can still, you know, just by chance, you always
Yeah.
have that probability of having a losing day or a week, and that's okay. That's normal. That's completely normal.
Yeah. I was gonna say, if I look behind and if I see my trading performance, I have been, you know, very steady, not gaining too much in trading and not losing too much, slowly climbing. And the moment I started to focus on other skills also, and I try to get better in that skill, and I think my trading got like it really shorted up. So I think yes, you guys are focusing on trading, but if you put the same focus in building some other skill also, and you excel in that skill, I think that will excel your trading also, because it has happened with me. I started to take trading a little bit lightly, and I accepted the random outcome. I was like, okay, you know, I'm doing good here also. I have this skill also, and I can do good here also. And the stress in trading is less now. So I think it is very, very important thing, guys. Excel in other things also, and build a skill and excel in that field, as you are also trying to excel here also. But I just want every one of you build some kind of skill and excel there also, and that momentum will automatically come in your trading, because it has happened with me. So that's why I am telling this same thing to you guys. Actually, I was way too stubborn exploring other opportunities. I was like, I have to do trading only. I think that is a that is a bad thing that I did. So I
What
declined
is?
so many. I was for 4 or 5 years, I was just solely focusing on trading. I rejected many opportunities, many good opportunities. If I would have focused there as well as in my trading, I think where I am, it would have taken me less time. But now I am giving you advice. I think it is very important thing, guys. Trust me. It is very important thing. Maybe some other day I will give you more insights about this thing. But for today, I will just say it is very important. It is the most important thing, guys. I can't even put a number on it, how important it is. It is very important if you want to excel
And
in trading.
and that thing that you mentioned is by having a second project, a second stream of income, a second skill. You said to not only have trading, right? That to
Exactly.
you is that to you is a big aha moment,
Exactly.
basically. It helped your trading by having something else to focus on as well as trading,
Yeah.
and not solely focusing on trading as too much, because you will get it has its own it takes its own time, and by speeding it up or stressing about it doesn't make it a better doesn't make your performance or your growth better. I totally understand that. There's one question here from the audience, from a dear friend of ours. Unbiased Trader says, how many have hit the 4 million funding on the bootcamp program? Just trying to gauge how possible it is. Unbiased Trader, I do
What do you
not
think
know,
about
in all
this?
honesty. In all honesty, I do not know the answer of this. How many have hit it? I do know that they are, Saul has talked about there are a couple of very large traders, but I don't think he mentioned anyone being at that moment in time. That was about, I don't know, 6 months ago. He was talking about it. At
Yeah.
that moment, I don't think he mentioned there was anyone at 4 million at that moment. Whether there was someone in the past or now is at 4 million, could be. I don't know. I don't have that information. That's one thing. I do know that you can see it on YouTube, on Bias Trader. There is or there was one trader that was at 1.2 million, I think it was a couple of years ago, and those are the ones that have agreed to share their story on in public. But the vast majority, and that's something Solt mentioned as well, the vast majority of traders, especially those who are trading big, are not interested in sharing and being public about it. So I don't have the information, and maybe there is one at this moment, just simply is not willing to come into the public and make a video about it, or allow us to talk about it necessarily. So that's the information I have on Bias Trader. Something else. I'm low.
All right.
Big Wicklow
Volume bit
says
low.
I'm low. Samir is high. Let me see if I can do anything about it. I need your help, guys, to see if that's something I
From my
can do
side, it
here.
is okay. I don't know if actually,
Yeah,
let
I'm
me
gonna check
know
on
in the
my
chat,
side.
guys, if it is fine, because I hear Victor fine. Maybe I am a little bit loud. I don't know. Let me know, guys, in the chat.
You
And
seem fine by me.
yeah, I think it's fine. Maybe there is a problem in your platform. You can maybe refresh it and maybe let us know. Okay. All right. Thank you, guys. Thank you for letting us know. We have my screen here. Let's do some analysis. We are just 22 minutes away from the market open. And you might be wondering, market is already open. I'm talking about NYSE. So we still have like 22 minutes left for the market open. Okay, my mic is high. I'll just stay a little bit away. Okay, now it should be good. Let me check in the setting
It's, it's,
actually. If
it
okay,
sounds good to me, and others in the chat have mentioned it sounds good to them as well. So I don't know. I don't know
improve
what.
dramatically. Oh, thank you, unbiased. But I'm using my everyday camera. But anyways, I was on the point 21 minutes away from the NYSE Open. What can we expect from US 30? For that, I have to go to the bigger time frame. Let me delete this session line here so that we see no distraction. Let's go to the daily time frame. Okay, last daily candle we closed kind of a bullish candle. Now, can we continue the momentum? We have to see on the lower time frame what story we are getting. For now, I'll just mark this area because this is the daily area. Just for the reference point, if price decide to reject from here, then we will know why it is doing it. If price tries to break this, I think we can test this, but we will try to find more confluence where price can go. For that, let's go to the 4-hour time frame. Okay, 4-hour is not really having that momentum. Of course, we are trending to the upside, but it is very slow. We need some kind of momentum. I think this is the market condition. I take losses, so I have to be very careful. Let me draw this trend line. If price decide to kind of tap this trend line, this is just the reference point. Okay, we have this daily level. Now this is the 4-hour trend line. What other thing we have? Maybe we can go to 2-hour time frame to see. Yeah, 2-hour is really having nothing. Let me draw this thing. If price decide to go above, maybe this thing can be a target if we decide to take a buy. Okay, now go to the 1-hour. Okay, 1-hour. I think as the daily candle is bullish, this is the area I will look closely. I will plan for some buys around this area. This makes sense to me because daily candle is there. I'm sorry, the daily area is here. There is also the this kind of trend line. And do we have any? Yeah, there is some wicks area. Actually, we only have a area and trend line. I needed more confluence, and what can be the more confluence for me? Can be a demand area here, but we have nothing. We have just wicks, wicks, wicks. I don't know if we are gonna liquidate this and then price try to go up or reject from here. So I think as we are having some difficulty understanding the price here, we do have some areas we can make some reference point, but the problem is that the confidence level is low here, my confidence level. So I don't want to get involved in the market when I know there is a chance. I mean, there every time there is a chance to of a loss, but there is little bit like more than 60 to 70% of the chance it can be a losing trade. So when that is the scenario, I think we should not take a trade. So what if price rejects from here, try to gain back the momentum, again pull back? I think this is where I would like to take some buys because it will give me some kind of confirmation. Yes, price is rejecting from here. All I need to do is just wait, sit on my hands, do nothing. And when I see price moving in my favor from my area, then I can execute on it. It's okay if it is late, if I don't get the entry. It's okay. I haven't even traded yesterday. Oh, actually, yesterday I did took a trade on the futures account. Um, yeah, first trade was a loss, second was a win, so ended up in some kind of green day. But I'll share that stats also. Don't worry. But for now, I think this is the area we'll look closely. If we break below, then we have trend line. I don't really want to sell this. I only want to look for buys. I just want some kind of confirmation. Then I will be interested in this buy because we are very choppy. So I don't want to, go against the trend. Higher time frame is still bullish. If you just zoom out and if you just see it, it is still making upper legs. Yes, we have some liquidation moves, which can happen today also. We have a big impulse and then price try to go up. So let's see, we will take information from the market. It will tell us what it wants to do. How will I know that? I will see how price is reacting around the areas. If it breaks with the volume, of course, it is telling me yes, sellers are very aggressive. I don't want to get involved in the market. I do like to wait for a couple of minutes when it gets to the area. So that is something that I can do today. For now, no buys. I just want to see how price reacts around here. Breakout, I don't want to take this trade. Rejection, I do want to see some market structure shifting to the upside, and then I can plan for some trades. Let's take a look at NAS, which is NQ. NAS is also very tricky. Yes, we are forming this trendline breakout and this head and shoulder, but this is a very kind of a liquidation point to me because this is some kind of V-shaped recovery. Price try to go up, not recovery, just a V-shaped momentum. Go up again, aggressive move to the downside, and these type of areas do act as a liquidity point. I know VWAP is bearish and VWAP is a big part of the strategy that I use, but experience is telling me we can break this area. But I don't have a confirmation. It doesn't mean that I will just enter the trade based on the my feeling. So still, I need some kind of confirmation. For me, confirmation can be something like this, and then price retest. Maybe I can plan a trade here. Then I can have a decent stop loss and catch maybe 1 to 1.5 or something like that. So let's see how price reacts around NYSE open. This is really not interesting price action. I think this week I haven't really seen any interesting price action. Last week was decent, but this week we are consolidating a lot. Let me take a look at US 30. Last week was also very tricky. Let me see when the last week started. 22. Oh yeah, around this area. Starting of the week was okay, but then look at this price action. Nothing. So I think today I will not be too. I don't want to take any trade today unless I see very beautiful setup. So let's see what we can get around NYSE open. Yes.
All right. We have a couple of questions, and then I will go to NQ as it will open in about 15 minutes, and perhaps EU as well. We have one person asking here. It is unbiased trader asking. Oh, that wasn't the the message that I wanted to put on. Where was it? Let me check here. It was this here. No, that wasn't the one either. All right. So yeah. So the question was whether or not how you should go about it, right? If you have a bootcamp account and you're eyeing, should you focus on scaling or payouts? I would say, it's great, it's inspiring, it could be helpful to have a as inspiration, as motivation, to have where you want to dream and see things before they actually happen. But I would say I would say not focusing on any of them, not focusing on payouts, not focusing on scaling necessarily. It's nice to have that, as a dream or as a goal, as a milestone, and look back when you hit one milestone and you hit another one. It's, as I said, it's motivating, so it's good. But to really focus on, what you want to put your energy in, and really look at every week, am I inching towards or away from? I wouldn't put it as on payouts for scaling, right? I would focus more on the process. I know it sounds broken record, but I really think everyone will be better off by focusing on the process. By, for example, scoring how many trades have you taken this week or even today and this month, by keeping track of how many trades you have taken that are according to plan, for example, or how many. For example, if you did any given month, if you have been able to shave off something, peel off, squeeze out more profits or more our return, risk-adjusted returns, out of maybe your exits or your entries or your holding time, and focusing on your execution and the quality of your system, and focus less on, let's say, P&L, scaling, payouts. I know we all are here for the payouts, but I think it's counterproductive. You're better off focusing on the process. So I wouldn't focus on any of them. Let's take a look at something else. I believe there was something.
I'll be back in just 1 minute.
No problem. No
Thank you.
problem at all, Samir. I will switch to mine, and let's go to NQ. All right, so on the higher time frames, what we are seeing so far is that the market, right, monthly, it does not telling us anything, anything except that it's very bullish. And we had first a bearish engulfing, bearish order block fresh. There was this one. and now we had a fresher order block, which is the one that we just tapped not too long ago. Let me zoom out a little bit. Let's see if that's possible. Maybe I'll do this. All right, something like that. Okay. Right. Okay, so the only thing that so we can see that there was last week, we're at the beginning of this week, so we can see that we're hitting that lower border of that order block. You can expect, and maybe that's already what have happened, you can expect some kind of a reaction, and that's already what has happened. So you can see we are about 100 and what is it, 140, 160 away from the that border. And that's what made the high today. What else do we see? So we have on the daily time frame a retested order block, fresh. That was yesterday. It squeezed the low of that order block and came back very, very strong with very little retraces yesterday. Difficult to get in if you were waiting for a retrace. And then it created a new one. So basically that becomes the area we need to be focusing on, right? On the lower side, that is the demand zone on the daily that will kick in on when we get there. So that's one thing, right? So we want to be taking longs or looking for longs from that area, and we want to be cognizant of the fact that we are reacting on that weekly lower border of that order block. If you go to the H4, right? So this reaction was based on the weekly lower border, right? Even if you don't see it because I don't have it visible, we can understand that that's the area. On this time frame, on 4 hourly, you can understand that actually the reaction it's not coincidence that it's happening at an order block. I don't think it is fresh. Let's measure it. It wasn't fresh. That was 14, but it was reacting on the order block nonetheless, which is the H4 right here. And there isn't, this is not a quasi, so it's not an entry or a reason to go short, but still you can see how the market reacts to these structures or these areas when we get to them. And we have the same, we have this, right? So we're coming from the weekly, right? So you can expect, because it's the weekly, you can expect a day at least, but a couple of days. Could be a day or two or maybe even 3 of a reaction because of the weekly, right? And if you go to the daily, you can see that we have one little reaction, but tighter or more recently, you have a fresh order block that was created, right? One that was retested and a new one that was created yesterday. So my question is price needing to hit that level before we continue? We don't know that in advance, but that's one indication or one scenario that we could be considering. The other thing is, let's go to the H4. We do have an area here that the price could use for that continuation, right? You have the order block that was created right here, and then a continuation, and it comes back to the area, and it left a demand zone right there that it could use to continue higher. So you have 2 options, right? Either we're going to likely use this to continue this move that started yesterday, or we will be likely going to come back to something, perhaps that order block on the 4 hour right here that was left behind to presumably come to go higher. Which of the 2 is, we'll find out today, right? So that's the area. Everything else from before becomes not that relevant. So these are the 2 demand zones that we should be looking for. And one thing else, in about 35 minutes, right? So you have to wait for that. Look at what kind of price action on H4 it will leave us, right? For those who are familiar with how I will look at the market will know exactly what I mean. That's an outside bar in the making. What does that tell us, right? That sellers are, not only in control, but they have also trapped all those who thought to be buying a breakout right there on that top, right? So I see enough reason for price to push, for price to use this, maybe come back, hit that order block that will then be presumably created in about 35 minutes for the continuation lower, who knows, for on the daily, right? So that's something I think is quite likely to happen. So either we need this move, or we need something from a lower demand, or something we create in the future, meaning, in the next couple of hours or maybe tomorrow, create some structures, perhaps a quasi, perhaps something else, a double bottom, something like that. Of course, it would be something like that, right? Either here or maybe even lower, and to change the direction. But it's clear that the market is looking for some demand zones to presumably push back into into higher levels, right? I mean, this fresh order block on the H4. Let me go to that again. This is the area that I would be interested in buying, but it's a wide area, even on the hourly, so it's not easy. It wouldn't be easy. I will have to wait for market to create more structures and more indication as to where it wants to reverse, right? As of now, there's no information if it's, if it even is going to reverse or not. We'll have to wait something like that to happen before we can take a trade. It's not even there, right? So the next level is this H4 here, and we can go to the 15-minute. Let's see if we have something on. There's nothing on the 30 minutes, nothing on the 15 either. So basically, there is. Let's see. Not even there. Not even on the 5. Right. So it's reacting on that demand zone, which is normal. Right. So. Okay. So what we have here is an overlapping. Right. So you have this one on the H4. You have something similar on the H2, and as well as on the H1. Right. And on the H1, it is no longer fresh. Right. Here it left its freshness there. And on the H2, it still it also has left its fresh. So that's a reason why I wouldn't, it's not my preferred, it wouldn't be my preferred trade to trade the area here because of that, right? I want to have the H4 and H1 being fresh when I get into the trade. Otherwise, I don't want to be in the trade. So meaning I would be looking for a long, but only if both of them were fresh, and the H1 isn't fresh anymore. So I stand back and just wait for new information. Either the market creates a fresh order block on the 1 hour and comes back to hit it, right? Something like this. It creates it very small, something like that within the H4 while it's still fresh, and then I can take a long from that area, put my stop below it, and something like this, and target perhaps this swing high or something higher, depending on how much time there is left on the day. But I'm not too eager to go long based on the H1 that's currently right here, because of, to me, it's no longer fresh. Already been mitigated, already been interacted with. So it's not the first retest anymore, and I don't trade the second one. So that's on NQ. Samir has joined us again.
Thank you.
Unbiased has a question or a remark. I guess chasing payers and scaling will lead to chasing trades, which may mess up. Actually, yes. It's focusing on the nice thing, on the feel good thing, because everyone, it's inspirational, right? If it can help you, motivate you by thinking, all right, so if I do this, I work hard, I will reach this level, and I can, I will get this kind of level of success. And there's nothing wrong with that in itself. I think it's great. If it helps you, motivate you, please do it. Continue doing it. But as you're working on your trading, I think it's best to focus on the process and not those things. Because if you focus on the process you control. The outcome of your strategies, because of the randomness in the delivery of the results is not in your control. It depends on the market. Sometimes the market favors your strategy, sometimes it doesn't. So it's less under your control. Your process, the things you do, how much you work at it, how your execution, how much you put your effort in your execution, that is way more within your control, and it actually assures that you have success. If you measure success by how about the process, how you follow the process, then you control your destiny in a sense. You control your success, and that's very, very important to keep you becoming better and keeping yourself on the right path, so to speak. All right.
Yes. All right.
I
Market is
am-
open. So
Market is open. Let's take a look.
today is very tricky market condition. Maybe NAS 100 is decent, but the US 30 is very ugly market structure. Okay, NAS is trying to go to the upside. I think maybe we can take the high out. Okay. Okay, we are on my screen now. This is the market open candle here. Let's take a look at 4 hour once again. Okay, let's take a look at 2 hour, 4 hour. I don't know why I am. Okay, now I am able to open it. Yes, I think we're gonna take this high out as we are picking up the momentum. But does that mean I will just jump in the trade? Not really. And we are also, the VWAP is flat. We don't know if it is gonna break to the upside and continue the momentum or again come back to the downside. So I have to wait. Let's take a look at US 30, what it's trying to do. 15 minute. Yeah, nothing promising here. Okay. Going to the 1 minute. Yeah, today is very tricky market condition. According to my strategy, the way I trade, maybe for some people, this is your setup. You can take it. You don't have to listen to me. Just follow your plan. But for me, I don't feel that I should trade today. Let's take a look at gold. Gold is still okay, better than at least these two. Let's take a look at gold also. 2 hour. Okay, we swept these lows. Daily candle. Okay, we swept this low. That is a good thing. We are also on the support area. Now we need to see what we can do today. 15 minutes, some kind of consolidation pattern, which is good actually. I think this can be a buying setup here, but for that, I need one more push to the downside. Maybe take out this low, and that can be a good setup. If I take a trade here, stop loss can be below this low, and target can be, I think you can target, this can be the max target, but this should be the first target, the 1-to-1 area. If I draw the Fibonacci, yeah, near 70%, I would like to plan my trade out. Yeah, makes sense. Gold is okay, but US 30 and NAS is literally not showing any good momentum. Okay, we are going to the downside on US 30. This area that I mentioned, I do want to see how price reacts around this area. Let me open my black arrow. If I see any interesting thing, I'll probably take a very small position here. Let's see. Okay, 4 hour. This is also the 4 hour demand area.
Future
Yep.
does not have. Someone asked in the chat. Future doesn't have a activation fee. Our program does not have any activation fee. Both of them.
I'll probably make a
let's-
video on our program because it's really, it has improved a lot. I think as a trader, the rules that you are having now, it is very traders friendly. So I think you should give it a chance if you want to try futures. The
You mean
5ers
the
futures.
40%?
Yeah. 40% is manageable, and it's a trade wise, so it also keeps you in discipline. You cannot pass the challenge in one trade. So if you're a good trader, I think this should not be an issue. I know many people, when it comes to futures, they just full port the account, and that is not really the right approach. So the rules that we are having, I think it's awesome. It's gonna make you a good trader only. I'm just focusing here. Should I? This is the daily support area that I was referring to.
There is something on the chart. There is on the 15. Let me go back. I'm going to switch to mine if that's okay with you, Samir.
Yes, that's fine.
The market is it did react on the H4 that we talked about. I wasn't ready to take a short from that level because of the reason that I mentioned. The H1 and the H2 are not mitigated. Someone asked in the chat as well. If let's see who it was. It was Gerard. Gerard asked, do you base your mitigation of an area on whether price touches it, or can it mitigate it when be mitigated when price reacts close to the area? I have a rule. I only consider it when it has to touch it. It has to interact with the area, and I'm very strict with it. So even if it comes very close, I will consider it not ready yet. So I don't care if how close it comes. It has to touch it. So it needs to be. It needs to get, right? In this case, it did, right, on the H4 and also on this area. The order block is this, right? So it did touch it. It didn't get to the area, the overlapping area, the area of interest, whereas the overlapping between the H4 and the H2, which is one of the rules that I use. So it didn't reach the area, but it did get to the order block on the H1 as well as on the H2. You see how it got back? So to me, it's already mitigated, and I leave it alone. I don't trade it, and it's it comes with that choice that means that I'm gonna miss some trades like this one perhaps, but that's okay. I don't mind that. So what we can do is something I was just mentioning. We have about 22 minutes before the close of the H4, right? We mentioned that, right? That's the high of the previous candle. That's the high of the low of the previous candle. So if we close, that's the expansion of a volume when we have the open. So looking at where it closes can give you a lot of the time a great indication. It shouldn't be the only indication, but that can give you a good indication, who has the upper hand today, right? Who's likely to win the battle today? And if you can answer that, you have half of your trading puzzle figured out, right? So the second thing is, okay, so if you, let's say, close above here, you can safely assume, right, buyers are winning. Buyers are more likely to win the battle today. It's going to end up going higher. And the same goes for if it closes in 22 minutes below that level, I mean this level. Let me indicate it with an arrow. I mean that level right there. So not the order block below, but that level. Whichever it breaks out of and close above or below in 21 minutes will give you that indication. And if you can pair that up with other things, let's say you have the direction already. Now the second thing would be, where do you enter? Okay, so if you go back and say, all right, so if it closes up, I'm gonna be looking for buys. And if you go to the lower time frames, there is that big order block on the 1 hour there. There is a much smaller on the 30-minute. And in between, there isn't really a lot because the market has gone very, like a rocket to the upside. There isn't really a lot here you can play along with. There's a little outside bar here, and that's it. So you could look for, on a 15-second. I know it sounds very quick, but in the absence of anything else, you can take a look on it. I don't have it on TradingView, but on your platforms you can take a look on that, or see if you can spot areas. Let's see. We have it's not it is actually a quasi. Of course it is. So that would be an area you can put an alert there. and expand it a little bit. Price gets there, I want to be interested. I want to be alerted. If it does this, and perhaps do something like that, that could be a way a reason to get in, putting your stop below it, and then targeting not only the direction but also the fact that that would mean you have an H4, and that H4 can expand easily in the next couple of hours. So if you can get in on those little turnaround, that can be a huge thing. All right, so that's one thing I wanted to share. Let's see, someone in the chat. We've been very active in the chat. Thank you for that. Let's see, we have someone else who has, let's take a look. Yes, actually, the prices of the 5ers is, take a look at the prices. You'll notice it's a great deal, and that's not a sales pitch, but actually take a look. You will see it's actually very good.
Yeah, future side, it is amazing. I don't know if you're referring to both
Yes.
or just one
Yeah,
particular.
I was talking about futures actually, because that's the topic we're talking about. It's all of them are, I think, very, very competitive, but the futures is a very good deal. I think anyone just take a look and you'll see what I mean. So I think there was someone else in the chat saying some Hindi Urdu stream. That could be
Okay,
a
I
good
didn't find out.
suggestion.
Uh,
I suggest you
Actually,
guys send some emails to help, go on Discord on the suggestion channel, and put your suggestions if you want to see more of any particular local language, and there's a lot of interest here at the 5ers. We are committed to help you to cater to our community, to our traders, the best way we can. So if there's a lot of interest, go there, send it. We will certainly put some efforts to see how we can make that happen. And it might be already in the pipeline. Who knows? You were going to say something,
yes,
Samir?
I just wanted to say, actually, I was planning for it, but then, as Victor mentioned, if we see interest in this particular thing, then definitely we are open for it. And in our Discord, there is Hindi channel, and we have Telegram also. So if we have interest, a lot of people are showing interest, then why not? Let's just do this. And US 30, that daily area, we are rejecting from there. I think we can move higher now. We can continue this trend that we are on. Okay, yeah, we can continue this trend we are on. I think today 200 EMA was the day we have to rely on. Some days we have to rely on VWAP. So yeah, let me delete everything actually. But even if you rely on the level and just market structure, so this was the market structure. Okay, so we just retested this area and trying to push back up, and this is the wick area. I have mentioned it a couple of times. If price never touch this type of area in future, it does that. For an example, let me give you an example. Okay, this was a wick area, right? So these type of areas I do like to take trades from, or I can use this as a target. Actually, I am in the longs in on my futures platform. Let me share that with you guys. I'll just share that. Give me 1 second. Okay, now it should be fine. I took a trade there, and yeah, this is the trade. Amazing reaction. Look at that. We are above the VWAP now. I think today is the day it should show that impulsive leg, because it has been so many days. It is just consolidating in this range from here to here. So of course it doesn't need to do it today, but based on the trend, as I mentioned, we are trending to the upside. The probability of continuing this trend is more. So yeah, I have placed the trade in the trend. Stop loss is very wide below the 200 EMA. So yeah, let's see now. It is just the waiting game. I'm just gonna
All
wait
right, we
patiently now.
are on EU. There was someone. Let's take a look at. For those who are wondering, we have or not wondering, for those who are not part of our Discord community yet, take a look. There is on Hub. Once you buy an account with the 5ers, you get a Hub, a dashboard where you can see the accounts and, manage it and see your statistics. And on there, you will find a little icon for Discord. If you get that, that's your portal to a wonderful community of traders like myself, like Samir, and many others who we chat there, we share our ideas, and so join us. Take a look at it and see if it's something that could help you in your journey by having contact with our community and other people just like yourself. But today, I was gonna say today on every weekday we have some workshop about trading where we explain things or share ideas or talk about other trading related topics. And today I'm gonna be having and about an hour from now, I'm gonna host a session called Coffee with Traders, and all of you guys are well invited to take part of that. And as a little, sign of gratitude for your presence, we will be raffling 10 Hub credits at least once, sometimes even more than that. It pays to be part of our Discord community. And
That's
it's a
awesome.
great place. I mean, I've learned a lot from through the years, learned a lot from other traders. I mean, it doesn't matter where you are in your journey. People have we shared ideas on risk management, on EA trading, on automations, on tools. It's great. I really love it. All right. Let's see. We have news coming out in the news. It's Joel's job opening in about. It's a orange folder in about 13 minutes. So and also consumer confidence. Both of them are orange folder according to Forex Factory. So we are not expecting huge moves unless it's highly unexpected. The highly surprising the number. But we can still expect some kind of release movement, right? Relief movement, I mean. So market is waiting and watchful to see what, how these numbers will come out, and if, it could give the direction of the rest of the day sometimes, or at least a couple of hours. That's on EU as well as on NQ. Let me see. Let me take a look. So we have the first 15 minute has gone by. I'm gonna switch to mine in the meantime. So we have the first 15 minute, right? This is the opening candle. So let's update this candle. So that's the opening range. And we have about 11 minutes to find out how the 4 hour. All right, so this is looking great. You have a retested fresh, in the 4 hour it was retested, right? In the H1, H2, it wasn't fresh anymore, but on the 4 hour it is. And you have the close of, if it closes above this line right here, you will have the close and the formation of a new order block, right? So you'll have this as the level, and you can consider all this level as a huge demand zone, and that's your ground to look for a long. I mean, if it closes above, I'm going to be looking for a long, right? So you have one area, a second area in about 11 minutes. That's useful information. If it closes above this line, I can actually give you the exact number. You can see it here on the chart, 30,173 and a quarter. If it closes above that, then the H4 is telling you want to be going long. So if you go to lower time frames, you have a little bit of a refinement there. It's not a lot, but it's enough for me to look for. Right, so you have an H2. So that becomes the area of interest now. in 11 minutes, right? It has to, it's conditioned on the fact that it has to close above, right? So I'm doing some preemptively doing some work here, right? So this is the area you want to be trading. And if you go to the 15, we already have one area there, and we can wait for the market to come between. Let me make it clear, because maybe this is, let me change this level. Let me make it shorter, right? So you don't mix them up. So this is the area you want to be trading long from. It's a huge area, I know, but that's the open, right? That's the range where you want to be looking for a long. So either price comes back deeply and you get a long from this level, that's on the 5 minute, that's on the 1 minute, or it comes back and it creates something like this, either from here, right, or a little bit lower, and then you'll have to decide where you put your stop loss. But I would put it below that, below the head, and then targeting the expansion of that move if it's going to have, if you go with the flow, you go with the momentum, and it's clearly to the upside still. So you want to, that's basically the plan for me as well today, but I need it to close in 4 minutes before I can do anything. Let's check here.
NQ is picking up the momentum to the upside. Yeah, I think we can pick up the trend that we are already having. Overall, we are still bullish. We kind of liquidated this low. I think this high can be tested. I don't know when, but I do think this high will be tested. I think this can be the starting of an impulsive leg, because this was impulse correction, as we are having impulsive leg. I think we can go bullish aggressively. That would be good. Some kind of pause and again breakout, that is also good. And that way I think you can place yourself in a trade here. This is a really good momentum, but I am in MYM, which is US30 or Dow. I just picked up the buy from that daily support area. That's why I have this rectangle tool. I haven't marked it based on this 60-minute or this 1 hour. This is a daily area. And there was also the trend line. Where is the trend line? Okay. So some kind of trend line. So I was like, maybe we can bounce from here. So we are seeing some kind of rejection. If we can impulse to the upside, that will be good. I think this can be the target for the day. But my target is, somewhere around here. I risked my yesterday's profit. I think I was up like $600-ish. Not 600. I have to check my performance. I don't know from where I can see it. Yeah, I'll check it later on. I am not too familiar with this platform. I only know how to place buy, sell, stop loss, and everything. Do some analysis. I'm still figuring things out. So yeah, I'm a CFD guy, guys. So now, yeah, I'm just exploring futures side also. Made many mistake, learn from it. Now trying to do better in futures also. CFD side is going on, it's good. So let's see. 30-minute. Okay, we have a huge wick. That is a good thing. I want next 30-minute to maybe wick down a bit, continue with this momentum. And we have just 7 minutes left for the candle to close. Hopefully it closed some kind of here or here, it's fine. If it closed way too below, then I think I have to make a plan for that. What I have to do in that situation. Maybe drag my stop loss, close the trade. We'll see. Let's see. MNQO, right.
All right, and that's YM, right?
Yeah, that was YM.
Okay. NQ is very strong, not looking back at all. We had our break and retest.
Yeah.
Thank you for switching. We had a, that level. You can clearly see it. This is the level on the 4-hour. This is the low and the high of that 4-hour, but you can see on the lower time frame as well, right, how the market breaks. If you go to the 1 minute, it breaks the level, right, and comes back to retest it on the dot, right there. See that? And that's the very common. Basically, this is what the market did. Right, so it created the range. Well, it's a little bit. You get the point. And it created the range, actually squeezed on the bottom side, and it went like this. So that level is going to be, of course, it's already important because of the 4-hour. So let me do it in the 5-minute. And you can see how the market came back. On the 5-minute, it doesn't really look that impressive because, there's no space in between. So it's you can't see how it breaks in retest night. It looks like a clean break. But on the 1 minute, you can clearly see how the market, went through it right there, went through it and came back to retest. That's the retest, another retest, and squeezing it before it goes the upside, right? That's beautiful price action, understanding that the market is switching over. From my point of view, what I want to see is I want to see the 4-hour to close. And, I know now it looks like too late, but that's the way I trade. I wait for the market to come back to the level it left behind, to that breakout level, and maybe even squeeze it a little bit before I get in, and then for that continuation for the rest of the day, something like that. Does it happen? It does it not all the time. Like yesterday, it didn't. That's why I said it was difficult to trade for me to get in, because I need these trace backs or retraces before I can get in. But that's basically what I would be looking for. It looks like it is. It's going to the moon with no trace back in any retraces in the process. Yesterday was the same thing, right? Just one big candle that continued to go on and on and on. I caught a little long here. I think it was around here, going long, and
I remember.
or maybe
Yesterday
caught
was
a
a
long
very
here.
tricky day.
Yeah, but I normally I have multiple positions on. As it comes in, I will catch at least 2 or 3. And yesterday I could
Okay.
only catch the breakout, and it's fine. But those are difficult for me because I need, or I'm not difficult in the sense that I don't get a trade, and that's fine. But I want price to come back, and then or deeper, and then start going the opposite direction, and I can get my move in. And it happens more often than you think. So that's on still 2 minutes to the close of this hour, and that also actually indicates the hour, the close of our stream. If you've been watching this, you likely enjoyed it, and that's why you kept looking, watching. So consider, granting us a like, a subscribe if you are not a subscriber yet. Let's take a look. We have news. We said we mentioned it is the consumer confidence, and you have Jolt's job opening. Not a huge firework expected, but the market can still start pushing in one direction after that news comes out, even if it's not as impactful as, let's say, NFP or some other high ranking news, high impact news. All right, so on EU, we haven't discussed that, so we still have about 1 minute. Why not? Let's take a look at, or maybe you want to show your trade, Samir. How's your trade
Oh,
going?
yeah, definitely. Remy can put on my
We
screen.
have we
We have
only have
just
about
2
a
minutes
minute,
left.
but
Yeah.
go ahead.
Okay, I was on the point, if we close like this and we are already, the price is trading above the VWAP, so that is the added confluence for me. I can hold the trade. If price would have closed below the VWAP, then I would have maybe taken a break even or a small loss. But as price is closing above the VWAP, so I can hold the trade confidently. and seems like this daily level that I was having, price is rejecting from it. Kept my stop loss very wide below the 200 EMA. It would have given me a chance to manage the position. Yesterday also, I think my loss was around $500 to $600, but I managed to lose around $300 to $400 because I have noticed if there is huge momentum and it is not going in my favor, then it is most likely that I'm gonna hit a stop loss. So that is a lesson that I've learned. I'm optimizing every day, not every day, but every week. So seeing the things that I'm doing wrong, seeing the things that I'm doing right, try to maybe do a little bit more rights. And if I'm doing something wrong, then I try to not fully eliminate the thing, but try to optimize what I can do. So yeah, that I have noticed, if price is going very impulsively in my stop loss, it's highly likely that I'm gonna hit a stop loss. So I can close the trade early or so, seeing the 1 minute time frame what price is trying to do. So yesterday I closed the trade early. So right now we are going good. I need this breakout, which is here. Once price breaks out of this, I think we can easily tap this area. So let's see. A waiting game now. Doesn't mean that I'm gonna close a trade, shift it to break even, because right now I'm seeing no signs of any interference. I mean, price is not showing me anything that I need to make some changes in my position. So let's see. And we are also at the end of the stream. Yeah, that's
Yes.
it. This was the trade for me.
Thank you.
One trade only.
Thank nice. It's you said winter game. I think I like how you put it so lightly, and it's so important to be patient when you're waiting for the market for your setup basically to pan out. There's yeah, right now it's no longer, you have to let it go, right? Just let it float
Yeah.
and see where it lands, as long as it's within the parameters of your trade management. All right, that's it for us today. There is, in about 45 minutes, I'm going to be having a session on Discord. You're all invited. Do check it out. Come in and let's have some chat. Let's continue that conversation there. Samir, thank you very, very much for joining us. I really appreciate streaming with you as always. And our viewers, thank you for watching. You guys make this our channel the channel it is. So thank you very much for your questions, your your remarks. You guys are the reason we do this. So thank you very much. I really appreciate that. Samir.
Yes. Guys, thank you from my side also. And again, I'm grateful to be here sharing my experience. So even if you can take one point from me, from Victor, from any other host, so that will be success for us. This stream will be successful. So with that being said, guys, we will see you tomorrow. And once again, guys, thank you so much. I'm seeing some new names here. Make sure you are subscribing to our channel so that you don't miss any updates. And this is the 10th year anniversary, and every month we are trying to do something new for you guys. So make sure you are subscribed so that you don't miss any future update which can be beneficial for you. With that being said, I will not take too much of your time. So I will see you tomorrow, guys. Bye bye.
All right, that's it for us. Take care and see you tomorrow. Bye bye.